check. 1, 2. Mic check, check. What's going on out there? What up?
Spot 4.
Do you want to stay up to date with the latest news from non-farm payrolls? Then sign up today and get our special offer of financial news for a year's worth of our service for the price of one month at 92%.
Good morning out there. Just give me a few moments. Having just a little bit of a moment here this morning. Just need a few moments. This move right here is a little stupid. We are above the daily trigger, just so you know at this point. I've got two targets to the upside, the big yellow bar right here, and all-time highs up in here. We'll do a little talking here this morning. The one thing I want you to know is that I want you to look down below here and watch this back test of the daily trigger on SPX Gamma, and just note where the Gamma flip is. We're still in negative Gamma right now. We need to get above the Gamma flip, which is at 55.25. So bulls are not out of the woods yet, are they? Even though you want to think that you're out of the woods at this point, we still are not. So stay salty, stay slick here. Bulls not done yet. More work to do. Give me just one moment. I'll be on the show in just a minute here. I'm gonna grab some coffee, some water. I'm a little. It's like last Friday. I'm a little shell shocked right now. Last Friday I had the same thing. It was just like a little too much for me to comprehend here.
In 5 minutes' time now, at 9:45 a.m. Eastern Time, we do see the release of the US Chicago PMI. Forecast 45 on the prior 47 spot 4. One minute remaining. Ten seconds. 45 spot 3, 45 spot 3, higher than forecast 45.
And in around 1 minute's time, we're looking out for Chicago PMI for the month of July, expected at 45 from the previous 47 spot 4. Ten seconds.
So in 10 minutes time now at the top of the hour, we see the release of the US pending home sales change month over month for the month of June. Forecast 1.4% on the prior minus 2.1%.
45.3,
US
45
pending
spot
homes
3
index
above the
saw a prior read
expected
of
45 and
70.8.
falls from the prior 47.4. And just seeing here the latest data from IATA, passenger demand up 9.1% in June. And going back now to IATA, it does note total capacity measured in available seat kilometres was up 8.5% year over year. And continuing here from IATA, it does note June load factor was 85%, plus 0.5 percentage points year over year.
So 5-year yield to 3.991%. That's the lowest since February 2nd. So in 5 minutes time now at the top of the hour. See the release of the US pending home sales change month over month. Forecast 1.4% on the prior -2.1%. We also get the US pending homes index, which saw a prior read of 70.8.
And a quick spot check across markets in wake of the cash equity open, where US indices did open firmer across the board, but the Russell 2000 has since paired gains and is now flat. The S&P 500 up 1.2%, but still distinct outperformance in the tech-heavy Nasdaq 100, which is up some 2%. Amid a slew of tailwinds for tech, such as AMD up 10%, in wake of a solid report and raising full-year chip sales guidance. US exemptions for ASML and Tokyo Electron in its new sanctions on exports of Chinese chip makers. And finally, NVDA surging 9.5% after it was added to Morgan Stanley's top pick list. As a result, this has seen the SOX semiconductor ETF surging over 4.5%. Elsewhere, there has been a deluge of earnings, a couple of data prints, and the US quarterly refunding announcement, whereby the auction size were left unchanged as expected, but liquidity buyback total did increase to 30 billion from the prior 15 billion. On the data footing, ADP fell and was beneath expectations ahead of NFP on Friday, although do note the link is tenuous, and Q2 employment cost index saw the figure fall more than expected. In addition, and in more recent trade, Chicago PMI was better than feared. Elsewhere, the dollar is lower and residing just off session lows, with the yen the notable outperformer in wake of the BOJ overnight. Metals, they are seeing broad-based gains, with spot silver outperforming spot gold, with copper and palladium up 3 and 4.5% respectively. And just breaking away from this, of note for names such as Lyft and Uber, NYC tax regulator does agree not to impose new rules.
Well, well, well. What the fuck is going on this morning? What's going on this morning there, YouTube and Twitch? What's up? Late night. I didn't even shave this morning. I was up, of course. I think if any of you had real money on the market yesterday, you were awake at midnight,
Month over month.
Wall Street time last night. I would assume you were. I haven't busted out an alcoholic drink. I should. It's sucks because it's FOMC day, right? I feel like today is the half. I feel like this week is a double week. I don't know. Maybe, I think it started on Thursday of last week, maybe Wednesday. This past 2 weeks has sucked, hasn't it? I can't say it hasn't sucked. I don't think any of you can say out there that it hasn't been fucking brutal. I watched Winky come and go. I've seen David come and go. I've seen people are just like, it's hard work. What we're doing here and what you're doing what you're doing out there as a
4.8%,
market participant is not
4.8%,
easy either,
higher
right?
than
It's
forecast, 1.5%.
past probably, I want to say,
3, 74,
starting last week to today,
noting a
in no fucking way has it been easy. Hasn't been easy on me. I know that. I know that I've worked to not blow myself up the past 2 weeks. It's one of the hardest weeks matter of fact, this year. I've had a couple harder weeks, I know that I've had a couple hard weeks this year. This week in particular, this week and I think the few days last week have been some of the hardest trading of the year. And I think if I look at my trades with my accountant, it'll show the same thing. And not only that, but I was thinking yesterday about. I posted it last night on Twitter,
Protect your
and
trades.
I don't know if I phrased it right.
Now only $99 a year for a real-time service.
I've had moments of trading, right, where I've overtraded, and I've gotten annihilated. And I just got the phone with Joe a minute ago. I was talking to Joe for the last half an hour, and he was saying, if you overtrade in distribution, you can get fucking annihilated. And that's true. And last night I posted that this is the right time to overtrade. If you take, and I don't know how to word it exactly yet appropriately, but I'm just going to put my finger over there or something. You take a trade, right? Or you have your own system, not our system. You should all have your own system. Your own system of trading is not my system, right? And we do this every day. We try to teach you basic tools. The idea is that you add this to what you're doing as an investor, as a seller, as a buyer seller, whatever it is that you do. It's still your system, right? Every one of you out there you should have your own system. And it's what works for you. And if it's working for you,
high now of 149,
it starts to not work for you. If it's working for you, if your system's working for you and it begins to not work for you, there are
yen strengthening as Japan raised their interest rates last night. Worth noting, the reaction was tempered by
there are market changes where you might have to adjust your system. But generally speaking, day in, day out, if your system works for you and it begins to not work for you, which for me this past week, it would have been easy, I guess. I don't know how to explain this, but you take a trade and you lose. Or in my experience, take a trade, boom, heavy loss. Oh shit, I don't want to overtrade, right? So you don't take the next trade with the setup that you would normally take. That's a winner. And you miss it and you go, oh, fuck, I missed it. So then you jump into the next one and you're a loser, right? So loser, miss it, loser, and then now you're really scared, and then you take it again, you lose. So, but if you were to overtrade, or what you would think in your brain was overtrading, my account the past week has been red, big, red, flat, red, flat, red, flat, red, flat. But that's only because I'm taking trades that I don't want to take. I don't want to take every fucking trade, but I have to. Every setup I have to take. So it's like, but the brain is telling you, don't take it. You just went huge red on that fucking setup. You shouldn't take the next one. But you have to take it. I don't know how to explain this. But you're taking it, and you're going L, W, L, W, L, W. It's not nice. I'm not going to sit here and try to tell you that feels good or it's fun or your brain is like something's wrong and you're doing something wrong. So anyways, I don't know if you've been through that this week. You knew in the market briefs that you probably shouldn't be trading this. If you go back and read the past 2 weeks of market briefs, you knew where the top was. I've told you time and again, we have to be here for you to trade safely. But if you chose to trade the last 2 weeks and you're not a seller, it's been fucking brutal. I can't say that it's been fun at all. And I'm sure that there are some of you this morning that have probably lost a few trades in the past week or two and are down and chose to not continue to take the trades to make you flat or green. And you're frustrated even this morning. I'm sure some of you out there are going through that this morning, which sucks. I've been there. So, and I thought about that last night, or I was thinking about that yesterday, and I didn't know exactly how to, and even now I don't know how exactly to word that to you. I'm sure that some of you know what I'm talking about this morning, and so I just want you to know out there, if you're that person, if you're the person that chose to sit out the past week and a half, or session-wise at least last week, that's 5 or 7 sessions, good on you. Wealth preservation. If you were one of those people that were able to sell all this and make all that money, you're probably getting torched this morning, right? If you're the person that has taken trades and has been up and down all week, I'm talking to you. Stick with it. There is over trading. I'm not going to say there isn't, but this week is not that week. This is the week that over trading, if you are down, should bring you flat or green at this point. It's hard to see when those times are. It's very rare that it happens. And we probably have to talk about some stuff today. I was looking yesterday in the stream at PPOs, PMOs, and then I was looking at the MBI. I was looking at a bunch of stuff yesterday and even into late last night, and stuff's not matching up. Matter of fact, yesterday we were burning, and we were in positive. We were in an upstroke of hourly velocity. I don't know if any of you guys check tools in your trading, but they're all wonky right now. There's a rotation going on under the surface of the market, a breadth rotation from concentration into wider breadth. And so it's fucking with every indicator, not mine, everything. Every indicator out there is, if you look at a weekly basis, it tells a better truth. So if you at home are like, everything is wonky to me, switch to a weekly time frame, and it makes more sense. It's the only way to look at it. Anyways, good morning. We have FOMC today, don't we? And this week has been fucking huge for data, hasn't it? And we have end of month. We've got data. We've got Bank of Japan, right? We got a Bank of England earlier in the week. We got crazy shit, right? This week. So, anyways, good morning. It's good to see you all this morning. I'm gonna try to have some people on today. It's FOMC day. We're gonna get Jerome out there, and I'll see if I can get Binky on, or David AMS, or Joe, maybe even Winky. I don't know if we can get Winky on. I'd like to get the crew on, if it's possible today. Instead of outside people, I'd really like to have people closest to us. And if you have a chance, if you have a chance out there, truly, if you have a chance, if you can say hi, if you're a community member, if you're a supporter, if you're a part of our community, do a solid and say hi to like Blind Nest Owl, John L., Winky, David AMS, Binky, Bork, Joe Donut, like any of those people. And if it's not one of those guys, like, like the You got like Addy and people like that, Spicy McNugget, Poke Juice Box. I could let the list goes on and on. Say hello to each other. The Condor, all you guys are in the Discord. Say hi to each other this morning. Our community is amazing, and our Discord's amazing. And I love every last one of you. So if you're active in our community, I'd say hi to each other this morning. Say, hey, just want you to know I appreciate you or something. I don't know how to word that either, but I want you to know that I appreciate all of you. And where's my boy out there in Japan? We didn't get one. We got I think we got down to 149 and change, but we didn't hit 149. I'll leave that open for the next month. But we did get down to 149, just not the 149.0. So we have to figure something out with that $100. Maybe let me know at some point this morning if you're out there, my Ranger boy, tip of the spear out there in Japan. If you're out there watching right now, let me know where you want $100 donated, and we'll do it on the show, and I'll donate the $100 for you. You pick it, and I'll send it. And otherwise, let's do some FOMC stuff. Maybe we can get some people on the show this morning. People that we trust, people close to us. And we'll continue on this morning. All right, let's see what you're all saying out there. Yeah, yesterday wasn't easy, was it? You know what? Sorry, I'm losing my voice. I was talking to Binky yesterday, and we were chatting late into the night last night because, of course, we had the B of J, right? And I said to him last night, I said, that was the low. And he goes, how do you know? And I said it reminded me of today's close reminded me of this one time. I don't know if you remember this out there. He remembered it. I don't know if you remember this out there. If you trade Amazon, there was an Amazon earnings call. I don't remember when it was. I want to say it was a couple of years ago, maybe more, maybe farther back in time. But if any of you are Amazon bulls or bears out there, there was an Amazon earnings call where they slammed Amazon down. And it was like an auto buy. Well, I don't remember what it was trading. Let's say it was trading $100. They like slammed it to like 50. On a good call. Like just murder bot. And it was like an auto buy. Like you just buy it no matter what. You're just like, fuck you, we're buying that. And I remember in the stream, it bounced and started running. And then they came back and slammed it down one more time just below the buy. And it never came back. Off and running. And I don't know if you remember that day out there, but yesterday they did the same fucking thing. They ran the scam on Mag 7 Big Tech. And then, of course, we had Microsoft earnings yesterday. And like Microsoft and Google and shit like that, Amazon, you want to run a fucking scam on it, you're like one and done. You're one and done because you're then setting the tone of the market. So they did that yesterday with Microsoft, but they went through and did every fucking Mag 7 stock yesterday too. We were showing it on the stream yesterday. We were cycling through all of the Mag 7s, and they were hammering. Because the onus at that point is, if Microsoft isn't safe, nothing is safe. I mean, fuck Tesla. You're not going to put Microsoft and Google and Amazon in the same conversation as a Tesla, right? Or even AMD. These are the kings and queens of the stock market, whether you like it or not. Everything you fucking do in your life revolves around Google, Microsoft. Whether you like that or not, that's what it is. And so when they ran that shit down yesterday, they hit everything else that they could, and they came back yesterday. So they hit NVDA for 103, and then they swooped back in and bam, slammed it right down to $100. $100.03, I think. 3 cents above you getting a fill at, or maybe it was $100.01, I think. So they don't fill you at 100, right? Because of one goddamn motherfucking penny. And they take your stops if you had them. If you bought the prior low earlier in the day yesterday. But then they were off and running. They dropped everything down yesterday. And we were trying to buy this shit earlier in the day. And we didn't get the fucking low in the after hours yesterday on SPOOs. And that was the end. In my view, that was the end. It reminded me of another trading day we had, another earnings day that we had yesterday. So I called Binky and I'm like, dude, we've seen this before. They've run this before. They've run this program. I was like, that was the low. That after hours was the low yesterday. Well, I don't know if you know that, but I'm telling you it was. And they've run that program. I've seen that program run before. It's not a new. It's a classic. It's an old 45 from back in the day, if you know what 45s are. We're now trading what? 550, baby. 550.48 is the target, by the way, if you don't know. That's time and market, right? That's all that is, time and market. You can't learn that shit. They're not going to teach you on YouTube or in a fucking book. We have the half an hour trigger and the hourly trigger running up here to the daily trigger. Expect a pullback when that happens for a retest as it happens. We want to get the new high, and then we want to back check the cross, right? If you're a bull, when I tell you to wait for price to get over the daily trigger, back test across the hourly trigger of the daily trigger. And I say to you, you will feel more comfortable as a bull. You feel like that right now, don't you? So we'll wait and see if this happens. Oh God, yes, do it right now. Here we go. Trading 550.26. The conversation yesterday was we were going to have a market crash, right? That was the conversation yesterday. So we're having, right? Tech would not lead the way, right? It's over, right? That was yesterday, right? That was a conversation in our chats. Trading 550.45 right now. Teeing off R2 at 551.50. Uh, we said we'd talk about GME this morning. I was asked in the Discord to discuss GME. So we're gonna take an interlude here on FOMC day. We're gonna talk about what? We're gonna talk about GME. In the face of everything, we're gonna talk about GME at this moment. So we're gonna switch over here briefly. We're gonna chat GME. I might be on the wrong. There we go. I am on the right. Hold on here. Is this the right chart? Please tell me it is. Here's the right. This is the right chart. I was asked for an update of GME in the Discord yesterday. So we're going to quickly go there and just cover it for a community member. GME. They said they missed the coverage of GME yesterday. I'm going to go over it real quick. If somebody could make a marker maybe. You have a cross coming up of the weekly trigger across the monthly trigger. Price will be attracted to it, which it is right now. The weekly trigger, at least on a 30-minute basis, I want to show you a couple things here. Daily velocity is rising. This is good. Okay. We are seeing a bottom in that daily velocity. On a weekly basis, this is where we want to have a chat here. Now your monthly looks gorgeous. Your quarterly looks good, goodish. But this looks great, your monthly. Now your weekly is coming down right now, which is some cause for concern. It says that the weekly will not hold, okay? The weekly trigger will not hold on GME, but let me go with 30-minute trigger here. You have strength though inside of your monthly trigger here, right here, okay? So this is weak and this is strong. And that's a problem. The weekly's coming up, which is great. But the idea here would be, where did the trade begin? Began in here, and then this is the next pump right here. So here and here, there should be some kind of a buy zone down in here, okay? There should be. And that buy zone right now, we got $21 and $20 here. And then $18 down below. We all know that GME loves to overbuy or outperform and underperform, right? So my only thought here would be, you had the original pump down here, right? We had the bottom low at $10, $9.95, right? Thrust higher, another thrust higher, another thrust higher right here. And so my thesis here is that we started right around $10, right? That's where we started. Your next start was down here at $15 and then $18, but they came back in and bought again. So these two spaces here are spaces of here. They're still here. Now this monthly trigger right here is probably where the buyers are. They're probably up here in the monthly. This is where you would assume they would be, because they start here, go here, go here. They move their way up, like they march forward, right? So the idea would be that they're on the monthly trigger down below, which is at $21. So you want to be paying attention. On the monthly trigger, you want to be paying attention. So this is what I'm going to show to you here. So if price comes down, right, it should continue to come lower. If it comes down and bounces and gets above the hourly, we can discuss the trade up to the daily trigger up here. Did you start paying attention right around $21? That doesn't mean you take this trade. You're not just buying the monthly blindly and taking it. you want to first see a bounce. You want to see a successful back test, right? Your rules that you have, right? If we start bleeding down here, let's say we bounce above the the hourly trigger, you would be looking for what? A new high, right? You break that new high, then come back down, and you jump in on the trade. You can do that, but not until this happens. Now, this whole $20 thing, I have the ugly scenario down here, right? $18. But right around $21, and truthfully, $21 would be very bullish. If we don't break 20, it'll be very bullish. But right around that $21 mark, you start paying attention. $20, and then this 18, 19. I only say that 18, 19 because GME tends to outperform or underperform in a big way, and not trade to traditional rules, right? But we are coming into that zone we are right now, GME coming into that zone of start paying attention. Currently, it's trading 22.63. As it comes down to $21, start paying attention to it. We're not there yet. I realize that GME gang and the apes out there are getting hot and bothered about this as we get closer and closer, but we're not quite there yet. As we get closer, ring my bell. Get on the stream, be like, hey, Cap, we're down in your targets down here, and we want to start paying attention. So $21, $20, and just under it, just under $20, and we'll start paying close attention. Do I think we're going to 15 or 10? I don't think that we are. So we'll find out, but I don't think that we are. The buyers are there, and we have a lot going on right now. If you look like just right here, there is a lot happening, right? With the daily trigger, the weekly, the monthly, and you're going to expect volatility as this happens. I wanted to show you one other thing here in a higher frame. Just see how busy everything is in here with the triggers, and how they've come down, right, into this consolidation zone right here. You can see how it happens, right? And the same thing happened over here. The same thing happened over here. It becomes very volatile. So just have patience as this volatility takes place in here. And you're going to get your answer sooner than later. Would be the only thing that I'd say. And all of this stuff is turning up. You see how this monthly is turning up? This quarterly is turning up. The 6 month is turning up. The daily is coming down to all these larger momentum forces. And I would not be fucking around with this quarterly, this 6 month, this monthly. These are forces that are hard to fight with a daily or even a weekly. And the weekly's coming up too. So expect more fireworks as we get these crosses would be the only comment I would make to you. From a force perspective or momentum perspective, GME is going up. That's why we got this squeeze back here. That's why we got this monster squeeze back here, because of these momentum forces heading to the upside. And so we'll pay closer attention as we get there. This is more consolidation in my view right now, waiting for an interaction of these momentum forces heading to the upside. And yes, you're going to get a move in my view, you're going to get a move to the upside coming up. All this buying action here, they're still here. They're just waiting for that right price zone down in here to go higher. Make sense? I hope it does. All right. Now back to the show, the regular show here. So I'm gonna do a quick overview. What was that? I'm gonna do a quick overview here of I'm going to do a quick overview here of, I don't know what that sound, I think that sound either comes from Financial Juice or from News Squawk. I'm going to do a quick overview with you about the FOMC, and then I'm going to try to bring on some guests if I can. I'm going to try to bring on, I haven't even talked to these guys, but I'm going to try to bring on Joe, maybe Winky if he's, I don't know if he wants to take a call or not, Binky, David AMS, those. I'm going to try to reach out to these guys and see who I can get on the show for you this morning. Trading now to R2, 551.44. Just note we've got some targets up here, 556.50 and 565. So we'll pay attention to those as we get closer. The stank market. And remember, too, that volatility after today would likely go away. We've end of month. We have the window of weakness, of course, which is not weakness. It's just window for the market to move. And that whole entire SPX vol curve, that shit should go out the goddamn window at this point, as of today. Squeezing higher now to 550.92 with a target above of 551.50. I'm going to snap a line there so you can see it. I can do that if you want. I don't know if you can see all of this on the show, but there you go. There's your target right there. This is called the pain trade, by the way. This is all pain right now. Stank market, baby. What's going on, Binky? All right, so I'm going to read some stuff to you here, and then we'll get back into the doing some interviews before we get to the FOMC. A couple things. Quarterly refunding statement. The U.S. Department of Treasury is offering $125 billion of Treasury securities to refund approximately $111 billion of privately held Treasury notes maturing on August 15th, 2024. This issuance will raise new cash from private investors of approximately $14 billion. The securities are a 3-year note in the amount of $58 billion, maturing August 15th, 2027. 10-year note in the amount of $42 billion, maturing August 15th, 2034, and a 30-year bond in the amount of $25 billion, maturing August 15th, 2054. The 3-year note will be auctioned at 1 p.m. Eastern Standard Time on August 6th, 2024. Write that down in your notes somewhere. Make yourself a little calendar. The 10-year note will be auctioned at 1 p.m. on Wednesday, August 7th, 2024. And the 30-year bond will be auctioned at 1 p.m. on August 8th, 2024. All of these auctions will take place on a yield basis and will settle on Thursday, August 15th, 2024. The balance of Treasury financing requirements over the quarter will be met with regular weekly bill auctions, cash management bills, and monthly note, bond, Treasury, inflation-protected securities, that's TIPS, and 2-year floating rate notes, that's FRN auctions. What else we got for you here today? We are now above the gamma flip, just so you know. I'm going to read this to you. This is from Goldman's Peter Callahan. Thus far, this was yesterday, by the way. Thus far, second quarter earnings have proven to be a tough backdrop for Gen AI secular winners, at least T+1. Think ASML, TSM, Google, Tesla, Hynix, VRT, BE, semis, etc. at all and such. We still think investors want a clear signal that fundamentals do matter. That's bullshit. E.g. signs of re-risking on good news earnings, not just trading against positioning, technicals, and sentiment inputs. And as such, many are increasingly approaching portfolio construction with an eye towards a second half diversification. It's not complete bullshit, but it is bullshit. You're not going to drive the motherfucking market without tech. You will get an outperform from small caps. That's normal. But whenever you hear this, like, oh, we're going to diversify everywhere in tech, but fuck tech, that's not true. That's bullshit. They're just looking for a better fucking price. That's the simplest answer I can give you. E.g., add to higher conviction names when the coast is clear and or the math works, while also embracing the better breadth backdrop the market is pointing to. The idea here is that they brought down a bunch of these companies, right? They left retail. They hammered them down. Now we have better breadth in the market. You can see that if you look at PMO, PPOs, and MBI. If you look at those three things together on a whole, they tell a different story than the market was showing you this past week. And that is that we have better breadth. But that does not mean get the fuck out of NVDA. That's my point here, is that it doesn't mean, yeah, you abandon these fucking things. It just means that you get the better price. Make sense? 2-3 weeks ago in market briefs, we told you that they're exiting these tickers, but it's not done. For the past 2 months, I've said to you, whatever that low is on these tickers, you buy them. This bull run is not over. I'll tell you that again and again and again. And I've been telling you that since fucking November of last year. That they're gonna run this shit up until at least the end of the year. We're trading right now 551.18. We ain't fucking trading 400 goddamn dollars. We ain't trading 500. None of that shit. So find your bottom that you feel comfortable with and buy the fuck out of it. You're being given a discount on kick-ass names. And they can make up any fucking story they want. Like Microsoft yesterday, 2 beats, and now they're fucking listing bullshit about their AI, trying to tell you an AI story that it's done. That's a crock of shit. It's a better price, and that is it. The AI story is not done. Your AI bubble is not done. It is horse shit for a better price for more gains down the road. Be aware of that. That is the truth. Do not drink the fucking Kool-Aid. The fucking Kool-Aid is made for you so that they can get a better price. And you will chase later once you put that fucking Kool-Aid down. You understand? People with power and money make a big old batch of drink for you, and you drink it. You are a fucking pleb. It is your job to not drink the fucking Kool-Aid, not go to Jamestown, or if you go to Jamestown, they try to murder you when you're telling everybody, don't fucking listen to those fucking regards. Your job is hard. It's not easy. You need to see that for what it really is and not consume what they're feeding you out there. Where's NVDA right now? Goddamn right. NVDA, baby, trading $115. Coming into beating the S&P 500 right now in a single ticker issue. On a 20% gain, S&P 500 on average year in, year out. If you bought $100 or $103, Just about to beat the S&P 500 right now. Congratulations. Coming into R2 with a little bit of rejection here. I noticed people are talking about Mobileye this morning. Did you see the banana guy out there talking about Mobileye? Where's fucking Winky? We need to talk about Mobileye. Was it Jonestown? I said Jamestown. Jamestown was the first. Jamestown was the first. Well, the first settlement that everybody disappeared. Jonestown was the massacre, right? I'm mixing up Jonestown and Jamestown. Captain Jim Jamestown, drink the Kool-Aid. Oh, fuck. All right, hold on here. So we talked about tips and we talked about the bond market, right? Another note for you this morning would be that from GS, GS is saying that we estimate we have officially started the open window period as companies start. And I'm saying this now because I didn't do a brief last night. I was going to do one late night after B&J, and I was just like, fuck all that noise. We're going up. We estimate we have officially started the open window period as companies start to report earnings. We will see corporates enter open window periods when they can place discretionary buyback orders and have flexibility to ramp up purchasing if they see fit. As a reminder, we typically estimate companies exit the blackouts in or around 1 to 2 days post earnings release. We estimate this open window will run through, write this down, September 6th. At the moment, we see in and around 50% of corporates in open window, or slightly greater or less than 66% in open window by the end of this week. On the authorization front, 2024 year-to-date authorizations stand at $772.3 billion, which is up 11% versus 2023 year-to-date authorizations. Now, that's your buyback window shit. Hold on one second here. Hold on here. $10:43 in the morning, right? Where is my other shit that I have to go over here? I got other stuff I got to go over. Let's look at why is that not? Why is the JPY not up here? Oh, so close yet so far away. So close yet so far away. Just let me gloat for a minute here. I don't like gloating, but I just want to show that there. Still no 149 down there, right? Let's go a little bit closer and just show it to you. So close. So close. Yet no bananas for you, huh? So close. I'll be waiting, though. Let's take a look at that. Let's take a look at that alert down there. I love Luke Hahn. $100 if alert happens. Before what? 3 months, I think. Still not there, Luke. So close, yet no touchy, huh? No touchy. We'll check back again, Luke. I'm going to make a donation for you. Let me know in the chat if somebody could let me know where Luke wants me to donate that $100, and I'll donate it for him. Or we'll do it here on the stream. I'll give you 3 months, but we'll just make the donation right now. What else we got here for you? I'm reading some stuff here for you right now. I'm trying to see if I got anything here for FOMC. I'm not seeing anything here for FOMC. Hold on 1 second here, guys. So I'm going to bring this up here. I don't know if I can do this here. Can I do this here? Let's find out. Wait a minute. What is that? What? Oh, God, what a pain in the ass. Hold on 1 second here, guys. Start an instant meeting. Allow microphone and camera. What is this? Wow. Sweet. Okay, so I'm here. Allow? Yeah, allow that. Add others to the meeting. Okay. Let's see who we can add to the meeting here. Let's see who we can reach out to really quick and touch. Let's see who we can reach out to and touch here. We'll go to Twitter. We'll do some DMs here and see who we can. Let's see who we can DM. New message. Who are we gonna message? Joe Donut. Dude, why is Joe Donut not coming up like first in my search here? We not friends on Twitter anymore? I'm serious, like. We'll throw him in there. Binky, is he in there? Where the fuck is Binky? And where is David AMS? There, I'd put David AMS in that chat. We found him. Who we say? Winky? I don't know if Winky's like, fuck you, ain't doing none of this. I bet I don't even know if I got, what's Winky's handle? I don't even know. Binky, what's your fucking handle on Twitter? Can you post it in the Discord really quick? Binky Wink. What about John L? Maybe John L will join us. I don't know if John L's got a handle or not. Binky, what's your Twitter handle? I thought it was Binky GTT2. Where the fuck is Binky? Like, what is Binky's handle on Twitter? Is it like Doom? At doom.com or something. Where's Bork? We'll bring Bork on too. New guy. Oh yeah, we're gonna put Bork in there too, even if you can't come on. We got Joe Donut so far, David AMS, Bork. We don't know if they're gonna join us or not. They may or may not want to. Or maybe they can't. I don't know. What's Binky's? David AMS, Joe Donut, Bork. Who else am I missing here? I don't know who else I'm missing. Hold on, give me a second. I'm gonna call Binky and find out what is. My note to all of you guys too. It's just gonna be a voice call, not a. You don't have to have. You don't have to have your video up or anything. Well, Binky's on a call with some bros out in Vegas. I can at least send, or I can send the link. You guys want to bring Jedi Marcus on? You want to do that instead? Hold on. You guys want to do Jedi Marcus? I don't know if he'll join us or not. I can ask him. I don't know if it's out of the realm. I don't know if it's out of the realm of possibility. Let me see. Let me ask him right now. Hold on. We'll try. Let's start with him first. Maybe. Let me ask him. He might say no. He probably wants to plan it, but I sent him a DM real quick, so we'll find out if he says yes or no here in a moment. I would like to plan out a Jedi Marcus appearance. He said yes to an appearance months ago, but I think he probably wants to do it more pre-planned. But I did send him a DM. We'll see if he responds. Yeah, Joey Donut's saying he's going to pop on here in just a minute. I don't even know how to do this anymore. I suck at Twitter. Dude, like, how does this even happen? Who's the other person that I was put Bork in there? Next. All right, so I just sent a Google Meet to David AMS, Joey Donut and Bork. Via DM. So if you want to join us in the stream, you can join us this way. See if they join us in the stream or not. Or we're gonna get left alone here on Fed Day. We still have not hired a social media manager, which we need to do. I need a day off. Oh shit, I'm on Disney. Whoopsie. I'm on the wrong screen. I'm not even paying attention. Everybody's long Disney now. I'm not even paying attention to the fucking screen. I'm down here looking at a bunch of shit that isn't even in the show. Oh boy. Doing good there. Well, done good. Yeah, Oda, I got you, brother. I still have to meet with these. I still have to meet with Joe and Bork. It's not you, it's me. What do we got here? SPY, QQQ. What else? We'll throw GME in there. GME, of course, right? NVDA, IWM, DIA, FOMC, rate decision, live stream with special guests. And lots of swearing and cussing and booze. We're so terrible here. We are the worst. We are the worst fucking people. We are literally like the shitbags of the stock market, aren't we? We are like the worst. We are the worst of the worst. I love it. I love that we are the... I just want to get a shareable link here. Can I get a shareable link? Get shareable link. Thank you. There's a YouTube link. We are the worst. Hold on here. I got to do one more thing here. Copy that. Close that out. With special guests and lots of swearing and cussing and booze. Post that. If you guys don't mind, if you're a community member, if you don't mind liking and reposting this live stream tweet that I just made on Twitter, if you wouldn't mind reposting that for me, I'd appreciate it. Liking it and reposting it so we can get an audience here. Just a note, if you're out there right now, that the chat is open on Twitch and on YouTube. You have to subscribe, but it's free. Just click subscribe, and you can chat with us all day long. So if you want to chat, you're more than welcome to throughout the day today, it being FOMC day. What else? Oh, stay in the call here. Back over here. Hold on here. Let's see what's going on. Who's coming in? Oh, here we go. We got someone showing up just now. You're live, by the way. We can hear your voice. Oh, you sexy ass man. Should I put the video back on? We'll put you on the stream, bro. Put the video back on for a minute, Joey. I want to show your sexy face.
Can you hear me?
I can't hear you. Hold on, Joe. I can't hear you right now. Say something again, Joe.
Oh.
Say check.
Oh, there. I can hear you. Can you hear me?
I can hear you. Can you hear me? Can you hear me? No? Check. My microphone on? Audio settings, cable output, cable.
Jim, bro.
Can you hear me or no?
I still don't hear you.
All right, hold on here.
I think you can hear me.
Can you hear me now?
Oh, now I hear you.
You hear me now?
Yes, sir.
All right. Say something again so I want to see if they can hear you on the show.
All right. I'm
Say-
here with the illustrious Jim Bros and Mr. Jim himself.
Do you want to put your video on so I can just show everybody your sexy face for a minute or no?
Oh, God. You can. Do you see?
No, I just see your voice.
Okay. Hold on.
I'll put you
Let me see.
just for a moment. Oh yeah.
There.
See? Hold on here.
All right.
Oh yeah. There he is.
What's going on, guys?
What's happening, brother?
I'm driving, and that's dangerous, so I'm pulling over.
What you driving? What is that? What is that car you're in?
A Tesla.
Yeah, it is, isn't it?
No, because I've got the actual like old Model S sunroof. They don't do anymore.
That's right.
So,
Do you have your hands on the steering wheel right now, or are they doing something else? We can see the reflection of your hands in your pants right now, by the way.
no, I don't see. I don't have to drive. The car drives itself.
Oh,
Anyway,
are you enraging half of the Tesla Q gang out there?
I am. They're all gonna set me on fire. I'm gonna get so many unfollows on Twitter now. But I've got to pull over. I drove all the way to my offices.
You're breaking up. Let's put you back on audio. We'll get back to the regular show here, and we'll put you back on. Just click, there was audio, so you're not using all your bandwidth to.
There.
Oh yeah, so much better.
Yeah, send you video. Well, I'm going through the bad part of this little town, so it's gonna break up for another like 1 minute or less.
No big deal. No big deal. How you doing?
Yeah.
How are you doing?
I'm good. I'm okay. It's been a stupid summer because I've spent it all buying houses, selling houses, moving children, changing school systems. It's been so bad that I've only been to my boat, counting yesterday, 4 times this whole summer. And one of them for a kayak.
No, you broke up there. We missed that entire thing.
Excellent. Here, I'm going to turn on the go. I don't know what that does or if it'll make it better, but let's see. All right, now I'm on the go. Is that any better?
I don't. You sound the same, but you broke up and then you came back just fine. So
All right.
I would say
I'm literally at the last bad light, and then I'll be through all this crap.
we've got FOMC today. Well, number one, you haven't been able to go to the boat all summer. That sucks, doesn't it?
It really does. Like because you pay for the slip whether you can go or not, and so it just costs a lot of money to have it just parked there. But,
And you've been doing real estate this summer, right?
Yes, buying and selling houses, moving my family all around, and it's been the summer that didn't happen. Though I did manage to go on vacation, so that's good. But
Where
yeah,
did you go on
about
vacation,
FOMC
Joe?
today.
Tell him.
We went to Puerto Rico. Went sailing a little bit. Drove around, took the kids there for the first time because I've been there a couple times and it's really nice. It's the front end of a sailing mecca. So like right there at the beginning of the Caribbean, from Puerto Rico to the US Virgin Islands to the British Virgin Islands and on down and around, and it's just like heaven there for sailors. So if you ever are looking to go out on a sailboat and charter one, or just get driven around, it's kind of like the start, and then it's just heaven all the way through.
And did you get to sail there, or how many did you do? Any days of sailing there, or no?
I didn't do days. Like, my kids are not, I'm sad to say, my youngest daughter is scared of sailing. So when we heel over and get on a nice tilt, she gets scared. So she just didn't into it. So I dragged them out on multi-day sails, like my wife goes with me. But I'll get her there. She's more of a catamaran queen, I think, ultimately. She doesn't want to get all tilted. She doesn't like getting on a tack and leaned in. Sorry, Jim. That's sad. That's sad news I meant to share with you privately.
My kids are my youngest is a little too aggressive with danger. My oldest had a bad experience once on the boat with us.
She turned it over or something?
She had we were towing her behind the boat, and we were in some deep water. She fell off the tow. And then I jumped off the back of the boat after her. And she had a life jacket on, but
sure.
And then of course the dog jumped after me, and then I had to rescue the dog and her
and the daughter. That just sounds like a normal day at the lake for my family.
Right?
You get the dog in the water, the kid in the water.
Everybody's in the water, right?
Yeah. If it can happen, it will happen. That is the motto of any water-based sport. If it can happen, it will happen.
What do you think about do you have any thoughts on the market right now or the past week?
Man, I think you and I were talking about it earlier. And in moments like this where rotations are occurring in the market and large participants are distributing, their winners and trying to acquire what they're going to hold for the next leg of the market.
Say that again.
Chop.
Trying to acquire what they're going to hold for the next leg of the market. Go on.
Right. So the chop in the market, we'll move all over the place. We'll hit, R4 and S1 all in the same day and finish in the middle. And in the middle, if you are in that time, like my biggest issue when I first started trading options was taking days like that, not being the contrarian that I now have a trading style for, and trying to anticipate the market. I overtrade and get absolutely chopped to pieces. And the market has basically done that for a week's worth of trading days. And it has been a great time to have lost a lot of money if you were trying to trade the market, up or down, like a directional trade. It had been a great time to take lots of swings, understanding what the market's doing, and have made a lot of money. But it takes time in the market to be able to see these types of distribution into a rotation type trade and not get destroyed by over trading, because it's not like there was not a good trend day among these. So it was a good time to have been just swinging with the banks while they were in there pumping up whatever they were about to drop, and then buying what they were picking up with the sell of the underlying for the above one. I mean, it's just been a choppy time.
Were you looking for discounts to enter trades at all? Were you like, hey, I want, I don't know, NVDA at $100, or I want Tesla at this price, or?
Yeah, I mean, this is, I guess if you're,
or were you like mixing the market? Matter of fact, your holdings, I think you've been holding I've been holding throughout this entire thing
the whole time. Yeah,
I think Winky has too.
My conviction trades. I'm still sitting on, pretty much my bullish long portfolio that I started with, at the beginning of this last run.
I don't mean like the trade and intraday, intra-week shit. I'm talking about the long-term holding stuff.
Because I'm not a believer that we're ready to roll the market yet, and I'm not even looking for an exit. So I guess I just have conviction that we're not done. We got a lot of positive things ahead of us with the, there's a reason to hold the market up. We're in an election year. We have a Fed that has been, for the most part, a steady hand on the wheel.
Talk about that right now too. That point you just made just now, if you could, like that.
Yeah,
I was going to talk about that earlier, but I got sidetracked, and I'm like, I'm going to have some people on the show or whatever. But talk about Jerome's history.
I mean, just look at Jerome Powell. You can say what you want about Jerome, but the only thing that anyone, whether you like him or hate him, would still say the same thing, and that is, he either through himself or through the little presidents have been extremely signaling of what's coming long in advance, right? Like, no, Jerome Powell has not been the surprise Fed chairman, right? Like,
say it one more time. Say that one more time.
Chairman Powell has not been the let's throw a surprise at him Fed chairman. He has been the let me signal what I'm gonna do when I start thinking we might think about maybe starting to do something, like long in advance chairman. He says, I think the most hawkish thing he says generally is, we're going to remain data dependent. Like, it's just, how can I make sure the market knows what I'm going to do before I do it? And he's stuck to it. So, like, it's not been up in the air. Like, what Jay Powell's thinking, because he's forthcoming about it. And then he also uses the tools he has to signal market changes well in advance, because he knows who his hawks are, he knows who his doves are, and he gets the hawks out talking about what they want to do. And it seems like it's months before anything ever happens, he gets the narrative out there. So I'm pretty certain that what everyone thinks he's going to do is what he's going to do, and that they're going to vote the way that he's been talking. He's also, that would be another thing to say about Jay Powell. He's really good at getting his little ducks in a row. No one, the vote ends up going the way Jay wants it. So he's steady hand on the wheel. Whether or not you like the way he's steering, I get that, but you can't say that he's a shock and awe Fed chair.
He isn't, is he?
No.
I've seen him get combative. If the narrative
people have tried to push him in a direction,
and he's gotten combative on both sides of that publicly on FOMCs, but only if like the entire story is combative towards him. He got angry one time when he was accused of trying to placate the presidency during an election season, and then he came out and got nasty and was like, well, I'm not beholden to anybody, blah, blah, blah.
There was a talk that the Democrats want him to cut, and that Trump came out saying that if he cut before the election, that he wouldn't have a job anymore. I mean, I think if anything, you might get some words about that in the questioning, in the presser afterwards. But like once again, what are you going to take from J Powell? He's served most of this term. I don't think he cares whether he's in or not. So like I just don't think you can do anything to him. He's just going to keep a steady hand on the wheel. I don't think it's a secret that J Powell doesn't generally appreciate Trump as a person. There were a couple of like comments like that in the past, but once again, I think he's too steady to care about the politics. Really, I
have to interrupt you for a moment if that's okay.
Sure.
Thanks. Just give me one moment here. If you're a trader out there and you're wondering what's going to happen next in the market right now, if you want to know, you should already know. If you want to take a long here, you should already know that you're waiting for price to do one of two things for your next long. You're going to be waiting for a break above R2, a consolidating move, and then just a new high. If you get that new high on the back test, you would take the next leg up. Does that make sense? You should be flat here. This whole zone here is dangerous for you. This is the no-go zone in here. Regardless if we squeeze above or not, you don't trade this. You trade the next leg right here. Otherwise, you are looking for a pullback to the cross that's taking place on the daily trigger with the half an hour and hourly trigger. You'd be looking for a roll down here. The cross below, you'd wait for the what? For the bounce higher, right? The 1 and 5 minute trigger to come down, the 1 minute to cross up, right? Connect on that 1 minute trigger, and you're long again to take the next leg up here. Does that make sense? So there's money there, and there's money above only if you get higher. So up here is a trade. Down here is a trade. There is no trade where we are right now if you're a bull. Just as a heads up out there if you want to know. Sorry, Joe. Back to Jerome really quick.
Yeah. So
sorry about that, brother.
It's okay. I mean, I love it. This is exactly what you just did feeds right into what you said earlier about getting a style, getting a method of trading, and sticking to it. Right? Like that's not to sidetrack from Jerome, but just what you just said is what most traders that are successful have. They wait for the back test. When the back test doesn't come, what do? They don't take a trade. Sit on hands. You know what? That was not a trade for you because it didn't fit your narrative. Like if it doesn't fit, you don't trade. So, I've watched too many people be like, "Oh, it almost got there. It was really close. All right, I'm gonna take a trade." Like, and that's when you get destroyed, right? Like everyone, it'll work like 1 out of like 5 times, but 1/5 is a good way to go broke. So, just get a method, something that works somewhat consistently for you, and just keep doing that.
We get that in the stream sometimes. We get the hit and run. People will show up and be like, "Oh, look, this is they show up when it works that 1 out of 5 times or 1 out of 10 times, and then they disappear."
1 out of 5 is not a good way
I'm like that's. I think Winky used to call it counter alpha is what he would call
it. Yes. Yeah. So anyway, but all that aside, I just heard you say that this morning, and you're so right. Like it doesn't have to work the way Jim talks about it working. Like if that's not your method, then that's fine. And once again, none of this is trading advice. This is just Jim showing you how he trades, but he's found a way to be successful and he's consistent. And that's why, that's how you become a successful trader. But back to Jerome, I personally am looking for Jerome Powell to come out. I don't expect, honestly, any change right now. My gauge as to where the Fed is going to go is generally dependent on employment data. I get inflation, I get on the way up, I think inflation is a reason to raise rates. I think that employment data is the reason to drop rates generally. I know that, inflation comes down and slows down, but the economy to me hasn't signaled that there's changes needed quite yet. It does show some softening on earnings in a couple of these companies, but the softening is that they're not beating as much as they're not as crazy good as people were expecting, but they're still good. These companies are getting battered on what would usually be considered pretty good earnings. So that's my expectation, is we're going to get good old steady hand on the wheel Powell, talking about being data dependent and, continuing to watch as things start to move in a direction that would allow for the Fed to start thinking about possibly the idea of cuts.
Do you think
that's what I think?
Do you think that we know what the Jerome Powell verbiage is, right? Do you think there's any change to that verbiage today, where he addresses the elephant in the room of a promised rate cut this year?
I think we're still, because we're only a little past halfway through this year.
Mm-hmm.
I think that is important powder, right? Like when he starts talking about an inevitable rate cut this year, the market will immediately price it in. So, the market is a leading indicator. It will immediately price in anything it can foresee.
Right.
So that being said, I would be personally surprised if he were to speak in any way to the definitive that there will be a rate cut this year, other than to say that, maybe the market has started to show signs that it would be able to benefit from a rate cut, but that the data is still undefined. I think it would be exceptionally vague, because I don't think he's to that place yet where he wants to talk about what he's going to do in, past September, right? I mean, keep those cards and, send the other ones down the table. Like, hold those cards. Personally,
I'm with that. Like, I think there's an expectation today that I think the market expects him to change his verbiage today, or we're pricing in today. Jerome changing his or adding to his language to expect a cut in September, right?
Have you seen a lot of talk from regional chairs about that? Because that to me is your precursor for Jerome. Like if the little presidents haven't been talking about it, then you don't expect Jerome to talk about it.
And I'm wondering about that. So when he comes out today, my thought here is that the market is pricing Jerome in, adding some language to his statement that he keeps repeating every FOMC rate decision, that we're going to get a cut in September. If he doesn't add that language, how do you think the market reacts to that if he doesn't add that? If he just stays the company line, which I don't think he's going to talk about it today. I don't think he's going to say anything different.
We rip.
What's that?
Hand on the wheel, nice and stable. I say we go up.
If he does not add that language.
Yeah.
If he adds the language in of a cut in September, do you think the market pauses, anticipating that into September, or like it trades sideways, waiting for that cut? Or do you think the market goes down or rips and then goes down? Like he says, hey, you're going to get a cut in September.
I guess if the market is positioned that he's going to start adding language, then we would already be, the banks, if the market's already there, then we don't have to go up to go down. I think that when we start cutting rates, that's going to be for me, that when he starts to cut rates is when I'm looking for exits for my longs, like up. I want to see a pop. I want to start selling my winners into the market as rates cut.
Mm-hmm.
Just because, rates cut only for one reason. Like the Fed is not the market. The Fed is the trailing indicator. The market is the leading indicator, right?
Mm-hmm.
The Fed is reacting to data. The market is reacting to expectation. So, because of that, it's once again one of those counterintuitive things, in my opinion, that when rates are going up, it's because the market is on fire. The market is on fire because it sees things in the future and it's anticipating it. When the Fed is cutting, that means that they have seen the market and they have seen earnings and they've seen jobs reports and they've seen things that are indicating that the market is starting to wobble, and they're trying to get ahead of any kind of drop by cutting rates to boost the market and try to save it, try to keep it up. But that means that they're starting to droop, right? It's like melting wax in the sun. Like it's starting to droop in a couple different places. They're trying to prop it up using the tools they have. And to me, that says, have you ever seen the Fed be able to completely turn it around by simply cutting rates? Or is that generally just a part of a consolidation within the market? Like I've never seen it. I've seen they can soften it, but I don't think they can turn it around, short of printing trillions of dollars like they did in the COVID crash. But, just by adjusting rates, I don't think that stops it. It just softens it for key sectors. And so I would sell into that. I would sell into the first talks and inklings of rate cuts.
I always look at if you look at one of my favorite ones is looking cyclically at oil as the driver of inflation and the cycles of inflation, and then of course how that impacts employment and unemployment, the cost of goods and all that stuff.
Right.
So I'm always looking for when oil is cheap, when is it expensive, and what does that cost somebody? Are they making enough? If gasoline is cheap, I'm going to work every day, and the cost of my goods are low, I have extra money that I can spend, and things are good, right? And then when things become too expensive, cost of goods and services, I can't afford them, or maybe I lose my job or something like that, and then things get bad. So I'm always trying to tie that back in on the back end. And I've read a book or two about some prior Fed chairs that have said that after their chairmanship, they've said, we don't know if we actually impact.
Right.
We try to time what we do with what we think is the start and end of a cycle, like business cycles and inflation cycles and stuff like that.
There is no market that they can let run without the changes they make to see if one was better than the other, right? There's just the market and economy that we have. So when they make changes, there's no proof source that the changes made the difference. I mean, and there's no way you could do it. You'd need two economies, and then make changes in one and watch what happens if you let it run in the other. That's impossible. So there really is no way they can know. I just know that I can't think of, and I'm getting old now, but I can't think of an economy where the Fed was able to stop a cooling in the economy by simply cutting rates.
They amplify though, right?
Yeah, exactly. So they're definitely able to, to add a softening
or change the tone, right?
Yeah. I mean,
so the market prices in that tone if they're not adversarial.
Sure. They can get people to buy houses by making mortgages cheaper, but they can't change the fact that a lot of people can't buy houses if there's changes in the job market that are driving unemployment up. So I mean, there's pieces that they can push, and then there's pieces that are sort of more like something they can tweak rather than something they can control. They can control the flaps on the plane, but they can't change the wind. So, it's interesting to see, and that's why the Fed's positioning is more indicative of the overall, market data than it is of, they can control the flaps, but if the wind's blowing down, plane's going down,
Right. So you're saying that the language stays the same, and he likely doesn't even discuss a rate cut in September. I think I'm on that. All right, I agree with that. I
think that would put the market positioned in not good, right? Like, I think the market wants him to start talking about a rate cut.
And he really doesn't have to, does he? Right at this
I don't
moment,
think
too.
so.
The only thing that I
look
see
at
is the
unemployment,
unemployment
it's fine.
jobs thing.
We're coming into seasonality for unemployment because of all the summer jobs ending and all of that.
Mhm.
So I don't know that he would even have. I don't think that he would have the requirement that he talks about it, because there are a couple of companies talking about reducing jobs. I saw something about Intel and some other people, but those are market reasons. Like they're small silo reasons, right? Like something's not working in their business, and a lot of it is due to disruption. It's not the, hey, we're laying off 50,000
It's not the economy.
people because the economy's rolling over. It's, hey, this business venture we've invested a lot in and put 1,000 people on is failing, and we're not gonna keep working there. So, so I think he's still got the cover, and if the market is expecting him to start talking about it, they're wrong, and that'll have the repercussions it has. In my opinion, I could be totally wrong, but in my opinion,
I think unless you get like a touch on like 2% in like inflation's like bouncing higher,
right.
you see the bounce on oil, and then you
And oil's coming
see
into seasonality too. The summer,
and you see like velocity in unemployment. That conversation has to happen, of course.
right?
The only other thing he has to do would be to just manipulate, of course, the numbers and slow the eventual 5.9% unemployment, or track when that's going to happen, to
Right.
then really start cutting. Right? He's not going to cut until we get like 5.9, is he, on
I
unemployment?
don't think so.
I don't think so either, man.
Right now, employment, even with all the summer jobs coming to an end,
Unemployment's at 4.1 or something, isn't it? 4.2.
in most parts of the U.S., we're at what would be still considered full employment. A very small percentage of people wanting a job can't find a job.
There's an argument out there that they should cut to bring unemployment. There's an argument out there that they should cut to make employment more robust.
Right.
That argument's out there too, that he should cut for that reason. And there's an argument out there that we've priced in one cut, and we priced it in back in March and April, so that we wouldn't have a down move in the market. I don't know if I believe that either. I think
I don't agree with
I've
that.
only seen one or two instances where the pullback is small on an actual cut. Do you think there's a chance that he could cut today, like 0.25 or anything like that, like unannounced? I think that's
Well, if he did,
very small chance.
If he did that, then I would be shocked. That would be the opposite of what I expect from Jay Powell, being the steady hand on the wheel, coming out with hey, by the way, guys, I know we hadn't really talked about it, but here's a cut. Here's the first cut, because that's the biggest thing. Look at how
it's the Band-Aid, right?
Well, but look at how Jay Powell has handled, everything all the way since COVID. Has he ever zigzagged
Nope.
the interest rate once?
He point blank came out publicly and said, we are not adversarial anymore.
Yeah. So, I'm just saying, like he hasn't signaled that this cut was going to happen. And then if he did it, that would be a shock to the market, because while the market may be expecting him to start talking about it.
Mhm.
I don't think the market has priced it in, which means that it would be very destabilizing for the market for him to just be like, oh, surprise, by the way, I'm cutting 25.
Surprise, motherfucker.
Yeah, because I mean the thing is that would be a directional change for him. And he's shown he doesn't zigzag. So if he doesn't want to make a mistake and have to go in reverse. So when he starts to cut, that means we're in a new regime. We're in a cutting regime. And that takes, right now, he's probably where he wants to be the most.
That's a
which
big
is
state. That's a great
holding-
point you're making, by the way.
Holding at the plateau, right? Like I am holding, and now I have full directionality available to me. If I continue going up, I'm still in the regime I was in. I was paused before. I'm fine. If the unknown happens, I'm not reversing course. For him to start cutting now, that would be picking a new direction, right? And I just don't know that he wants to do that until he absolutely has to, because he's been that steady hand, right?
He has.
So I don't know that there's an advantage to talking about what Jerome in, September, October, November is going to do in, the last day of July. So he's got so much more time to like signal and talk and, then get everyone ready, make sure there's no surprises. I don't know. That's just not how I see J Powell.
Do you have any thoughts on if you don't feel like you have to be put on the spot or anything here? If you don't have any thoughts, you don't. But do you have any thoughts on the rest of? Hold on, let me see if I can bring these up. Do you have any thoughts on? It's like today's Wednesday, FOMC day. We're still not done with the week with data and earnings. We've got tonight after the close. We've got Meta, ARM. We've got Amazon on Thursday reports. We saw like we got Roku. We've got Snap and Block. Do you think yesterday when we slammed down on all of big tech, do you think that was the bottom for those tickers? Do you think that like Meta could go down more? Amazon? Do you have any thoughts on the down moves in these? Do you think like Microsoft was the last holy grail for the bears to get that bottom, or no?
I don't think that anybody's got enough power save some absolute unexpected surprise to the downside. I just don't know if anybody's got enough power to really pull this market down. And now that Microsoft was a failed to launch bear turn, Meta, I expect them. I'm not expecting Meta to have a gangbuster earnings. But I think it'll be in line with the other tech companies that have come out, where it's still going to be a reasonably good earnings.
You mean the estimate of only using 6 rolls of paper towels and they used 8, so we're going to drop it 10%? Trade?
Yeah. So I think the it's kind of like when everyone is killing earnings, you're expected to kill earnings. And by the time we get to Meta, like here, where we've already gone through so many of these large tech firms, like everybody's kind of a known quantity. I would actually state that probably the most danger for the bears would be a Meta kill it. Like if Meta came out and killed it, since the expectations are now already kind of tempered, there's danger there, right? Because then, holy shit, they killed it. Sorry, I didn't mean to curse. But I think that would be the surprise. So I'm not really. I think the bears are declawed at this point.
Yeah,
they're gonna have to wait to the next game.
I had a friend say something to me yesterday about this is the top, like this is it, market's done, and I was like, oh, that's what I wanted to hear.
Right? That's
It
here's
was like,
your
we're
sign.
forgetting the resiliency of this fucking market. It was like,
Yep. A friend of mine once told me that the S&P is designed to go up and to the right. This one guy named Jim James. And for that to happen, all these guys like Meta and Google and Microsoft need to go up and to the right as well. So it's up and to the right till something breaks.
when they dropped Microsoft yesterday, 10%, it was 9%, I think, 8 point something.
Yep.
I was like, get the fuck on out of here.
Microsoft has really turned into just an absolute juggernaut. Like,
It's like, the fuck you talking about? 10%.
yeah, yeah.
This is a good old fashioned I want a better price.
Yeah. Right?
Yeah, like
They're
Jedi
not
Marcus talks about this, like how, like, or a lot of people talk, not just Jedi, other people talk about this, but how everything is fucking fake. Like the fucking price of everything is bullshit.
Well, not only that, but look at analyst expectations. Like the company gives guidance, and guidance is great, but the earnings they got to hit is based on analyst expectations.
Right.
And if you wanted to create slack in the line, it's just this made up bullshit that they will give a company that they want to get a buy-in on an unhittable target, get the drop, buy back in, and then watch the market breadth on that company just like go wild. And it's because they're like, hey, I want to buy, like you said, I want to buy in. I don't want to pay this price.
And Starbucks is a good example too, right? Like Starbucks is like, oh, we fucking took a bat to the face and like, let's send it up. Like,
right?
we need to get a print on this fucking trade.
It's actually kind of scary because when you look at it like that, it just takes away all faith that this is real.
Someone's asking about Apple specifically because they do report as well. Any thoughts on Apple? Does it go up or down?
I don't really have thoughts on them. I haven't really been following them very closely, except to say that a company that's shifting their or has so successfully shifted themselves into services that you have to pay every month and have no choice. Like Apple's just another one of those companies. If it does get whipsawed down, it would just be another, let's shake the line and get some slack and then buy in.
We talked about that on market briefs and in the show the past couple weeks. Some of the tone that we've talked about here is find a bottom in what you like and what you're comfortable with owning.
Yeah,
I think that's proved true the past couple weeks that whatever, like if your favorite thing bottoms in a price that you're comfortable with, take that long. I bought NVDA yesterday under that assumption.
because you're an absolute animal.
Goddamn right.
You told me that, I was like, holy shit, you're a monster cat.
I didn't know if I'd get the $98, so I'm like, and then I was like, well, I'll put an order in for $100, and then I was like, they ain't gonna fill that shit either. I might as well buy it right now. And you know what? I get left behind a lot with that shit, like Tesla. Like fucking twice, I chased Tesla, and I'm like, why can't you just say fine? I'll pay an extra few bucks so I don't get left behind.
Right?
Yeah, like I get so fucking anal about that shit. I shouldn't.
Like the music you played coming into the show this morning, you got to slap the ask on the ones you believe in.
Right?
That's it.
Can I live with NVIDIA at $100 if it goes down? Yeah.
Right? It's not a bid. It's an ask. Just shut up, suck it up, and pay the money.
That's how I have to, like, I was talking to myself, my internal monologue yesterday, and I'm like, because you're telling me the AI bubble is popped, and you're telling me fucking NVIDIA today is going down to fucking $50 or $25 today.
No.
Like, get the fuck
I mean, just think about
here.
it this way. Like, companies are still, I mean, this is a great example. So companies are still Like look at Tesla. The way that they were robbing NVIDIA chips from other businesses of theirs because they wanted the order filled earlier. Because there's a line.
Right.
There's still a line. There is a line out the door. It's like the
Out the
early days of
fucking door, dude.
Yeah. There's an early, it's like, and I'm not an NVIDIA bull. Like, I'm not an NVIDIA bull.
Tell my NVIDIA story. Tell the fucking show my NVIDIA story. Because I've never told this story to anybody. I've never made this public either. You and I had that discussion, right, a long time ago?
Oh, yeah. Yeah, we've been talking about NVIDIA for a long time, you and I.
Talk on the show really quick. Make it public, because I've never said it to anybody. I've only said it to you. Only you and I have talked about this.
All right, wait. Which one? Because you've been long bully. You told me. Wait, is this the where you told me when I was like, "Where's the top?"
Remember when NVIDIA was trading the dumpster and we talked about the AI trade?
I remember, and you said, so this is great, guys. So I'm looking at NVIDIA at like 400 and something. And I tell Jim, I'm like, man, this is insane. It's definitely going to come down because it's so high. And you literally straight face told me, you said, it's going to 700. And if it goes to 700 and it goes above, it's going to 1400 because the banks on a bubble like this, the banks are going to get all of it and they won't stop till they print. And I was like, there's no fucking way we're going to take NVIDIA to $1,400 a share. And he's like, bet. And that was like when it was trading $400. I stupidly did not take a position on NVIDIA on that. But then I called him when it hit 7. And I was like, all right, is it going to bust now? He's like, no, there's so much power behind it. It was like, positive for the daily, the monthly. He's like, we ride. He was like 1,400. I had a chance right then to double my money in shares, and I didn't take it. But he said, so I'm telling you, he's been calling this shit since I asked.
Not on public though. It's always in private.
No, this was just me and you, and you son of a bitch were right. And I'd have a bigger boat if I'd have listened to you. But I was too busy telling Cap how he's insane.
What about Tesla? You think Tesla's done here or no?
I mean, Tesla's on, not round one of its big bubble. I'm still, I'm not comfortable with Tesla because of the headline risk of Elon Musk in an election year, but I'm still long the underlying on Tesla. So
I got out of Tesla, but my thesis was if it breaks below the fucking monthly trigger, we're going to go down to the depths of hell, but it's turning to the upside right now. I'm considering getting back in again.
I mean, Tesla's like fucking getting on a roller coaster ride once again. Sorry for cursing on your show. But it's like the roller coaster ride, right? Like, because you could have good data and good market positioning and positive, super positive positioning with good options, good call structure above, and everything's great. And then Elon Musk could come out and set you on fire one morning or night, and you watch the stock burn 10% overnight. So it's the CEO of Tesla is the biggest risk to the stock every single day. And especially in an election year, with him wearing his opinion on his sleeve, I don't care which way you lean politically, it's just there's so much risk there.
Yeah, and he's not political. People think he is. He's not. He tried to sell his soul to the Dems, and they shit on him, right? And now he's selling his soul to the Republicans. Well, it's more about being liked, it's like this whole like I've got everything
Yeah, if Joe had not been all in for the unions and instead had like invited him to the EV summit he did in his first year, and like been like, instead of Mary, you led and it mattered. Instead, he had been like, Elon, you led and it mattered. Dude, he'd be out there like freaking shilling for the Dems right now,
Right.
because that would be how his business would be more successful. But instead, you know, Joe wants to be environmentally conscious and whatnot, but he also is a wholly owned subsidiary of his union masters and had no choice but to literally shit on Elon Musk for years straight in order to appease the companies that have unions in their workforce. So like he had no choice in Biden's mind, he had no choice but to destroy that which was destroying his union friends. And so he had to go against Elon Musk, the most American car manufacturer ever. He had to go against him.
I was also talking to a buddy last night about the whole other thing with Elon, where there's a whole nother faction of power and money brokers that facilitated the deal for him to buy X and would like nothing less than to take Tesla or X away from him too, right?
Sure.
Knock his leg out. Like, here's the deal. And then if your leg gets cut and I can take it away from you, I will, right?
Right. I mean, the minute that you pledge shares towards something, there's definitely, especially at that level, there's always people that are like, great, these are in jeopardy now.
Right.
Like something that was completely untouchable has become touchable through debt. So, an X represented a massive pledging of shares towards the debt for the acquisition. And that opened up, Elon owns roughly, or last I looked, it was like almost 30% of Tesla. And all of that was untouchable because he never risked more than, a couple $100 million here or there to buy property back in the day. And then he sold, he sold all of his shit because he's like, I don't want assets. I want control of my company. And so he tried to clean that up. But then with his, open mouth insert his own foot with X, he was forced to commit massive amounts of his shares as pledged towards debt to buy X. And then he also was forced to tank his own stock by selling shares, which was not good either. But like when he did that, it's kind of like when you rent or when you sleep on a friend's couch, it's hard for someone to hurt you because the worst thing you do is you walk away. But when you own a home, and you got a mortgage on it, well, now, a bank can decide a lot of things about your life. So, yeah, he's definitely still got a lot of risk there because he hasn't generated massive revenues from X that would allow him to buy back those shares from being pledged against debt.
And what are your thoughts on the end of this bull run for the market? Do you think that this bull run, whenever it ends, do you think it's a big one, like a long-term debt cycle, or just a short-term debt cycle end of the bull run? You think it's like minor, like, we might have a year and a half or 3 years of down, or do you think we could possibly enter
I'm a bull.
like 5 or
I'm
10 year like long-term debt cycle end where it's, maybe we have 1 to 3 years down, but then we have a sideways market for a few more years to allow this new young generation a chance to buy into a new debt cycle? Or do you think they get left behind?
So I'm a big bull. Like I've always been. I'm a positive guy. I'm a business owner. So I'm positive about the market usually because I need it to be for my business to thrive. So I'm on the whole never pessimistic, always looking for the better opportunity, hoping for the best, but preparing for for downturns. But being an elder millennial that is 42, I am the first year of the millennials, and the millennials have had a rough go because they've been through a lot of history in a very short period of time. And having watched all of the people that are either right above 40 or right under 40 go through the housing market that they're trying to buy into or have bought into, and the inflationary cycle that we haven't seen since the 70s, since before they were mostly all born. I'm kind of a believer that this one might be different, that this could be a longer down cycle.
We haven't seen one since what? 2007, right? 2007,
07 to 13. That was the last. As far as housing hit the bottom in 2013. Nationally. So I think, and that one was longer, due to the fraud, right? So there was fraud in the market that caused a massive downturn.
Well, it was worldwide too, right? Do you remember when they were repackaging those fucking those swaps? They were repackaging mortgages again and again and again and again. They were fucking selling them over in China, right?
You're talking to a
What's
guy that bought a home in 2006 with no disclosure. I had a first and second mortgage. I owned none of the house. I was a retard. I was an absolute idiot. Yeah, sorry.
Regard. You said regard, right?
I had regards. So I was like, dude,
we're part of that generation, Joe, where that word was okay, but supposedly the younger generation doesn't like it anymore.
I understand.
We have to grow younger with the younger generation.
Yeah, I'm sorry about that, everyone. But I was I was an idiot. I took on ungodly amounts of risk for no reason, and I was part of the problem. I didn't ever go foreclose, but everyone else in my neighborhood did. But it was because we were promised that, if you buy a house and hold it for 3 years, you're going to sell it for 30 or 40% more than you paid for it. And now you've got a down payment for your next house. And that was what we were sold by, by the banks that were selling us these loans. That was what we were sold by the people taking you to look at houses. And frankly, that was the reality for the people that were, home holders like Gen X. They was selling us these houses, their starter homes, so they could go buy a bigger home. And so we were at that place in the market. Now, I would say that as far as housing goes, it's a lot more cautious out there. As a person that just sold and bought another home, in this market where interest rates are obscene, and I bought a house that sold for 40% less 3 years ago. So it's all happening again. But it's a lot more caution. And the banks are definitely not doing the creative accounting BS they did in the previous crash. So I would say that there's not fraud in the market that I can see. It's hard to get a loan, even with the crazy interest rates. And also a lot of homes are not carrying loans. So
yeah,
they're selling are selling for cash, like a lot of them in the suburbs.
I really truly believe that the reform that took place in 07, 08 has a unintended negative consequence to younger generations.
Absolutely. Because whereas I in
you can't make or
as a young person with no money was able to get a loan and get in a house. And like I said, I had a completely irresponsible mortgage, but I paid it every month as promised, and ultimately sold my home, never missing a payment to the bank. So it was, and I got my foot in the door in home ownership. So,
you did, but a
say
lot
what
of
you
people
want.
didn't, right? A lot of people
A
got
lot of
caught
people-
and they got fucked,
yeah.
right? For irresponsible loans. But
Of course. But I'm just saying, like, I was one of those people that got in a house, started down the path of home ownership because there was a lot more, it was a lot easier to get into a home back then. And then the people like me now, like if I was the same 24-year-old trying to buy a house with the same, with my same reality, but with the new regime for mortgages, I'm not in a home. Like I don't get to buy one. So, what does that mean for me in my life? I don't know. But it would have changed a lot for me to not have bought a home back then and instead continue to be a renter for 10 more years.
I just read a statement from somebody the other day that they were talking about how like the younger generations have a higher rate of home ownership than any time in the past. And that's the argument right now. They're being let in just fine. But then what's
Really?
not discussed is their quality of life, right? If they are getting
sure.
in, they still don't have the same quality of life.
Yeah, because I mean,
As
homes
I
have
did, or you
increased.
did, or people
Yeah.
older than us did. So even if they are
Dude.
buying a house, or hey, I have to get in now, no matter what,
I bought
they're
a
still eating fucking
3-bedroom,
ramen. They don't
3.5
have a pool in the
bathroom.
backyard. They don't have fucking
Yeah.
toys.
Well, no, they don't have the ability to buy food. I mean, like,
Right.
I bought a 3-bedroom, 3.5 bathroom, my first house, and I overpaid for it, but it was under 200 grand, right? Like,
Mhm.
and I live in the in the metro area of Atlanta, and
That
that
was a
same
hallmark, wasn't it?
house-
If you bought a house 20, 30 years ago, you were not fucking starving, were you? You remortgaged
No,
it.
like,
You started doing
I was
renovations.
traveling
You had brand new
still.
fucking cars and
My
toys.
wife and I were making a reasonable salary, not awesome, but we were traveling to Spain and traveling to France. Like, we were going on vacations every year, like big vacations, and owning a house and owning 2 cars that,
Yeah.
the one we owned outright and one we were making payments on, but they were nice. And you can't do that now on like entry level salaries. Like, the employees I hire at an normal entry level salary, they could never do what I did ever.
No.
And say what you will, I'm paying market rates for people, and they could never own a home, travel internationally, own cars, and make what anyone would consider a reasonable wage for a entry level position. So, that's the difference. And that's the reason I say it's reset time, right?
Yeah. That's my question is, do they get the
when
reset or they get a
costs-
half reset?
when costs exceed the wages, that's when you get massive resets. And I don't want that, because I'm at the stage where I'm 42. I want all you suckers to suffer. And like my parents are about to, they're retired, and they're wealthy by today's standards as far as being able to retire and have enough money to live and do what they want. And I want what they have, right? And the only way we get that is if we keep money about where it is and we don't blow it up. Because if we hit like a really high, like hyperinflation moment, that resets me late in my career, or late mid career for me. So, I am heavily invested in the system, right? If there
I'm
was a
scared of that.
reset,
I'm
that hurts me.
deathly scared right now of that reset. And like, does that force me to work that extra decade? Because that's what happened in
Right,
07, 08,
exactly.
right?
Exactly. That's what happened. There was a guy, I'm going to say a name because none of you will know him. There's a guy named Ron DeRosa at the software company I was working at as my first company. And I remember the day in 07 or 08, in 08, when he was going to retire the end of the year. And he had a super successful career. He built a software company, sold it to our company, came in as a VP, and had like picture of a sailboat on his wall, and was planning to buy a house.
Did everything right.
Yeah, buy a house near Kitty Hawk and then own a sailboat, and he was ready for his retirement. And I remember when the market crashed and all his money was sitting in, basically the S&P, and he was like he looked like someone had shot him in the face, and it was because his retirement just got pushed off by a decade, and he was tired. And I watched that happen to people at that level, at that moment in their careers where they were that age, where they were looking to retire, and money got changed, money got reset, the markets got reset. Now granted, he was way too heavy in equities for the age and the place he was in his career, but he'd been successful. And I'm not saying he couldn't afford to retire. He just definitely couldn't afford to retire then, with the plan of the nice house in Kitty Hawk and the big 53-foot Beneteau that he was like. That's the problem.
The 53-foot Beneteau. Woo!
Right? Like that was the issue. Is like it changed his trajectory. Like his trajectory was yacht club, and it changed him down to, maybe I could afford a row home in the Villages. So,
I live frugally, man. Like the Villages. Did you get to see that documentary?
He probably, that guy, he does not have any shower puffs hanging from his golf cart.
Well, honey, I blew up our retirement, but we're going to go live down in the Villages. I'm going to go bang some old sluts. Yep. I shouldn't say that.
We're gonna have all the colors hanging from the golf cart. I got a black one, I got a purple one. I'm up for all of it.
I didn't have venereal disease when I was younger, but I'm so old now that it doesn't matter anymore.
Right.
Did you see that documentary?
Oh man, I've seen the documentary, but I have one friend whose mom lives there.
Oh,
and he's like, we just don't talk about it anymore.
Yeah, you can't talk about it with.
Yeah, dad died, mom stayed in the Villages, and he's like, she comes to our house now at Christmas. We don't go down there.
It's fucked up. Like,
it is truly messed up.
You do lose as I'm getting older. I'm losing a lot of my. As I get older, my like all the hangups I had being young. I was talking to another person yesterday that I was talking to a woman yesterday that told me that she had eating disorder when she was younger, and that she's married now. She's got kids and stuff, but she was talking about how she had an eating disorder, and she's like, the eating disorder is gone now. I don't give a fuck. And I was like, man, as I get older, all these hangups I had as a kid slide off me as I get older. I'm just like, yeah, whatever. That shit doesn't mean anything anymore. Do you notice that as you get older? That like, I'll never be this, or I'll never condone that, or I'll never, not necessarily like you're going to go out and do the Villages thing, but just even my own, like.
I think it goes one of two ways. There is no middle ground. Like, you either become more insular and cut off, and you get stronger opinions about everyone and everything if you're like lived a sad life, like a life of anger or comparison, and either that, or you just go, yeah, you know what, I've lived a lot of life, I'm in no place to judge anyone, just go be happy. I hope to always be on that side where I'm like, I don't care what you do. Just go be happy, because life is short and it's miserable sometimes. So go be happy when you can.
That's how life can really suck at moments, can't it?
Oh yeah. So, life is suffering. So like when you can be happy, go be happy. And I don't care what you do. As long as it doesn't affect me or my family. That's all I care about.
I think about that sometimes because people go through, or when things are really bad in those moments, and you're like, life changes for that moment. It brings into contrast, right? Like, why didn't I fucking just enjoy this time I had, or I fucking squandered moments that have been joyous. Now I'm in this shit show. The entire time
Absolutely.
leading up to it, I was in a bad space. I shouldn't have been, right? I should have squandered the good times, because now I'm in a really truly bad moment in life. I always think about that, because when things go
I have a good
eventually, or
example of that.
they
Because
think
I started out
good.
in college, and as a young man, I was what I would have described as a pretty hardcore, like fifth generation, sixth generation, conservative, Republican, like hardcore Republican type guy. And I thought I was right. And then I would say I turned probably like 30 and realized I just don't care what people do that much. And I don't need to be right. And I don't, that's for both sides. And I realized that I had formed a lot of my opinions because there was only one side to stand on for one particular issue that I actually cared about, and then allowed other people to adopt a bunch of opinions for me so that I could be on the side that had that one opinion I cared about. And I was like, this is stupid. Like, I am not anything like all these people that are telling me all the things I'm supposed to feel or know or do. And so it took me getting to about 30, 32 for me to realize that I am not a hardcore Republican. I am a fiscal conservative. And socially, I'm like, you do what you want to do. Just, I don't care. And that was really freeing for me, was to become not dyed in the wool anything. I make my opinion up one idea or one position at a time. And I really do pride myself in not being a member of anybody's club. And that is a really good day when you no longer have to have your entire identity decided because you have one stance.
It's
on
okay
one
for you to have
thing.
different stances, right? It's okay for you to be
It's
like,
so great. In fact, if you ever find yourself 100% lockstep with any group, you should probably carefully consider your life.
I think that's a
Because
silent majority
just
out
not-
there too. It's like we get these
Absolutely.
echoes or these loud chambers of extremism. It's like, if you're not a part of this, you're not this anymore, right? You're not a real Democrat. You're not a real Republican.
Yeah.
And then they're like, if you don't take this extremist view that's been hijacked, you can't call yourself this or that or whatever. And I'm like, and there's a silent majority. Most people that I talk to, like even my friends, I got friends here from Twitter and the community and stuff. We have different political opinions. I call them on the fucking phone, and we're closer than I think we are.
Absolutely.
In real life.
Especially if you get those like key things that they like to spar people off against each other with out of the way, and you just agree that there's never going to be a moment where those two things can be like, it's not a matter of dialogue. It's just like, there's some things you'll never get anyone to agree on, right?
Mhm.
But they use those to say there's this huge difference between you, and therefore you can't stand next to each other. Like, you have to be apart because you stand here on this ideal, they stand here on this ideal, and now you guys can't be friends. That's useful, right? Like, if I can drive everyone apart on those things, then I can make them follow me on everything else, and they'll never look back.
Do you think we're in
Well, that's
danger with the fall of the humanities being taught in our top institutions, or do you think math can accommodate that? Do you think, like, if I read a story about Harvard, their humanities department's going down the fucking shitter. We have less
Harvard
writers coming
as a
out.
whole is in
People are
trouble
deciding
right
to go
now.
to sciences and maths and all that kind of stuff, and choosing
Right.
not to take on that debate.
I think it's cyclical, Jim. I think all these things, they seem like they're moving in a direction, and then give it, another 20 years and it'll seem like it's moving in the other direction. Everything just, I guess that's me. And as I get older.
Do you think this time period will be
left and the right, and then the next thing you know, you're in the middle again? So
do you think older generations will look at this generation here or this time period and be like, this is one of the, like, we've evolved, like we've gotten better with technology down the road? Like, let's say things improve, but they look back in this time period and say, wow, they were really suckers then, or no?
I'm a real believer, and like I say, I know we've gotten way off topic for trading.
We have.
I'm a big believer in that. That there is a lot to be. There's a lot of there with AI being the last great invention that humans ever need to make, and that the value of more technology or is going to start to go down as more intelligence is available.
Mm-hmm.
So intelligence is a high value quality. If you were to quantize it into little bits, the value of each bit of intelligence is very high. And it's because, just like everyone always jokingly says, common sense and intelligence there's not a lot of it, relatively, because there's a lot of dumb people in this world. But, as we create artificial intelligence that is more and more useful and is more and more widespread, and it becomes much like the internet, basically free, as it gets implemented, as we implement intelligence the way that we did the internet, it's going to become basically free. And because of that, the value of knowing how to break down a protein numerically and figure out what it does and how it does it and how it connects to different things, like breaking down a protein, was very, very valuable when humans had to do calculations. But when a computer model can do it in a tenth of a second, and all of the years of research that you would have done to figure out exactly the makeup of it suddenly becomes available in a matter of seconds, the value of being able to do it will go down, because it becomes like water. So then the humanities side of humans will become more important, because that will be the only thing that we have left.
It reminds me, I feel like we're in this time period of you have the AI potential revolution. Robotics is catching up. It's still slow,
very slow.
But I feel like we're not there yet. But we're in that Upton Sinclair, The Jungle Book. The book. There's a book out there called The Jungle by Upton Sinclair. It was turn of the century, and also you have the Industrial Revolution that took place in the mid to late 1860s, 1865 and to 1900. But you have this 40-year, 50-year slope of entering the Industrial Revolution. And if you ever read the book The Jungle out there, if any of you guys are still watching the show and listening right now, it talked about the working conditions in factory in the Industrial Revolution and how terrible they were. And you had kids working and shit like that. And then, of course, you look back then now and you go, well, that was fucking terrible. And I think that we're in the start of that right now for this new techno revolution, right? This AI and robotics evolution that we're going into right now. And they're going to look back in this time period and be like, can't fucking believe these people were fucking believing this shit at that time, or they were taking part in social media or the internet like they were at that time. I think in 100 years, they're going to look back in this time period and just yeah, they were at the start of this evolution, this revolution, and they got fed to the fucking wolves in that time period.
I think you and I both, the only one that we've lived through in its entirety, and we're older probably than some of the people in your stream. We lived in 1994 or 93, when I got my first email account.
Yeah, that's when I got mine.
no
92,
one-
I think.
no,
1992.
yeah, no one would have thought what the world would look like in 2002, that the internet would start to become, where you buy things, where you work, where you have friends, where where literally there are people who work on the internet, have only friends on the internet, their lives are on the internet. But if you told someone when that transition was happening, which you could probably put somewhere between 93 to 95, when the personal computer really started going into every single home and the internet became, it wasn't just AOL CDs being sent out, and people chatting in a chat room, but literally the internet started taking over after the .com bust. And if you told all those people that the future jobs will be on the internet, and that if you're not on the internet, you won't be a citizen of the world, and if you want to, get money and move money to someone, you're going to do it on a phone in your hand. Like, those people would have been like, you are insane, and I need you to leave this college campus.
Right.
But now that's just reality. No one in a revolution, in a technological revolution that's living through it, knows they're living through it. Only in hindsight do we see the change that happened. And so AI is in that place now. I feel like we're in 1994 with the internet.
Mm-hmm. I have to interrupt for just a moment.
The revolution is happening.
So I got to interrupt for just brief. Just so if you're out there watching the show right now, just a quick heads up. We're going to transition here into the FOMC in just a few moments. We're going to wrap up this conversation in the next 15 minutes or so, but I do want you to be aware of something here, okay? We're going to look at NVDA right now as the example. There's probably other tickers that can be the example here. And also, I guess we're on IWM here. This would be the same thing, right? Very similar. You see us coming up here and testing this prior high up here in IWM. And then we have NVDA over here. Let's switch over to that one really quick. And fucking A, man. But just note that, you see IWM coming up in that resistance, and you see IWM coming up to retest this daily trigger up here, right? And if we switch back over to SPY really quick, here's SPY right here. There can be like this big squeeze up right now, right? So you get the squeeze up with NVIDIA and IWM retesting prior highs, and then maybe a pullback, okay? So I'm keeping this thing up here just for you to see that we still haven't done it. This isn't that. This isn't it, is my point. So if you saw me drawing in a line over here, or a line to go down and then, or a line to go up and then down and then up, just note that at this point we still have not broken above here, though we're getting close. So I don't know how you out there are watching this in the background at home, but just take note of that. Also, the VIX 9-day right here. Just pay very close attention to this VIX 9-day too. If the bears are, let's say the bears are extinct, they might not be extinct is my point. So don't be drinking fucking bull Kool-Aid either. I know I'm always like fucking with the bears and shit, but I want you to see out here something important, okay? Here's the VIX 9-day. And if you get this breakdown of the VIX 9-day, right? So come down, we come up, right? If we break down here, they fill this gap down here. Whoop, that's your squeeze higher and spoos, right? Or resistance. If they do some bullshit, we get some Fed noise, and they want to start blasting out, up and out, and these bulls think, hey, everything's great and fine. And I want you to see this down here, right? Like, it's so, like, if we start breaking down the VIX 9-day, yeah, we come down here and we start rejecting and heading lower. That's great. Fuck yeah, let's do it. But if we get a bounce down here on this VIX at any point, this is an inflection point for you as a bull to maybe take a little bit off the table, or a little bit of risk off the table, and wait for either the jump in VIX or the beginning of a break below to get long again. That's where you make your money. Here, not here. This is where the danger is for you as a bull. So just be conscious of that. Do we get the breakdown below? Does the VIX come down here? Does it begin rejecting? See that demand for VIX right there? See, I don't know if you can see it at home, but there's a little wick down here. If we start breaking down below, fuck yeah, let's party time, right? But if they catch that bounce down here and we start heading higher, it's a moment of, oh yeah, everything is awesome, right? And then all of a sudden everything is not awesome, and we're blasting to the upside. There's still elevated volatility in the market. Look, we're already breaking down on SPY. I'm telling you, it's going to squeeze higher in SPY, and they're trying to send it down already. They're already doing it. But just note, we're coming into some resistance here in NVDA. We're coming into some resistance here in IWM. On SPX Gamma, just so you can see right now, we're above the Gamma flip, and we're back testing it right now. You see that right there? So we got the Gamma flip right here. They're trying to back test this Gamma flip, maybe another squeeze higher, and then the pullback, and then this bad boy right here, we go higher. Make sense? Bam, 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 just like that. But what you don't want to get caught in is what? A failure here, a failure under here, any of that kind of stuff down there, right? And we're back into the old regime, right? So just be conscious of this stuff here, conscious of where we are, if we're going to go higher or not, that kind of stuff. Just a heads up to you there. We'll go back to the main screen again. All right, Joe. Sorry to interrupt you, brother. I just want to give some pause here for people just so that they can.
We're not talking about actionable things, so
I'm trying to buy down here. I don't care if we squeeze up or not. Let me say one more thing to you guys out there. I'm not long for this. I'm not long for that. I don't care if we go up here. I want that pullback down here so I can buy this right here. So if you want to know out there, am I going to take along? Yeah, down here. That's where I'm taking along, right there.
Yeah.
Wherever that fucking hourly trigger is. Right. Tell them that too, Joe. Tell them what you tell people in the Discord and in the community about that hourly trigger, and what do you say to people? You say, is the price above the hourly trigger, and is the hourly trigger above the daily trigger? Or something like that. You say. What do you tell people?
I let those triggers tell me where we are in the market. I don't listen to anything else. I love to buy the most advantageous possible moments, like pull-ups above the hourly trigger, back test and ride. I buy there.
It's a nice place. Comfortable, isn't it?
The hourly trigger. It's so much more comfortable. And I don't need to be right all the time. And I don't need to take every trade.
You don't have to be right every time, do you? Because you're right enough.
Right. I want to be right 7 out of 10 times. And I want to take trades where I have a high likelihood of success. I like Cap's used call lot. That's my favorite place to buy. So I like to buy when we have meaningful bounces. I would wait meaningful crosses. Most of the time, I'm not exposed I'm not got friction in the market. I'm in and I'm out before everybody else because I don't need all of it. I don't need bags. How many times do you really hit, 300% gains versus how many times if you took 30% gains, you'd be at 300% with a lot less risk. So,
I took a big L yesterday. I was slamming the buy button and I was taking L's, and people are like, why are you doing this? And I'm like, this is the last chance for bulls here. Like, this is the spot to buy, even if it fails. And I failed, and I was losing a fuck ton of money.
You took the calculated risk.
It was a calculated risk.
You take the calculated risk.
Yep. And even if it was a loser, it was the place to. If you were going to take the trade, that was the place, or low. It was either there or way down at the fucking bottom. So, you could either not take the trade, but if there was a trade to take, it was one of the places.
A good thing to do for those of you out there that have the Pro Trader account, and I would encourage you to do this. Go to your chart turn, go, or open another platform. Don't open TradingView. Open something else and look at SPY on like a 5-minute or a 15-minute like chart set up with candles, and just look at the moves without the triggers and see where you would go. Like, what would you do here? Then turn on the triggers on TradingView and see if you would have done the same thing, being able to see the positioning relative to the 5-minute or the 1-minute or the hourly or the daily or the weekly. Like, see if that changes your opinion.
It's like the hidden hand
Tool for me.
It's the hidden fucking hand. I feel
Yeah,
like a traditional chartist or whatever. It's the hidden hand that you don't
shows-
see.
Sure.
Either up or
'Cause, like,
down
I'll
doesn't
be in the
matter,
middle
right?
of what I think is a bullish flag, and then but you see that it's doing
The hourly
it's
fucking
making a
trigger is
bullish
coming down into
flag.
that fucking that bull flag, and it's gonna slam it down the depths of hell, right?
Or I keep it keeps bumping its head into the hourly trigger.
Yeah.
And it can't break above, and you're like, oh, it's a flag. It's not a damn flag. It's distribution going into a drop.
That's right.
But you see it when you look at it relative to those tools. So I gut check myself, and anytime I think, well, I'm going to take a long here, I'm like, wait a minute, let me go turn these on. And I look at it again, and I'm like, well, I ain't touching that.
I ain't touching that fucking thing.
So you should definitely do that. If you don't have the triggers, I would encourage you to come and ask Jim to show you where it is.
You know what we should do? We should do a logo. We should do a T-shirt. And what I've been told is if I take a meme and change it like 30%, you can take it and use it. That's what I've been told. I don't know if I'm wrong on that or not, but I've had some IP guys tell me that if you change a meme like 30%, you can use it. So what I was thinking of doing, tell me if you think this is cool, but you know that chart where they show the traditional, like here's a bull flag, here's a bear flag, and then it fails on each one of these traditional setups. Take that meme and then put the triggers on with the traditional setups to show why they fail. Like when traditional setups fail, why are they failing? It's typically negative or positive momentum that's hidden, right? Usually.
Sure, because you can't see it. It's completely hidden. Price action is not the only thing, right?
Mm-hmm. We got to do that. We got to do that T-shirt. I think that'd be a cool T-shirt.
That would be good.
I need somebody to do fucking merch. Something that designer. Let them do it.
We got to get the logo.
Yeah, we're almost done with the logo, aren't we?
That's pasta.
Where's Bork? Is he coming on the fucking show or no? Have we ever had Bork on the show? Where the fuck is Bork? I sent Bork a link to join us on DMs and Twitter.
He's like actually working.
Is he actually fucking working?
Yeah.
He just said hell no. Have we ever had him on the show? I want people want to know him, his voice. I'm not going to drill him or anything. I'm not going to ask him anything other than like, hey, how are you? How's the new house?
I know, right? Bork's living large.
He's terrified to be on stream. What?
Oh, come on, Bork.
That's what he's saying in the Discord right now. He's handsome. If you guys don't know, Bork in real life is like, he's a good-looking guy. He's as good-looking as David AMS. Like, they're handsome. Like, he would be great, like...
and he's witty. He's funny as shit, too.
He's fucking funny as fuck.
Yeah.
He's funny as fuck, and he's smart as all hell. He's so fast.
Yeah, like, those like memes where it's like, this is my quant. Like, I would put a picture of Bork up and be like, yeah, this is my quant.
Hold on, Binky says he'll come on too. Dude, Bork, come on the stream for like 2 seconds and say hello. Binky, what is your fucking handle on Twitter? Hold on, let's see if we can get some of these guys on right now. David AMS too. Where the hell is he? Well, let's see if we can get. I sent the link, I think, to Bork, David AMS, and you. And hold on, Binky just said, "What's Binky's handle? Twitter handle?" I'm just gonna send it to. I'm just gonna send. Oh wait a minute, who's here? Somebody here? Who's here? Oh shit, he's here. Bork is here right now. Say something, Bork.
Shit. What's up, McGork?
Hello? Can you hear me?
I can hear you. Say something. Speak up. Did we lose Bork or no? Bork, say test 1, 2, 3, 4.
Oh no.
There we go. I had to switch microphones. Sorry.
Ooh, sexy voice.
Sex
There it
1, 2,
is.
3, 4?
Yes. All 4, please. For me, thanks.
Oh, I just
What's
sent
up,
a link to
Bork?
Binky on his DM and Discord. So Bork, this is if any of you don't know who Bork is, he's an administrator for the Discord. Super smart guy, and you're an old school game developer, aren't you? Introduce yourself, Bork.
You said you weren't going to drill me. I just wanted to say hello.
You don't say about the market. Just introduce yourself. Like, are you from an old school gamer? What's up?
Yeah, old school gamer. I worked for Blizzard back in, what was it, 2018 for a few years. And then when Activision bought them, I decided to bail because that was corporate taking over what was basically an indie company. And it grew so big that it became, the corpos took over. So the vibe changed, so I left. Which seems like I left at a good time because I think y'all might know there were some scandals after I had left.
Yep.
Were you responsible for any of those?
Oh, no. Absolutely not. I wasn't even in that office.
What are I'm just say hi. Come on the show and say hi. Introduce yourself. Let me ask you a quick question here, okay? Both of you. I'm gonna ask you both a quick question. Now it's okay to be wrong. Do you think? I'm gonna ask you both here, just off the top of your head. Do you think that the Fed rate decision when Jerome is done today? Do you think the market will, at the end of the day, will it be down or up? You don't have to do any rocket science here.
I take flat.
Yeah, flat works too. I think that's where I think it's going to be a non-event myself personally, but
Yep.
Yeah,
I choose flat.
Flat down. I see flat or down. I still feel like we're well due for some real down, but I doubt this is the catalyst for it.
so you're all bared up there. You got some
Eventually.
fur growing.
I mean, we've got. I want to see some like monthly, quarterly, like long-term tests. I want 400 eventually.
Ooh,
I want to buy that dip.
You want to buy that dip? All right. I like that dip too
don't think we
personally.
Soon.
I don't know that we get it
we
though.
can get there unless people are positioned otherwise.
What do you? So you both think flat or down, right? Is that what you're saying?
I'm flat.
You're flat.
Yeah.
Bork
I'm flat.
wants down for a dip.
I'm taking one side of this. It's flat. And I just say that because, if you got a lot of people in calls and puts, then the best way to rip everyone off is to go to the side.
And we just had Binky join us just now as well. He's here in the chat. So we've got Binky. He's been kicking it. He's been killing it with David AMS inside the Discord. David's rocking it, banging it out every night, and then into the early morning hour. He's in a way different time zone. He's probably sleeping right now. It's like 12:38. I think it's like 8 or 9 p.m. where he is right now. But Binky steps in to help out, right? When David AMS is unavailable in the daytime or early, late night hours, or when he's on vacation, and Binky's been banging it out inside the Discord. He's with us right now, too. Binky, do you want to introduce yourself really quickly and say hello? Binky, it says here that you're on mute, maybe? Are you muted? His microphone might not be working. Binky, on your end, in the bottom center of your screen, you can click on audio settings. There's a little up arrow, like a caret. It's also known as. You can click on that and pick your microphone that you're using and your audio that you're hearing. So maybe I'll type it to you. You might not be able to hear me either. I'm gonna open a chat for Binky. Open the audio caret and select audio sources. So let's see if Binky's big. It looks like Binky's here, but he's not. His mic isn't set up for the chat. Bork.
Yeah, I had to let my browser was blocking permissions initially. It was using the wrong microphone and blocking my real one, so I had to tell it that it was okay.
Yeah, that's the other thing that happens, right? From the browser side, it blocks too.
Because
or even the computer side and browser side can do both, right?
Mm.
Let me ask you, Bork. Let me ask you a question. What is your you always talk. I know that you always have praise for the community in Discord. What do you think about our Discord community?
Oh, I love it. It's been really fun. I like that the group isn't, massive and unmanageable. So the people that want to be heard and can talk, it's a small enough group of people that you can get real answers real fast, and the conversation's been really fun. So
do you feel like you learn inside that? I feel like I learn in the Discord too, even though it's like our Discord. I always feel like I learn a ton in there myself. I don't feel bad asking people, what are your thoughts on this, or what are your thoughts on that?
Yeah, I mean, you can see me hashing stuff out. This was yesterday or the day before. I had in the long-term holdings where I was excited about this SPYI stock, and I talked to Donut about it and realized that it wasn't at all what I thought it was. So after I had recommended it to people, I came back and stepped back and like, wait a second, it's not what I thought it was. Like, still kind of a cool thing, but not at all what I thought it was, and I'm backing away from it. My bad. So I mean,
reasonably appropriate for like my dad, who is retiring and looking for tax solutions to punt returns to the future. But yes, not for a young man like you who's virile and planning to continue to, try and chase this paper for another couple decades.
Yeah, it's perfect for in-game retirement income.
Looks like Binky rejoined us. Binky, you want to just do a mic check really quick and see if we can hear you?
I can talk, and you can hear me? Check, 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 check.
We hear you, brother. How you doing?
I'm doing good, man.
Are you, I'm assuming that people in the Discord right now and in the show have never heard all of us together, have they?
I don't think so, man. I think it's the first time.
That's what I think. I think it's the first time for all of us. If you're in the Discord right now, do you have any questions for any of these guys here? We're all together. Should we try to get John L or David? David might be off doing something right now. Let me check with David and see if I can send him a DM. If you have any questions for us in real time, we're all here. This is the time to do it. And Binky, you want to introduce yourself? How about you tell us how you got started, when you got started in trading, and maybe a brief history of your trading career?
Yeah, so I'm an AI chatbot, and I started back in the Jimmy Bieri days, and I am in several trading discords, and I've known Cap for a while, and I'm basically in the middle of transitioning into kind of a retirement vibe, and so I tend to be almost always short the market, which is one of the reasons why people have a bear connotation around my name. Plus, the name used to be Frank the Bear 666, but that was too much of a tell for the other people taking the other side of my trades when I was trading SPY. So I'm going through the catharsis of becoming something different. And shout out just to a couple of people in the YouTube chat, and I can't see it right now. The conflict I had was because I was using one of the experimental Discord functions and trying to merge YouTube and Windows, and neither one of them liked that. But shout out to Jimmy B, who correctly is pointing out that The bond guys at some point here are going to decide that they want to lock in these rates before they all get cut. And you're going to see some kind of a recheck. And I'm all on the whole bull for longer thing. But the reason I use the high table narrative thing is, and I am a registered independent, and you and I have talked about this. We're brothers from another mother. I have been in both parties, but I can tell you with moral certitude that all of the narrative right now is the current high table trying to make sure that they demonstrate, all of the flock demonstrates fealty. And that's why I use that analogy. And I don't care whether you agree with that or disagree with that. I don't care if you're Muslim. I don't care if you're black. I don't care if you're pro-Trump. I don't care if you're pro-Kamala. I think it's all weird right now. And I'm trying to help elucidate the clarity because I'm on Team Evergreen for all of us for as long as I can participate. But I get a lot of really interesting phone calls and people that have subscribed over the past 3 weeks to me on that YouTube channel. I really appreciate the love and support. I can tell you, and you can see yourself in the YouTube, that there are now more bots infecting that feed, and Binky G may be going away to get rebranded because YouTube doesn't know what to do with a live video post that's created for friends and family that's 2 hours long. They don't want to pitch it out to the masses. And I have other channels that are automated, and I use this one, the Binky G, to do experiments on what the YouTube algorithm is doing. So, little insider tip for the people in the stream. I'm currently getting blue checked by Twitter because I'm about to make a connection between that shit posting son of the beach Twitter handle, which you can conveniently never remember their cap, and that means the name is working, to whatever it's going to be. So make a comment.
I tried to search for it and add you in DMs, and I couldn't. It wouldn't bring you up.
Yeah, baby.
And it wouldn't bring up Joe today either for me as well. I typed in Joe's name, and it wouldn't show me his handle.
Yeah. So the interesting thing about that, and I don't want to betray anybody's confidence, but the reason why every moderator in the Discord makes sure that they don't DM you first is every one of us that's moderating in the chat gets between 250 and 300 friend requests a day. From my experience, and maybe some lonely guys are only getting 1 or 2, but they don't explicitly DM anybody, and it's not because they're unfriendly and unapproachable. It's because every 3 or 4 days, I purge every incoming request.
I tend not to accept friends in Discord for that same reason. I try to talk to someone on like the general chats first, and then I'll accept their friend request. But if like an unsolicited DM or a friend request, I don't respond because of that same thing, because of those bots. Not in our Discord, just Discord in general.
Real quick, that's why we have that support ticket system in our Discord channel. So even if you don't have, like, if your membership, something happens to your membership or something, you can still join the Discord and you'll still see the support ticket button.
That's right.
If you need to contact us, that's a secure way to do that, to make sure you're talking to us.
Yeah, if you ever want to become my friend on Discord, you would definitely want to make a support ticket, or at least speak to me in public, like a public channel if you're in there, and be like, hey, Cap, can we be friends? Because I don't say yes to any friend requests that are either I haven't solicited or you haven't solicited, or someone else hasn't solicited together. So, Binky, what do you think about this? What do you think about today's? I asked Joe and Bork what they thought about the rate decision today. Do you have any insights or thoughts? Or I'm not holding you to this or that is going to happen. Don't feel like you have to be right or anything either. I'm wrong on the fucking show all the time. So,
dude, I count on being wrong. I love that you ask everybody for input too, because one of the things that was a very constructive discussion in our Discord stream and our Discord chat was, what's the difference between discretionary and systemic CTAs? And I don't mean to overstate this, but I have interesting phone call all the time with discretionary CTA traders. And they're in the left coast, they're in the right coast, they're in Australia, they're in Japan. And when I ping them, there's no impressed or implied warranty, and nothing is ever going to defeat sentiment narratives in the news. But I will tell you, like I said in the Discord over the past 2 weeks, this is a potential, and I'm going to use the phrase again, and I mentioned this to you before, vortex bond rally, which people that have been around for a while will start doing searches for what that means, and what it means to everything you read on the internet is different than what it means for me. But that is why I have said, and people in the Discord will remember, I said that I had weekly put spreads last week. I said that I was adding instead of closing them early, and I always close early. I like what Joe Donut said. I want 10% reliably every time. I aspire to be as good as David AMS at being a baller and holding on to my positions, because you will grow real wealth that way. However, when you've got a literal 5-year timeline and you're already trading much lower SPY prices, there's no reason to take unnecessary risk. And why would a guy that is looking at retirement in maybe 5 to 7 years with a time box be scalping a 15-second chart on NQ? Boy, that sounds stupid.
Yes, it does. Oh my God.
So that might be the last reason why I talk about the CTAs. But the interesting thing about a bond vortex, and the reason why I believe that Han Solo, the bond trader, might be right, is the Bank of Japan is trying to figure out what the aggressive interest rate is. And they are trying to figure out, hypothetically, if I was not just doing GPTs to make all this shit up, they're trying to figure out, hypothetically, how much to tell Jerome Powell, just like Australia did last year, that they're not going to be buying a treasury issuance. And I believe that...
Talk about that USD AUD trade too, by the way, if you could.
Yeah. All right. So too long didn't read the version of that is that the Aussie market is an ally to the U.S. It's one of the reasons why the presence of the military from the Aussies in the Pacific War Games, where Anthony Stinkin' Blinken is hiding out, and thank you, David AMS, for pointing out that he was in Manila yesterday. But the reason why they're such a great ally of ours is because they help us keep the seas, and us being the U.S., safe from China. Now, I have friends in mainland China, and they think that the U.S. foreign policy is all fucked up, and they want me to long BABA. I love BABA here, but I can't buy real BABA. I'm buying ADR shares. So back to the Aussie thing. So every Australian bank trades in sync with the Canadian banks. And why is that? Anybody?
Say this again. I wasn't listening. I'll answer it. What's the question?
Yeah, I know. And you're doing 75 things, man. I love your ability to multitask. So every Australian bank is sensitive to what the U.S. does. They're also sensitive to what Canada does as a strategic trading partner. And why is that? And I'll go ahead and answer my own question. Because just like Mexico, Canada and Mexico are strategic partners with us.
Well, yeah, we have the Plaza Accords too, right? The idea of the Plaza Accords was that the standard currency would be the dollar, and that all other countries would give fealty to that, right? That if you're a signer on that, right? Is that right or wrong?
Absolutely.
And that includes Japan, Australia, Canada, B of E. Do you think that they make moves before the U.S. does, or do you think they're trying to signal? Is that what you're implying here, that they're trying to send signals to the U.S. Fed, or they all get together, right?
Yes.
And make these decisions before we ever get there, right? Is that true or no?
That's true, but they surprise each other all the time. And I'll just put the Wayback Machine on, and I'll remind everybody that the Bank of England, and I can't remember her name, decided to change the credit rates, and she wound up becoming the prime minister because she kind of screwed that up. Does everybody remember that one?
No.
Very good. She wasn't in office long because they immediately corrected. So everybody who is politic agnostic is a friend in my eyes, because what we're always looking for, and I'm in several different discords, is the difference between signal and noise. And I have several good friends that trade the markets in Frankfurt. Did you know there's a market in Frankfurt?
Yes, I track it at nighttime for future price in the U.S. markets. I track Frankfurt for like Tesla and Apple and all big tech names every night. I don't do it. I'm not as awake as I used, or I'm not spending as much time at nighttime awake watching the Frankfurt markets, but I used to pay close attention to them.
Very good, and that's smart money. I also have friends that are trading the Shanghai markets, and I've got a little monologue here, but the bottom line there is the Shanghai markets is one of the largest gold exchanges in the world. And if you happen to be an enemy of the U.S. or NATO, and you're hoarding gold like every BRICS country, then you would put those gold purchases and do that gold hoarding off exchange, so it wouldn't be visible. Now, why do I call Yellen a felon? Because she has been tragically unqualified since 2010 to 2011, 2012, when she fucked up the California Fed to manage money. Jay Powell has been direct and clear, but Yellen on occasion screws up the messaging and is overly insensitive to what her trading partners are telling her. I'll pause for dramatic effect.
Do you dramatic effect? Are you let's go. I feel like I'm talking to a politician right now. Are we going up, down, or flat on the FOMC today, Binky?
We're going down, bro, but maybe not for a couple of days. We're going down, bro, but maybe not for a couple of days.
That's what I'm saying.
We need that nonsense farm payroll number from Friday.
Yeah, we still have data too, right? We still have reports and fucking data still coming out into the weekend.
So guess who can't react to that 2 p.m. news drop?
Who?
The Asian markets, bub.
Yeah, that's true too. Did we back test last night or not, Binky?
Not enough for me, man, but you already know where my targets are. It's the 5.
Yes, give your ultimate targets for a bottom to buy.
Well, I like where we, as we talked yesterday, I liked where we did the 5 touch along that liquidity line where we closed yesterday. That was great to see, and that was why, from my perspective, I did the lotto overnight, and I was happy to close that early when I woke up. And honestly, I hope we don't get back down there. And I'm going to put 2 date ranges in your head, and one is April 5th, when we had the last turn based on confidence, and the other one was May 31st, before we started to launch the rocket into the moon. And 2 other real quick comments, because I got DMs on it this morning. I love NVIDIA. NVIDIA is set to catapult this, along with the bond rally, into the election season with an all-time high, with the high table grinning so that they can dump on Trump if he loses the recession that they've been trying to say is not there, but everybody who trades real estate in multiple zip codes knows is already here. And later in the week, or maybe even today, I'll post the rest of the 3 of 5 Binky G updates, and you'll hear what I heard over the past week and a half.
So again, so you think we're flat, or you think that we're flat after FOMC today? It's non-events. Do you think he changes his language? Do you think he's not changing his language? You think we're down after he comes out, or what?
I think we're in a range after he comes out. and both sides will be tested. They will grind theta, and the tell for me will be what wording changes he actually physically puts in the thing, and then how the Pacific market reacts to that. My outside comment is, don't be surprised if you don't get a 0.25 cut from the mangy moose and Jackson Hole. And
that's a good point.
That would be him seemingly dovish, but we all know, because Joe described it earlier perfectly, that might mark a local near-term top because that rate change has a lag effect that aligns post-election but prior to January.
Mm-hmm.
That would be the positive surprise.
That's what Joe was talking about earlier too, alluding to what you're talking about right now. Talk about that in more depth.
Okay, so
if you can, it's hard to put into words. I know I have it written down here, but to read to people, but it's hard for me to simplify it for people to understand. When rates are, when we get cuts, how are those priced in before that they happen, and when they take an effect down the road, their impact on the bond market, cash market, and all that kind of stuff.
Yeah. Okay. So there are three heads on this Hydra. One is they cut rates. Now the U.S. dollar is competing with every other foreign currency for investment. They will do everything they can to make sure, because they've got treasury issuance to run off, that U.S. T-bill auctions continue to be successful. That inspires confidence in the longer rate. The second head of that Hydra is that is also a sign that Jay Powell and the guys that don't disclose everything that they read is looking at the inflation data, and they're concerned. And my concern, and I call it the BLSBS because it's coming from the talking head from the high table who worked for Larry the Thinkster in Crack Rock.
We need John H. on the show right now.
Well, yeah. Hey, replace me with him, man. That dude, he's entertaining. I just talk.
I always love John H. how he fucking changes everybody's name out there.
Well, you know, I don't want to sniper out the fucking window either. Pardon me for using a profanity there. But so the dance there is that the high table with Larry Fink's people from BlackRock, who is now the acting person that left, they are motivated to make as dovish a policy as possible. And what they don't tell you that the BLS will actually cop to months later, because they always do, is that the GDP, when you adjust it for inflation, doesn't mean that the companies are growing. The jobs that are added, when it's 700K government jobs, those aren't funded by new innovations in green technology. They're paid for by taxpayers.
Did you see that yesterday at JOLTS?
I haven't even looked at it, Cap. I was just forecasting the future.
Oh, they were like some of the job, or a bunch of the jobs were government jobs that rounded out JOLTS.
Very good. And then the hours worked is the other one that I track, which is the hours work have decreased in the labor market. And that's also because there are millennials now and boomers that are picking up side jobs. And part of my Vegas casino discussion at lunch, and I'm sorry for missing that section of the stream, was I participate every once in a while in C-round funding for interesting opportunities. And those guys are realizing that the sands have shifted a little bit. So all that to say, the third head of that Hydra is, where do you put the new money from Friday and actually tomorrow? But I'm not going to be trading tomorrow because of tracking some family members' medical situations. But on Friday, they're going to get real money inflows into an oversold RSP, or is it the new low of the RSP, which is the equal weighted SPX? And then they're going to push as much money into the top 1,000 of the Russell 2000 small caps that actually have viable growth.
Are you, what was your bottom target to buy into NASDAQ?
I actually like the April 5th. You called the turn
that low, right?
Yeah, man. And that's a local low that actually presents, in my mind, a great wide trading range, but they are continuing to run operations on every one of those trading desks that I mentioned earlier overnight to kick the shit out of the VIX and the VXX, which is the technical trading arm of the VIX. And you could tell, and we traded it over the last 2 weeks, that there was a rickety, chitty, bang, bang jalopy going into the euro close because they were doing everything they could to not show the real move.
Do you think, so you're saying today should be up, or you're saying that today should be up and flat and then we'll come back down later? Is that what you're saying?
No, I actually think the move will be revealed preliminarily at the prep.
Oh, the Asian Open?
Yes, sir. Yes, sir. So short-term trades, I trade the ranges like we've talked about many times, and David AMS has great levels. We don't talk about him much, but I know you're a fan. Derek Coatney has
I love
great
Derek.
levels. Yep. And there's several other people that I follows on that Twitter profile that if they're Elliott Wave, you do your own due diligence to learn how Elliott Wave works. And the people that don't believe that Elliott Wave works, trust me, the CTAs that are computer driven know where those levels are.
That's what they trade mostly.
Yeah, and they will trade against you at those levels.
Yeah, they will.
You will hold on too long because you don't like the 30% profit. You want the 40%. Never be in a hurry to lose money.
What would you, if you had a takeaway for young investors or traders, Binky? I know you've been in the market since at least the early 2000s, right? Somewhere, or even early before that, maybe. I think you said that you were in the 90s or something. But if you had any sage wisdom to impart on a young investor or trader, what would it be?
Know what you own. And I mean that coming from a loving place that thought that Blockbuster Video with the cash flow was going to be a forever thing until, oh shit, Netflix. I also was long Cisco and wound up holding that pig for a long time. And Bork described it very well for the millennials. And I happen to know more than a few. And one of the reasons why I have an affinity for younger traders, and it doesn't matter whether you're 55 or 25, if you're genuinely interested in learning, what I've learned is with about 100 years of experience, everything triggers a response. So the stock market melts up from the 90s, which has now conveniently fallen off the 20-year charts. Man, that sounds familiar.
Doesn't it?
Now is off the radar for the people that are actually tracking this stuff. And what they don't realize is there will be bag holders in the S&P 500. You don't want to micromanage that probably, other than your dividend aristocrats, your dividend champions, your dividend up-and-comers. I wish that Tesla would pay a dividend, but like Joe Donut was describing, I can't buy and hold that the same way. So people ask me what my price target is on NVIDIA. I'm backing up the truck at 50 because I shorted the damn thing at 200.
Yeah, you were saying 50, you'd like to buy it then, right? Right at $50?
Yep.
I think you were saying that last night.
And I'm adding to a lower cost basis there, but I'm recovering the fact that I shorted it until I realized that was setting up to be a mean parabolic move. Now, one other comment about that, because I know a lot of developers and the people that have been getting laid off from tech, it isn't because AI is replacing them with some chat bots. It's because AI is replacing development teams. And all they have to do is get you, the consumer, to be happy with just as many Windows defects as they did before, and not pay the whole team to actually do the code reviews. And they'll just get you to pay for that joy in production. And that's CrowdStrike. And I love CrowdStrike. I like it at 180.
Oh, you still like CrowdStrike?
At 180. You know why? It's like Palantir, man. It's the telephone line. It's the AT&T of the 80s. Do I like AT&T anymore? No. That's why I say know what you own. Because some good companies have shitty management transitions, and then they have nonsense peddlers that come in as a marketing effort, and they don't realize that they're not telling you the whole truth, but they stopped having the technical reviews with their technical staff, and now they're just having marketing campaign things and talking to YouTube influencers to get ad revenue.
We were talking last night. I was talking with Joe about CrowdStrike. Joe, you want to chime in on your thoughts on CrowdStrike?
That was me that talked. If you
No, that was me too.
Do you guys have insight on this stuff? You guys, I think Bork has some insight on this as well. I'm not going to say what he does for work, but I'm publicly here. But
I think you should be.
Bork is definitely involved in this kind of stuff, and Joe had some insight last night as well on CrowdStrike. And I'm fascinated that Binky brought up ATT, and like just that after hearing Joe speak last night, and then Binky just talk about ATT, and it's like flashing back to CrowdStrike is like that, isn't they? They're like Ma Bell kind of, and they just got torched, right? Joe, you two, either one of you, whoever wants to speak first on your insights, tying into what Binky just said, please.
I wouldn't mind hearing what Bork has to say. So, what you got, Bork? What you got on CrowdStrike?
I've just seen in my own personal anecdotal experience that staff is a huge expense for companies. People are expensive, and so I've been seeing a lot of companies gutting their staff to try to stay afloat. And like Binky said, you got your staff, cut your developers, and now you're running a company bare bones, but still selling your product, still pushing forward as if you have this massive development team. Kind of like what X has done. They're like, well, the company's not was functioning with 45,000 employees, and now it's got 2,000 or whatever the numbers are, and it's still doing just fine. Yeah, things can run just fine for a long time. People set things up to work for a long time until they don't. And then you start having problems like CrowdStrike, that things like that could be caught with larger teams and more free time to nitpick things. But when you're running a bare bones team like that, you run the risk of overlooking things and making mistakes at the cost, just to save some money, to put pockets in leadership's pockets or CEOs or investors.
Well, or like I've dealt with plenty of companies that do what they call the Christmas massacre, where they'll lay people off before Thanksgiving. They'll have an amazing quarter for they'll close the year and the quarter for Q4 out really high. They'll realize all the gains of all the layoffs in that year, and then then they'll be looking come April to say, oh no, our pipeline's empty. What happened? And it's because every year at Thanksgiving we lay people off. We realize all these gains because we can coast for a couple quarters. But
it's risky, short-sighted leadership is what it is, and it can work out. When it works, and you make a bunch of money, and then there are no repercussions. But when it doesn't work out, you can implode.
Right, exactly. But my biggest concern about CrowdStrike, and what I was talking to Jim about, is I expected them to have like a pull down and then a bounce. And I had one of the most prolific investors I know, is my father, call me and say, when do we go long CrowdStrike? Because it's gone down so much. And I said, well, let's see how many Fortune 500 companies have clear and easily calculable losses due to CrowdStrike's mistakes. And I was like, okay, almost every single Fortune 500 and definitely every Fortune 100 company in the world has calculable losses that they can go to CrowdStrike and say, you caused us this many damages.
That's a
and
bingo.
I said, yeah. And I said, so that is CrowdStrike. I told Jim, I said, I wouldn't be surprised if CrowdStrike has already hit their all-time high for the history of their entire company.
Yeah, that's right.
And that this company, CrowdStrike, is going to get punished if they stay independent, and that no one buys their assets. they could get punished for a decade in court.
That's
before
like
they're done.
that is just like these fucking phone companies, right? Over the years or
Yeah,
decades.
they're
This is
just
what
gonna
Big
end
U's talking about ATT earlier.
Bingo.
Because CrowdStrike made a fatal mistake. They damaged a billion endpoints and hurt thousands of large publicly traded companies. And companies like VeriSign couldn't process payments for the better part of at least a full day. That's billions of dollars in transactions. Delta literally is in trouble with the Federal Aviation Commission right now over the way they had to handle all the people that got delayed. I went through the airports 5 days, 6 days after this, and there were still people sleeping in the terminals, train terminals, between the terminals in the train
Dude,
walkways. There were people.
My fucking kid, my daughter had to get a different flight with Southwest Airlines. We dropped it.
Right.
The only airline that was fucking slammed was Southwest. Delta, we got fucked by Delta.
Yeah. And so there were still people sleeping in the airports. And Delta has already filed a lawsuit for hundreds of millions of dollars in losses against CrowdStrike. And in the lawsuit, they clearly state that this isn't the end. This is just the beginning of the ask, because they haven't finished counting the beans that they're going to come after CrowdStrike for. And Delta is one of thousands of companies that are going to be coming after CrowdStrike for between millions, hundreds of millions, maybe billions of dollars worth of damages. And if they settle one, they admit and they set a precedent for all the ones that'll come after it. If they get found guilty in one of these lawsuits, that will set the precedent for all of the lawsuits that will come after it. And literally, it is so easy to calculate the losses, because they just go back and go, see, this is what we make in a day, and this is how many days CrowdStrike put my entire corporation down. And that's just loss of revenue, let alone the cost involved with having a physical person go to hundreds of millions of computers and have to go through a procedure to get them to recover for the ones that weren't recoverable remotely. So, I mean, I could be wrong. I'm ready to be wrong, but I really believe CrowdStrike is a dead cat bounces, but ultimately CrowdStrike has massive people out there that would love to take over their business without having to do any of the work. There's Microsoft in the wings that, could literally buy out their assets and take on their job. And they've got lots of people and they've got lots of customers. They would love it. There's so many security companies out there that would love to grow through acquisition. And if they get beat up and they start losing lawsuits, or even just the announcing of lawsuits. I mean, CrowdStrike went down big when Delta announced their lawsuit this week. Like they had it was the first shoe to drop, and it's just one, right? Like just one. We haven't dealt with, I went to an AutoZone and they literally couldn't sell me anything. I went to the USPS post office. They couldn't take my mail from me. Like, I mean, everybody was affected by this. And every single one of them that has in-house lawyers is going to file a lawsuit, especially when some people start becoming successful in their lawsuits. They're going to go, well, we want a piece of that. And it could take a decade. So I'm on the side of CrowdStrike has an endless pummeling, looks like Intel for 20 years with the down.
Yeah.
And the difference is there's people out there that could, unlike with Intel, where no one wanted to buy it, there's people out there that say, oh man, yeah, we can buy that. That's useful. They've got a lot of customers.
Man,
and I was also saying, my last negative point was, imagine you're a CFO and you've got a CEO who is not tech savvy or is tech savvy as any CEO would be, and you're the CIO and you're about to do a new contract for your managed security services, and that that your CEO, the only thing they've ever read about CrowdStrike is the fact that all of their friends at the club are suing them. And then do you have the balls to go to your CEO and go, hey, look, we're going to renew with CrowdStrike? No, because he won't even listen to you long enough for you to explain why CrowdStrike's still a really great option for security. All he's going to know is Chip, the CEO of Caterpillar, told him at the club that, by the way, we're suing CrowdStrike because they took our business out for 3 days. You know what I mean? Do you have the balls to say, yeah, let's sign back up with CrowdStrike? It's been great. You know, your
So-
CEO's going to look at you and go, why would I listen to you? You're an idiot.
Hey, I love that bear case from Joe. So, Bork, what's your bull case for CrowdStrike?
I don't know if I have one. I kind of agree with Joe. I think that there are other software companies that can step in and take their place. It's
I agree.
Gets
That's the
dismantled
danger
over
of as a
time, right?
service, right?
yeah, they're
Yeah,
not
you're
unique.
as a
Their brand
service.
is tarnished.
Yeah. And they're a security brand, right? They're supposed to keep bad actors from being able to do exactly what they did by
Yeah.
accident. Like that's their whole business. Their whole business case is we provide this perfect end-to-end security. And yet they're the ones that implemented exactly what in their wet dream an attacker would do to these Fortune 500 companies, right? They implemented it. Hey, well, what if we could completely disrupt your operations for an
Yeah.
undetermined amount of time? Like what?
I think you had it right when you first started talking. You said a phrase. They made a fatal mistake, and I think that that's true. That
Mhm.
they're
Fatal mistake. I'm with that. I'm with that
they'll
too.
slowly die. It'll take a lot of time.
Yep.
It'll take a lot of litigation, but I think
That's why I
they are
said
still-
10 years. I mean, this could drag out forever. I mean, there are people in contracts they can't get out of with
That's right.
CrowdStrike for years.
That's
But
right.
when that renewal comes up, this is one of those like moments. There will be like case studies in colleges. This is a historic mistake. And so it's not going to go away. So when that contract comes up for renewal, your CEO may not know even the names of the tools you use in your business, but when they have to sign the multi-million-dollar contract for renewing the security suite provider and they see that name, they'll remember that name.
Hey, I love that description, and both of you guys actually nailed it 100%. The reason I brought that ticker up as a know what you own, I'll lead you with two questions. One is, and don't answer these questions. I'm going to answer because I like to hear myself talk. One question is, did that development team get a learning opportunity, or did they get terminated for violating service agreements for hundreds of companies?
Oh,
And
that's possible. Yeah.
And the interesting thing is, did they get recruited by Microsoft that shares that responsibility?
Right.
Or did the Microsoft team have the hold harmless in every one of their service level agreements that I used to review routinely to find out what the wiggle words were? And we actually won't know until the earnings, I think around, what is it, the third or whenever Crowd reports, what the legal team
that'll be a rough one.
puts in. That legal team will probably take over that call and go through every exclusionary, discretionary term in their TOS. And I invite everybody here to do that too, because my buy on CrowdStrike at 180 might be after I short the fucking thing.
Right. There's still so much yet to be disclosed about this. And as you said, just a lot of discovery will happen through the lawsuits as they get filed. So far, the only one of large scope that I've heard of is Delta, which honestly was a little early because we still, I mean, there's like say you're still counting the cost, right? So we've got a long way to go for all of the bad news to come out about what really went down. And the depths to which it could get ugly are nearly infinite.
Okay, so I've got to interrupt really quickly here, everybody. So if you're in the Discord and you have a question, I asked this earlier, but I'm coming back to it again. I apologize for not taking those questions. So it's right now it's 1:23 in the afternoon. We're going to spend just the next 7 minutes if you have anything you want to say or ask of these guys that are here right now. We're going to then transition from 1:30 to 2 p.m. into some prep for the FOMC rate decision. And then at 2 p.m., you're going to get the release. We have the news squawk, the guy, the Cheerio guy from London. And we also have financial juice to give us the rate decision, and then at 2:30 we're going to have the live stream here on the show for you with TNX, the dollar, Dixie, and probably S&P 500 with reaction and some and of course the live stream of Jerome Powell and which tie he wears and what he's going to say. So if you have any questions in the Discord that you want answered in the next 5 to 10 minutes here before we make this transition to this new scene for these guys for showing up today, we've got Binky here, we've got Joe Donut here, and we've got Bork here. David AMS says he's going to join us. He's in the middle of something right now, but he says he's going to try to join us later today. So we'll try to get David on the show later this afternoon. But if you have any questions, now is the time to ask. I'm sorry to have to ask a second time here. Let's see what they saying right now. Let me see what they're saying here. How do they prefer to be interacted with? Like David AMS, curious how to read his charts, his posts. He's not here at the moment. We're going to ask him. We'll have him explain time frame trading in a little bit. Question for Zoom chat. Geopol, do you factor that into your commodity? No, hold on. Let me see what they're saying here. But I think they're talking to other people here. Do you guys think that the enormous amount of time and energy into learning the stock market is worth it, or should I go write more songs? That's Goliath.
Hey, just a comment on Goliath. He's a great example of somebody who's got a banging music channel, and I'm not trying to put any haunting love on him, but the problem is that we're all creating AI music bots. Cap and I have been working on some too.
Yeah.
And, you get ripped off by DistroKid. You get ripped off doing indie releases, and I've been a fan of live local music for 100 years.
You're a musician too, right, Binky?
Damn it!
Oops, did I not tell people that or what?
You fucking guitar player. Damn, I just cussed again.
Yeah, Binky sends me some real. I don't know if we're going to talk about this publicly.
Nah, not yet.
So let's get one more time. So before we say goodbye to these guys, we've got Joe Harper saying flat. Bork, what are you saying? Up, down, or flat?
If I have to pick one, I'm going to say flat as well.
Okay. And Binky, what do you got?
I think we're flat into the news, and what you'll see is the reaction tonight.
You'll see. Oh, that's right. Good point. You'll see the reaction when the Asian markets open tonight, right?
Yes, sir. And one last comment for me. If I'm
and Han Solo said the same thing, right? He's a bond trader that's living in Japan, ex-Ranger. Yes. He was saying something similar, wasn't he?
Yep.
We should have him on the show at some point too, because he knows what the fuck he's talking about. And so you're saying flat, and then the real reaction this evening, right?
That's right. If it is not flat today and they don't crush the VIX, the plunge protection team is probably actively trying to unfuck themselves.
Do you think we trade both up and down into this decision? Do you think we go down here and slam down into that the whole move that took place here? That whole move's way fucking down here. It's that move from yesterday is down at 538.02. We erase that entire move. Or is it just like a pull down to the hourly and then up, or even possibly blood it all the way down, erase the move from yesterday, then swing it higher, or no, just flat?
Yeah, so here's the deal. After 1 p.m., I start looking at the SPX options for the rest of the week, and I was actually doing that. I have not had a chance to do that because I was on this other conference call. They were buying, and the they is interesting, SPX options, put options, deep in the money today to pin it.
Oof.
Now, I have not looked at what's been refreshed on volume for SPX, and I don't recommend any retail traders trade SPX. I use it like a radar thing for myself. But start looking, because we're getting prepped for new month inflows. Start looking at the SPX option chain for Thursday and Friday and into next week. The way that I put my weekly NQ put spreads on last week was, as we approach those highs, I started looking for cheap spreads to pile onto. And I'm not going to talk any more about that because it's a longer discussion, but the way you manage those spreads is critical. And you don't have to feel like you got to hold them forever, as you know, Cap. And you demonstrated live yesterday as you started to hedge your positions, which was freaking perfect. One last comment, and then I'm off. If I'm channeling negative energy, you're hearing that wrong. I like Pulp Fiction. And when they called the wolf, he was terse and direct and to the point because time is of the essence. And if you come into the Discord and you're a green box guy and you come into our neighborhood and you start shitting on the lawn without even checking what's in the suggestion box, you're going to get timed out. I'm curt because time is of the essence, and the time to live for these options positions is within seconds. And it's the difference of grabbing the bottom of a candle and the top of a candle. I don't want anybody trading their IRA account to that. That's different. And that's back to what Joe Donut talked about, which is know what you
I think we lost Binky.
know what your risk is and know what you want to tolerate.
Joe, or Bork, you want to say goodbye to everybody?
Goodbye to everybody.
Joe, you have any parting words for us today?
No, I don't know if I have any parting words. I've had a lot of words, but I definitely stick with my. I think we're flat.
You think we're flat? Binky, you're saying flat, and we'll find out in the Asian markets. I was just looking at the charts here, guys, and I'm looking at the charts right now, and I'm like, after what Binky was saying and what Joe said and Bork was saying, I'm looking at all this here, and I'm like, I don't want to buy shit unless we're down here, right? This is where I want to be buying, somewhere down in here. 542, 540, somewhere down in here at least. And we could even stretch that even lower, right? We can easily erase, come down here, stretch this, and that's the move up in here. So this used call lot at 540, 542, somewhere in there is where I'm interested in. I don't know if they squeeze this up on the rate decision here. I don't think we're flat. I think we trade lower. I'm going to change I think I said flat earlier, but I think that we trade this lower bound 542, 544, somewhere in here, and that's where the real dip buy is, 538, 540, somewhere in here. So I'd like to see that. I'd like to see that bloodbath down here. I don't know if we get as far down as 538, but like 542, I find to be an interesting place. And also that hourly trigger starts coming up here. You have a quick blast through the hourly trigger, and then we're higher again. The 30, the
backup for that.
What's that?
What does Bookmap look like at your 542?
I haven't looked. I should look. The velocity though is saying down. Hourly velocity is at least saying there's maybe a little pump left here, and then down, and then we're going back up. This down move is what I'm looking for to grab right here on Velo and the hourly Velo. I guess if I miss the trade and we just go up, so be it. But I think that's the safest trade, is waiting for that Velo to roll down, that hourly Velo. I think there's still room to squeeze here, but even with this blood right here, to squeeze up, but I still want to grab that second move down over here. So let's call it, I said 542, but yeah. Yeah, if we can get it down a little bit farther, like 545, 542, somewhere in there. Right down there is where I want to grab it. Right in there, 542. Call it 542.50 or something.
I want to be looking at calls with you out on the used lot.
Right? Right down in here, right?
That's it.
Somewhere right down in there.
Lightly used calls.
Lightly used calls.
Yeah, driven to church once a week by a little old lady.
How about you guys? Are you guys looking to buy a dip down there or no? The rest of you, Bork or Binky?
Yeah, I'll trade it overnight into tomorrow, and I probably won't be disclosing those on the Discord, but the reality is I got to finish wrapping up my end of month moves. Don't forget we got end of month window dressing.
We do.
They're going to decide where they want to pin it today. And guess who decides that? The high table.
Yeah, they do. We had Vol Signals on last week, and he was talking about how we should have went a certain direction, and someone came in and just slammed a fucking condor and pinned the fucking market into the bell. And they love doing that shit, don't they? For their other for underlying positioning.
Yeah, and that's one of the
and spreads, of course.
That's why I said earlier, just to connect the dots, you'll see the plunge protection team scrambling if we start to dump hard at 2 o'clock. That's my opinion.
Mm-hmm. I don't know what the spreads are right now. I should have checked. I haven't checked this week to see what the spreads are. They're all expiring today. Today, right? Yeah, today's 31st. And then we've got inflows coming in next week, right? I was looking for an entry. I was looking for an entry personally for the last trading day of August, or 28th, I think, for a long spread. And I haven't put it on yet either. I didn't take it yesterday. I wasn't prepared either for that after hours bullshit. Because I think I talked to you last night, Binky, and I said that was the bottom, right? Like that bottom tick in the after hours. They ran the fucking scam on Megatech yesterday between 4 and 4:15. I wish I was able to buy a spread down there yesterday, but I wasn't prepared to do it. I didn't have anything set up. I had set up a fucking second put spread yesterday. Never put that on. Didn't do that either. I'm like streaming and fucking trading zero dates and not fucking paying attention to the bigger picture.
And doing a great job, by the way. It's hard to create a fucking movie every day, Cap. You and I've talked about that.
Fucking A, man. Like sometimes I do wish I didn't stream. I just had my own trading going on. It's like.
You guys have no idea. Jim calls me at like midnight because he's finally done with all of his stuff, and he's like, "I want to talk to somebody that's not, not about
the goddamn market
or the." And he calls me, and I'm like, "Hello," and he's like, "Oh shit, you're asleep."
I know. I feel bad too, waking you up, because I'm like, I'm fucking up at 4 fucking a.m. and then I'm fucking all goddamn day. I need sleep. Like,
it's always the best. Like I get the call, and I'll say I answer it probably like 2/3 of the time.
You do. I appreciate it. I haven't had a drink in fucking forever, and I had a bourbon last night, and I'm like, I'm gonna call Binky. Fuck it, I'm calling Binky, and then I'm like, I'm gonna get on Twitter and shit on everybody because I know they're all awake for the BOJ. If they had any money in the market, they were awake for BOJ last night.
And I suggested that he start hydrating, and he did a good job because he's up.
I was up this morning.
No, he sounds all like chipper and shit. But yeah, it's the best because he'll call me up and be like, "I'm gonna go get some dinner," and I'm like, "Dude, it's like 11:30." It's like, "Yeah, I haven't had dinner."
Well, I had a fucking trade on. I had a trade that went from 22 to fucking 285. Like, I didn't come on the stream right away at 9:30 this morning because I was like, I need a moment here. I need a fucking moment to myself. But I was just, I don't know. I had that moment on last Friday too. Like Thursday, I had a huge trade on for Friday, and I got a nice payday from that. And I just I can't fucking stream. I need a break, the stress and the fucking all this stuff, and then my daughter and all this other nonsense I had to take care of. And I'm like, it's just too much. It's like too fucking much. I appreciate you guys answering those calls late night, by the way. I really do.
Absolutely.
All of
That's the best Jim. You want the best Jim, you get the late night Jim, and you really get,
I want you both, all three of you here, to know that I really appreciate, and the community really appreciates what you do. And that extends to everybody else. Blind Nest Owl extends to John L. and David AMS and the members of our community, too. If you're in our Discord and you're active in there, I want you all to know that I really appreciate everything that you do in there. Even just a regular supporter. I want you guys to all know that I really love all of you. Anything else you guys want to say at this point?
One other comment for me.
Sure. Go ahead.
Shout out to my buddy in Islamabad. There is some shit breaking off in Turkey, and it's not good. There is shit breaking off in Islamabad, and it's not good. So keep an eye on the geopolitical news, because You never know when somebody's going to do something fucked up. And that's not just narrative. That's stupid people playing stupid human tricks and being intolerant of each other.
So you're saying that we have some geopolitical risks to the market in Islamabad?
Yes, sir.
All right, so you heard that from Binky. And then, Joe, you got anything else? Bork?
I heard Elon Musk wants to fist fight Maduro, and he accepted his challenge. I hope that goes down. That would be hilarious.
So
But that's the only geopolitical points I have to make.
He just really wants to fight people, doesn't he?
he wants to fight somebody he can win against, right?
So bad, so bad.
I know, right? Like, careful, if your grandma cuts him off, you might challenge her to a fight publicly. So if she lives in Austin, you want to keep her out of his way.
I mean, he can go fight her skeleton if he gets a shovel, I guess. Whatever he wants to do.
And Zuck called his ass out, right, to the mat, and he was like, fuck that, I got a bad back. My asiatic nerve's hurting me.
Oh man, yeah, that one was bad.
My asiatic.
I'm digressing. I'm gonna let it go. Joe says ride the lightning to the middle today, but we'll see.
All right, guys. I appreciate you showing up today, and I appreciate all of your insights. And we don't have a bear on the show too often, do we? We had Binky on today, and we got to get more bears on the show because we never have them on, do we? We never ever have them on the show, and it's good to hear one.
Don't come on the show. They're scared.
Hold on for a second. You got to get a couple of people to role play different characters. So ask Mr. Talking Monkey to be.
I gotta just give a shout out to him too, right? Career Low, all those guys.
Hell yeah, get them on and say, if you were a bear, what would you do?
Yeah, I gotta get all those guys. I gotta get Mr. Talking Monkey on the show too. There's so many fucking the names I didn't mention today that I should be. I need to write a list of names to be talking about people today or in the future.
Right.
Make sure I bring their names up because there's so many unsung fucking heroes in our group.
This community is deep.
It's deep.
Yeah, Mr. Talking Monkey's the man.
He is the fucking man.
I always like to read whatever he pens because it's usually amazing.
Yep, 100%. All right, what else we got going on here today? All right, so we got the FOMC, right? So we're gonna switch over now to FOMC coverage. I was gonna roll into it, but I think I'm gonna take just a 5-minute break. I want to thank everybody for joining us today. These are members of our community: Joe Donut, Bork, and Binky. We're gonna try to get David AMS on for some commentary later this afternoon if he has the time. He's running some trades inside of the Discord right now. If you're just joining us and you want to chat in the Twitch or YouTube chat, they are both open today for FOMC. So you just click the subscribe button. I would ask you to also, if you could, repost a link to the show, whatever you're watching on. I have a pinned tweet on Twitter. If you could repost that for me just to get more viewership in here for today, or maybe hit the like button. Or make a comment in the actual below commentary of the video, not in the chat, but below the YouTube video. It helps with the algorithms to get more viewership. So I always appreciate that. And you're more than welcome to join the chat. It's hard for me. I do want you to know that I read the Discord chat these days. I have a hard time reading all 3 chats. So if I don't answer a question for you on Twitch or YouTube, try to hit me up inside of the Discord, and I'll try to answer whatever questions that you might have. What else we got going on here? I'm going to take a quick potty break. I got to take a potty. I've been sitting here since 9:30, so I got to take a quick potty break. I apologize. It's not timed appropriately for this announcement at 2 p.m. We do have Financial Juice on. I'm going to turn that on right now for you, and then I'm going to also turn on News Squawk. It's a paid news service, and we're going to have both of those on in the background for this announcement. Let me see if I can turn this on really quick in case they do a prep for the decision at 2. And then, of course, the presser's at 2:30 p.m. We also have some big reports coming out. We've got Meta and Apple and Amazon later in the week and some other we got Snap, and we got all kinds of big tech reportings coming out at the end of the day. So we'll be running the stream late for those reports as well. If they report at 4 p.m., I don't know which ones, if they do or don't report at 4 p.m., but if they do, we'll leave the stream up for those reports as well and cover those today. Yeah, I want to get Jimmy B on the stream sometime too. I talked to him in a private Discord chat. I need to get him on the show at some point. John H would be great to have on too. I've talked to John H via phone, and it's always great to hear these guys' voice in real time. I need to get them on the show. I got a list. I got a fucking list a mile long of people we need to have on the show. I really do. It's like a big ass list. Like Short Seller ST, I'd like to have him on the show. I'd like to have Jedi on. There's some other guys hanging out there in the Twitterverse that I really like the Hooligan, and there's another guy out there that hangs out with him that I want to have on too. That I haven't had a chance to have those guys on. There's a whole list of them. Andy Constant, I'd like to have him on at some point. There's a whole bunch of people. It just hasn't happened. I don't have the fuck. I wish I had the 48-hour days, so I had more time to get shit done. Okay, Luke Hahn, I'd like to have him on the show sometime too. Have him on the show. He's kind of new in our circle of people, so we'll have to get to know him more and try to get him on the show as well and wrap him in. I got you, TL. We're gonna put on our favorite. It's on right now, so as soon as they start chatting on New Squawk. I'm going to take a quick break here. Just going to take 5 minutes, get up. My fucking leg is killing me again, sitting here all day long. And then we'll set up the stream for the reaction at 2 p.m. to the decision, and I'll read to you guys the paper, the PDF that's released from the Federal Reserve. I think Solotron, I've been thinking in my brain about getting the stand-up desk. I'm coming to that conclusion that I might need to get like the desk that goes up and down with a chair on it, or build one if I can, because I got a big L desk here. I would love to have a stand-up desk. I didn't want one before, and I think I want one. Old man Timey, be right back. Where's that? Break time. What is this? What's going on here?
Just on the chip fitting here, according to Bloomberg, US does reportedly weigh new restrictions on China's access to AI memory chips. According to Bloomberg there, the US does reportedly weigh new restrictions on China's access to AI memory chips. And just some of the companies mentioned, SK Hynix and Samsung could be affected by the rule planned by the US. And just further than these Bloomberg sources, they do note these new chip limits from the US could come as soon as next month.
So we are now 10 minutes away from the top of the hour, where we do get the release of the US interest rate decision. Median forecast is for no change at 5.5%. We also get the FOMC rate statement. So looking to interest rate futures pricing, seeing around a 96% chance of no change at this meeting. A note from Morgan Stanley, who note that the FOMC are to remain on hold, but open the door to a September rate cut. Morgan Stanley expect the FOMC statement to acknowledge the considerable progress in inflation and rising risks to the labor market. In the press conference, Morgan Stanley expects Powell to add to the signal that the Fed is close to lowering its target rate, but not go so far as to committing to a cadence of cuts. Just looking at a note from Wells Fargo as well, who don't expect any policy changes to be announced at this meeting, but do expect the committee to signal rate cuts as well, coming early as its next meeting in September. So the FOMC will likely note that it has seen material improvements on inflation in recent months, but that is also tentative to labor market risks. So Wells Fargo, speaking on the current inflation situation, they note that as they expected, the Q1 bounce in consumer inflation looks to be nothing more than a bump in the road. The core PCE deflator decelerated to a 2.7% annualized rate in Q2 after accelerating to 3.7% in Q1. At the same time, the year-ago pace of inflation continued to drift lower, with the core reaching its lowest rate since the first quarter of 2021. Wells Fargo say again that the job might not be done on inflation, but the year-ago rate has been falling for 2 years, and we're now closer to the target. Wells Fargo also speak on the labor market ahead of the FOMC decision today. They say that employers are still adding jobs at a sturdy pace, but nearly all other labor market data has moderated. Job growth has narrowed, with government and healthcare accounting for a majority of the recent monthly gains. And the ratio of open jobs to unemployed workers is again consistent with pre-pandemic levels, and businesses are continuing to lay off temporary workers. Wells Fargo do note that perhaps the most concerning thing is that the unemployment rate has drifted up by a worrying degree.
All right, here we go. Dun, 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 dun. Let's go to the fucking moon. Let's go to the fucking moon. Let's go to the fucking moon. Dun, 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 dun. Dun, 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 dun. Strap in, boys and girls.
The US interest rate decision, where the forecast is to remain unchanged at 5.5%. We'll also get the FOMC rate statement released with this as well.
Let's go to the moon.
A UniCredit note that while what is priced in is not so far from their own predictions, they're expecting 75 basis points of cuts this year and 125 basis points of cuts next year. They do note that the current OIS forward rates appear to be more dovish than the June dot plots, which indicates just 25 basis points of rate cuts this year and 100 basis points for next
And just
year.
making you aware,
So UniCredit note that it will
just
be
about
interesting to
10
hear
minutes
from
time,
Fed's
the top
Chair
of the-
Powell whether he sees the recent repricing as too optimistic or more likely, in their view, that the dot plot reflects an outdated economic picture.
Old Manny, be right back. I want to thank all of you for joining us today. Hold on here. I got my hair. I want to thank all of you for joining us today for the Fed FOMC, and if you were with us all week long. We're talking yesterday, or I was talking to Binky last night about. Here we go. We'll talk about that later. Wait here. We got FOMC in 4 minutes. We will hear it over the news squawker. And from there, I'll read to you the release.
Basis points priced in by year end.
And then we will get the actual presser. We'll have the video on your bottom screen down here. We'll be watching Dixie, of course, TNX, and S&P 500 for the. Should we put them up right now? Maybe we should do it right now. Maybe here in the bottom screener, we'll do that. Hold on here on the bottom of your screen here for the release. I'm going to post. Hang tight 1 second here. We'll do DXY. And then we'll do TNX. Easy one. TNX looks like it wants to bounce down here, doesn't it? Oh, no, sorry, I got the wrong one here. Hold on. That's Dixie. Okay, we got the Dix there. We're good. That's Dixie. That's TNX. Two minutes and counting. So we've got Dix down below here, and then we've got the TNX over here on the right-hand side. We got SPOOs up in here. Maybe I'll write this in so people know this is SPY. One of the SPOOs products. Instruments. Get rid of this now. And I want to put on some zero dates, don't I? So hold on a second here.
One minute remaining.
I want a quick look here. 546, 545. And I'll tell you guys what I'm looking at inside the Discord right now for zero dates.
Ten seconds. No change, no change. Rate remains unchanged at 5.5% as expected. So looking to the rate statement here then, Fed says it is attentive to risks on both sides of the mandate, a change from June when it said it was highly attentive to inflation risks. Fed leaving the rate unchanged, says in the most recent months there has been some further progress to the 2% inflation goal. In June it said there had been modest further progress, so a change in the language there. Recent months there has been, again, some further progress on inflation's goal to 2%. Fed repeats it does not expect it will be appropriate to lower rates until it has gained further greater confidence on inflation moving sustainably towards 2%. Says the economy continues to expand at a solid pace. Job gains have moderated. The unemployment rate has moved up but remains low. Fed says that risks to achieving employment and inflation goals continue to move into better balance, a change from June's towards a better balance description. So just to repeat, the Fed does not expect it will be appropriate to lower rates until it has gained greater confidence on inflation's return to target. S&P 500 seeing a little bit of weakness here on the back of that. US short-term interest rate futures slipping after the FOMC decision as traders slightly pair bets on Fed rate cuts.
Dollar's showing strong right now, trading 104.351. TNX recovering right now. A little bit of weakness here in S&P 500. I'm going to read some headlines. These are negative, by the way, on the Fed rate decision. The U.S. weighs new restrictions. Sorry, wrong one. Apologize for that. U.S. interest rate decision actual 5.5%. The forecast was 5.5%. The previous was 5.5%. So in line. From the Fed, quote, in recent months, there have been some further progress. The 2% inflation goal.
Statement and Treasury yields pairing their decline after the Fed statement as well. 10-year yields last down just 1.5 basis points now at 4.126%.
So the Fed in recent months, there have been some further progress to 2% inflation goal. In June, it said there had been modest further progress. So there was some changing in the tone of the Fed from some further progress, from modest further progress to some further progress.
So again, US dollar index pairs its losses as well after the Fed meeting statements.
The Fed also saying that inflation remains somewhat elevated. The Fed repeats that it does not expect it will be appropriate to lower rates until it has gained greater confidence inflation is moving sustainably towards 2%. So you might get this is implying that you might get a Fed Chair Jerome today, that rather than the expectation of him coming out and promising or introducing a rate cut in September, you might get just that same talk from the Fed that we're data dependent. We've made no decision to cut rates in September. It is also coming out here that it is attentive to risks on both sides of the dual mandate, which is a change from June when it said it was highly attentive to inflation risks. And then on the U.S. short-term interest rate futures slip after FOMC decision as traders slightly pair bets on a Fed rate cut in September. So we might not, not that we might not get a cut or not, but that the Fed might pull back its dovish stance on a rate cut in September.
Look out for the FOMC rate decision, where the central bank is expected to hold rates 5.25 to 5.5%. Of course,
that's late. Economy continues from the Fed. The economy. This is bullish here, but this is all the bear shit or hawkish shit. The bullish stuff here. The economy continues to expand at a solid pace. Job gains have moderated. Unemployment rate has moved up but remains low. I'm going to post for you the actual statement here, so that I'll post the statement for you inside of the Discord. Hold on 1 second here. I gotta post one thing. Here is a link to the statement. I'm going to post that. I just posted a link to the statement inside of the Discord. I'm going to post the link inside of the YouTube channel right now, and also the Discord, the Twitter channel, Twitch channel. Excuse me. I got a lot of stuff to account for here. So here is the Fed statement. If you want to read that. Post that for you there, and there. We didn't really expect a 2.5% cut today, but there was discussion that possibly we could get one. We did not get one, right? Did not get a cut today. No 2.25 BPS rate cut. So that outside long shot did not happen. S&P 500 relatively flat right now, right? Not a big, huge move to the upside or downside at this point. We had some guests on earlier that said to expect the market to remain flat initially, and that's what's happening right now. And we also have some time, though, between now and the presser at 2:30. You know what usually happens, right? We got a big push up, and then we come back down during the presser. So maybe we get a little Colbert bump or something like that up here, and maybe close all this 553 out and wait for the presser at 2:30. See if we can get a pullback of some kind. And that's right in here. We'll snap that line right there for you. See if we can target this 553.32 range to the upside here. I want to say we still have a liquidity in the market too. Market's still really liquid at the moment. That right there so you can see it. See the better price action better. Binky's in the house. Binky's in the Discord. Good. Oh, not Binky, Winky. Good to see you, Winky. How you doing, brother? Winky, we want to, if you're listening in, Winky, we want to talk to you about Mobileye, bro. We want your take on Mobileye. Did they bounce today, by the way? I haven't even checked to see if they got the bounce on 20 or not. Read through this presser really quick. Oh, I'm gonna look. I want to check to see fucking Mobileye. Did they bounce off 20? Oh, they fucking did. They fucking did bounce. They traded up here to 2081. They did fucking bounce. Son of a bitch. Bastard stock. Trying to read through this Fed Reserve statement right now. I don't see anything in there other than what we already talked about. Then we'll have Jerome on here shortly at 2:30. You don't think that's the bottom? I think that might be bottom, brother. Yeah, we need a dinky, don't we? We got Slinky, too. We need a dinky, a Slinky. Yeah, you think it is going to $8? I wondered that yesterday. I was looking, dude. I was like, I don't know. It could go right down to that fucking $10 mark easy. So you think it's going to the $8? I trust you over my own opinion on that ticker. Tinky Winky. Yeah, Winky. I was looking at the $8 or $10 yesterday, dude. I was like, it could go down there too. I had it tagged for 20 the last time we looked at it, and it went right there, dude. The chart fucking literally charted it exactly where it went. Dixie coming back down into its hourly trigger and half-hour trigger. You guys want to see the VIX real quick? We can look at that. We'll rotate between these again. We'll look at the we watched the VIX 9-day here. Here, let me see if I can make it larger for you so you can see it. This is my fear right here on the VIX 9-day that we curl here to the upside. I want to see the VIX start breaking down below 14.5 before getting committed to anything crazy. Here's your VIX 30-minute chart right there. Or VIX 9-day 30-minute chart, excuse me. Yeah, Jimmy. I think Jimmy Barry. I think in the summer of 2025, baby, inflation is gonna fucking fly, brother, and they're gonna have to raise in the summer. I see a fucking rate increase in the summer, bro, in 2025. I think we're going to have that like seasonal weakness in the beginning of the year, and then we're going to swing into the fucking summer, and they're going to start fighting, and we're not priced in for that, right? The market's going to start rolling like we did in 2022. Similar scenario. Yeah, and unemployment's still low enough. I think we can handle up to 5.9, bro. I think we can handle that. I think our economy can take like up to 5.5, 5.95 somewhere in there. Not 9.5, like 5.90. He's gonna tell the market today to go fuck itself. What I'm fascinated with at this presser in particular, Jimmy, is does he get pressed on if he knocks down the talk of a cut today? That's the implication, right? He's going to come on today and he's going to not address the elephant in the room, which is, do we get a rate cut in September? And are you going to introduce it today, right? That's what everybody's been saying, right? And he should come out into this presser today and say, expect a rate cut, basically, right? The language for a rate cut for September, and I don't think he does, dude. I do not think that he does. I don't think he's going to introduce that language today, man. He'll ride that shit as long as he possibly can, right? And right now he can. That would be negative, wouldn't it? On this presser, would that be received negatively or no? The Fed futures funds rate saying the same thing right now. Robert saying that the Fed rate cut will be in September. If it is, he should say it, right? He should say that today. Yeah, we should be looking at IWM here too, shouldn't we? Did they get a hit? Did they get a hit today? Yeah, they got a little hit. They got a little bump down right now. They got a little roly-poly going on in IWM. If a reporter comes out and says, If a reporter comes out and says you're getting a rate cut, or if a reporter comes out and says, are you gonna talk about a rate cut in September? And he goes, we ain't fucking cutting rates September. Fucking IWM will commit fucking seppuku today, won't it? DIA will get a little bit of that action too, won't it? Everybody back in the fucking pool for tech again. Yeah, the high table. What are the implications if we don't get a September rate cut? It's not in the long term. I'll be honest. I'm going to stick with this right now. If you trade the S&P 500 or Qs, the longer we don't cut rates, the safer you are. I'll be honest with you. The safer your positioning is in the grand scheme of things. I am deathly afraid of a rate cut. Now, there are people smarter than me that say we've already priced in that rate cut. I don't fucking believe it. They'll set this market up and they're going to roll this fucker down the moment we cut rates. So I think that's a fairly, if this market trades on statistics and probability, I'm going to go with that. The moment they cut rates, I'm out of market or the moment that we actually cut rates or we have a real chance of cutting rates, I am fucking out of this market. Even if we go higher, I'd rather miss I'd rather miss the upside move than risk the downside move. Let it all be digested, settle down, and then I'll re-enter the market. Higher for longer is pretty good for the market, believe it or not, in my view. Tech pool had a poopsie. So the lifeguard had to clear it out and dump the bleach to give it an hour and just give it an hour. A little bit of a roll in HYG in the 2-year. You see the 2-year yield coming down over here. Now I'm going to set up this this video for you guys. And for you here. Oh, a second. Oh, hey, come on now. Here is the video for Jerome at 2:30, and we'll pop that on as soon as he comes on and starts chatting. Yeah, if he denies, I'm going to turn off some of this stuff here in the background. Now, don't forget that tomorrow. We have ISM manufacturing PMI. We've got some non-farm stuff, non-farm productivity coming out, preliminaries. We got initial jobless claims, S&P global manufacturing PMI final, and then on Friday we get non-farms and the unemployment rate at 8:30. So we still have data coming out the rest of this week. I don't know if I need to turn this stuff off or not. From the Fed, recent indicators suggest that economic activity has continued to expand at a solid pace. That's good. Job gains have moderated, and unemployment rate has moved up but remains low. That's a key one right there. Unemployment rate has moved up but remains low. They're signaling to you that they're comfortable with a slow rise in unemployment. Another key point, inflation has eased over the past year. This was a language change.
So
but
in 10 minutes
remains
time now, at the
somewhat
bottom of the hour,
elevated.
to expect the start of the FOMC press conference with Chair Powell, the live video to which is available on the feed or pinned to the calendar for anybody interested.
The Fed keeps rates unchanged in policy statement. The Fed changes its language to, quote, the committee. The committee is attentive to the risks to both sides of its dual mandate, end quote, where previously it said the committee remains highly attentive to inflation risks. However, the Fed maintains that the committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably towards 2%. I'm going to read this to you. This was from before the next nine before this Fed talk. This came out just prior to the Fed release. This is from Brian Bingham at GS. The U.S. dollar short macro trading, quote, all eyes are on the FOMC with 1 BP currently priced in, reflecting the risk premia that will have Jackson Hole in the middle of the meeting, which retains some chance of an inter-meeting cut. We do expect this pricing to retain post today's decision to hold. All eyes will then turn to the statement. In previous meetings, the tone was dictated by the presser. What we think separates this meeting from the rest of the pack is that we will know the tone of the meeting at 2 p.m. on the dot. Both GIR and SWJ's Nick Timros have done some analysis on the risks of the statement, breaking down the 3-paragraph changes the Fed could make and how they are thinking about each one, language on inflation, growth, and further guidance. Our base case is in line with GIR is that they soften forward guidance. Currently, the September meeting is priced at 26.5 BPS. We think the market will take the statement softening as greenlighting a September cut. And there's a plausible scenario that the September meeting approaches 30 BPS of cuts as free options for 50 BPS cuts picks up traction currently. September, November is quite paid as a tail hedge to a hawkish Powell, which is the one concern with expressing shorts in the U4 sector. Then against that, we think November, December is received given broad-based expectations for a September cutting cycle. We continue to have sympathy for November, December flatteners. There is an argument to receive September into the meeting. Though we think at these levels, it is better to be long the December meeting given it's still above 25 BPS. And once again, the cutting cycle does begin. Risk shifts to the downside at each September meeting. Pricing is rich through the end of the year with 68 BPS priced, but not necessarily a fade in advance of the meeting where Powell clearly has the ability to signal a long-awaited cut. Now, this was just prior to the statement that just came out, right? And this statement is a little more hawkish in tone than was expected. So you're going to, and they're saying that we would get that dovish or hawkishness in the actual statement. There'll be a difference here in the market. Now, the second chance for this hawkish or dovish talk can still come inside of this presser from Jerome Powell. So I'm sure that the market is eagerly awaiting. I'm going to post this inside the Discord, this verbiage for you. Inside the Discord so you can read through it. So even market participants, professionals, were expecting a more dovish tone inside of this statement. They did not get it. So I'm assuming here that all eyes will be on this presser to see his tone and how it will impact the market here, and in particular, small caps. Let me write this in. Write this in here.
5 minutes away now to the bottom of the hour, where we expect the start of the FOMC press conference with Chair Powell. Live video pinned to the calendar and on the feed for anybody interested.
I wonder if this is going to be slower than the. I wonder if this link is going to be slower than YouTube. We'll find out here if it is or isn't. I will check it here in the background just in case it is. Three minutes left. Yeah, there were people out there predicting a 25 BPS cut today, Oda. I think they're out of their fucking skulls. If you guys want to know what I think the Fed chair says today, he's going to hammer down on cuts. You're gonna get slightly hawkish, Jerome, today. It does boggle the mind, right, Oda? Yeah, Winky Face is saying no chance of anything happening until September. Reasonable as October. My heart is in March. I don't know that we're getting a cut. I don't think we get one. I think they leave rates the same, and I think we get an increase by summer of next year.
So shortly expecting the start of the FOMC press conference with Chair Powell. As a reminder of the order of business here, Powell would normally start by repeating the rate statement, which we've already posted on the feed, and the headlines for which are there as well, before taking questions at the event, which is where the headlines will come from. So we'll keep our eyes out for any important comments from Powell during this press conference.
Olafson just made a killer statement. He just said that the Sam rule, July cutters in shambles. 100%. Hold on, did I already do those yet? One minute left. I'm going to turn this on here in just a moment. I just want to see when I got two versions of this video. Oh yeah, this one's faster. Hold on 1 second here. This is faster than the Fed site. Hang tight here, folks.
So Fed's Powell taking the podium at the press conference now.
Good morning, and thank you all for joining us today. My name is Jocelyn Jackson, and I'm the lead economics outreach specialist at the Board of Governors.
Oh, what the fuck is this?
My role is responsible for building
for the benefit of the American people.
Fed's Powell said we've made considerable progress on both goals in the past 2 years.
Over the past 2 years.
Labour market has come into better
balance, and the unemployment rate remains low. Inflation has eased substantially from a peak of 7% to 2.5%. We are strongly committed to returning inflation to our 2% goal in support of a strong economy that benefits everyone. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. We are maintaining our restrictive stance of monetary policy in order to keep demand in line with supply and reduce inflationary pressures. We are attentive to risks on both sides of our dual mandate, and I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP growth moderated to 2.1% in the first half of the year, down from 3.1% last year. Private domestic final purchases, or PDFP, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal of underlying demand, grew at a 2.6% pace over that same period, the first half. Growth of consumer spending has slowed from last year's robust pace, but remains solid. Investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment stalled in the second quarter after a strong rise in the first. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In the labor market, supply and demand conditions have come into better balance. Payroll job gains averaged 177,000 jobs per month in the second quarter, a solid pace, but below that seen in the first quarter. The unemployment rate has moved up, but remains low at 4.1%. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years, and a strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market have returned to about where they stood on the eve of the pandemic, strong but not overheated. Inflation has eased notably over the past 2 years, but remains somewhat above our longer run goal of 2%. Total PCE prices rose 2.5% over the 12 months ending in June. Excluding the volatile food and energy categories, core PCE prices rose 2.6%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households and businesses and forecasters, as well as measures from financial markets. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue reducing our securities holdings. As the labor market has cooled and inflation has declined, the risks to achieving our employment and inflation goals continue to move into better balance. Indeed, we're attentive to the risks to both sides of our dual mandate. We have stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. The second quarter's inflation readings have added to our confidence, and more good data would further strengthen that confidence. We will continue to make our decisions meeting by meeting. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we have seen on inflation. At the same time, reducing
they want to ping 5,600.
could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data.
There it is right there.
And the balance of risks. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we can maintain the current target range for the federal funds rate as long as appropriate. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the longer run. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Here we go. Here comes the volatility.
Gina Smilik from the New York Times. Thanks for taking our questions. Markets pretty much entirely expect a rate cut in September at this stage.
Here we go.
I wonder if you think that's a reasonable expectation, and if so, why not just make the move today?
Thank you. So on September, let me say this. We have made no decisions about future meetings, and that includes the September meeting. The broad sense of the committee is that the economy is moving closer to the point at which it will be appropriate to reduce our policy rate. In that, we will be data dependent, but not data point dependent. So it will not be a question of responding specifically to 1 or 2 data releases. The question will be whether the totality of the data, the evolving outlook, and the balance of risks are consistent with rising confidence on inflation and maintaining a solid labor market. If that test is met, a reduction in our policy rate could be on the table as soon as the next meeting in September.
Whoa.
So you asked why not today, and I would just say, again, that the broad sense of the committee is that we're getting closer to the point at which it will be appropriate to reduce our policy rate, but that we're not quite at that point.
That's a change. And he read from prepared remarks. Did you see that too?
Follow up on that a bit. If inflation behaves as you expect between now and September, would you regard a
Keep your eyes on IWM right here.
scenario right now?
So I guess I would think about it this way. I'll give an example of cases in which it would be appropriate to cut, and maybe that it wouldn't be appropriate to cut. So if we were to see, for example, inflation moving down quickly or more or less in line with expectations, growth remains, let's say, reasonably strong, and the labor market remains, consistent with its current condition, then I would think that a rate cut could be on the table at the September meeting. If inflation were to prove, stickier, and we were to see higher readings from inflation, disappointing readings, we would weigh that along with the other things. I think it's going to be not just any one thing. It's going to be the inflation data. It's going to be the employment data. It's going to be the balance of risks as we see it. It's going to be the totality of all of that help us make this decision.
And just to follow up on that, specifically, in what ways right now, given all you've seen over the last few months in particular on shelter, on services, et cetera, in what ways are you not confident right now that inflation is on the way back to 2%?
I think it's just a question of seeing more good data. We have seen the last couple of readings have certainly added to confidence, and we've seen progress across all 3 categories of core PCE inflation. That's goods, non-housing services, and housing services. So it's really just, we had a quarter of poor inflation data at the beginning of the year. Then we saw some more good inflation data. We had 7 months at the end of last year. We just want to see more and gain confidence. And as I said, we did gain confidence, and more good data would cause us to gain more confidence.
Colby.
Thank you. Colby Smith with the Financial Times. The March SEP pointed to 3 cuts in 2024 with core inflation at 2.6% and the unemployment rate at 4%. Since we're now at that level in terms of inflation and already beyond...
Posted my trade inside of Discord just now.
I was wondering if that rate path is back to being the best guidepost for policy rather than, let's say, the shallower one laid out in the June SEP.
So I would just say, really the path ahead is going to depend on the way the economy evolves. And I can't really give you any better forward guidance on it than that. We didn't, of course, do an SEP at this meeting. We will do another one at the September meeting. I would just say I can imagine a scenario in which there would be everywhere from 0 cuts to several cuts, depending on the way the economy evolves. And I wouldn't want to lay out a baseline path for you there today. I've said what I can say about September and about today, though.
Nick Timmeros of the Wall Street Journal. Chair Powell, you've said before that you wouldn't wait until inflation got to 2% to cut rates because of how inflation has lagged. Does that apply for the labor market, too? If the labor market is back in equilibrium, why is restrictive policy and potentially very restrictive policy
up 100% almost in that trade right now
warranted right now?
So this is the very reason that we're thinking about that we've said in our statement.
Oh yeah, baby.
Back to
fucking crank it. IWM is ripping fucking faces off right now.
We think what the data brought
upside target 227.
Ongoing gradual normalization of labor market conditions, and that's what we want to see. We've seen that over a period of a couple.
Trading 225.64 right now.
Really, from overheated conditions to more normal conditions.
225.74.
Watching the labor market conditions quite closely.
Holy fucking shit!
If we start to see something that looks to be more than that, then we're well positioned to respond. That's part of what we're thinking.
Oh my God, baby. Get up there, motherfucker.
That's more than whatever saw.
I'm watching. You guys watching IWM in the background here?
In the past.
IWM fucking cranking right now. Just hit 226. Look for a pullback.
News on inflation. I wonder how that cuts the other way. If you're seeing more softness in the labor market than what you would expect, does that change the calculus on what you're looking for out of the inflation numbers to recalibrate policy?
So we have growth isn't one of our 3. We have 2 mandates, as you know. The labor market, maximum employment is one, and stable prices is another. So we weigh those 2 things equally under the law. When we were far away from our inflation mandate, we had to focus on that. Now we're back to a closer to even focus. So we'll be looking at labor market conditions and asking whether we're getting what we're seeing. And as I said, we're prepared to respond if we see it that it's not what we wanted to see, which was a gradual normalization of conditions. If we see more than that, and it wouldn't be any one statistic, although of course the unemployment rate is generally thought to be a good single statistic, but we'd be looking at wages, we'd be looking at participation, we'd be looking at all the things, surveys, quits, hires, all of those things to determine the overall status of the labor market. But
IWM fucking ripping faces off right now. If you're not in that trade, look for that trade. It's fucking moving.
Close to 2019 conditions, and that was not an inflationary economy. Broadly similar labor markets then. I think core inflation was actually running below 2%. So I don't now think of the labor market in its current state as a likely source of significant inflationary pressures. So I would not like to see material further cooling in the labor market, and that's part of what's behind our thinking. The other part, of course, is that we have made real progress on inflation, and we've got growing confidence.
They're going to leave me behind in the second trade here.
Not quite there yet, but we're getting more confident that we're on a sustainable.
They're not giving me a rebuy.
Down to 2%. So those 2 things are working together, and we're factoring those both into our policy.
Chris.
Chris Rugaber at Associated Press. You mentioned not wanting to see any further cooling in the job market. Why not, or would you consider preemptive cuts?
I mean, I got another target here on them. I got another target here even higher at 229.08. I got 227, and then 229.08 is the next target.
Difference. If we'd be looking at this, and if we see something that looks like a more significant downturn, that would be something that we would have the intention of responding to. So in terms of, I don't think of it that way. I think of it as, we're actually in a good place here. We're balancing these two risks of, go too soon and you undermine progress on inflation, wait too long or don't go fast enough, and you...
Now trading 226.35.
And so we have to balance those two things. That's the nature of having two mandates, and I think this is how we balance them. It's a rough balance, but it does feel like that. Again, the labor market feels like it's in a place where it's just a process of ongoing normalization. 4.1% unemployment is still historically low, and we'll just have to see what the data show us.
And just to follow quickly, wanted to see what you thought of the recent JOLTS report, which did show
semis are pumping right now too,
even below 2019 levels. Layoffs remain low. So it painted a picture of a very static labor market. Is that sustainable in your view, or something that is worrying? Thank you.
So I think all of the data points continue to point to kind of the direction we would want to see. So that was taken as there was a decline in job openings. That was good. Today's ECI reading was a little softer than expected. So that's a good reading. It shows that wage increases are still at a strong level, but that level continues to come down to more sustainable levels over time. That's exactly the pattern that we want to be seeing. So I think the data we've been seeing in the labor market are broadly consistent with that normalization process. Again, we're closely monitoring.
14 minutes left until 3 p.m. Another 14 minutes.
Steve.
Steve Leisman, CNBC. Mr. Chairman, back in March, you talked about cutting rates as a process, and in June, you talked about the idea that, well, one rate cut wouldn't do anything. So I wonder if you can sort of follow up on Colby's question. Talk about, are you weighing the economy right now in terms of its ability to withstand multiple rate cuts? Talk us through the process that you're thinking, or is it just one rate cut? Or are you in the process now of thinking that rates need to be normalized here? Thank you.
Yeah, I can't really say that, honestly. We've seen, significant movement in the labor market, and, we're very mindful of this question of is it just normalization or is it more? We think it's just more normalization, but we want to be in a position to support the labor market. At the same time, we're seeing progress on inflation. So, we actually got to this, we raised rates a year ago at the July meeting, and if you look at the situation in the economy a year ago, inflation was over 4%. It was a completely different economy. Now we've made a lot of progress, and the labor market, as I think, unemployment was in the threes, mid threes. So it's a different economy, and I think it's coming to be time to adjust that so that we support this continued process. The thing we're trying to do is, that we have, we've had this really significant decline in inflation, and unemployment has remained low. And this is a really unusual and historically unusual and such a welcome outcome for the people we serve. What we're thinking about all the time is how do we keep this going? And this is part of that. We think we don't need to be 100% focused on inflation because of the progress we've made. 12-month headline at 2.5.
Nick Timmeros out there blowing up the internet right now.
Way down from where it was. The job is not done on inflation.
Oh yeah, baby, keep on moving up right now.
Policy rate, and I think we're just as part of a process. In terms of
Nick Timmeros, short and basically saying Powell flipping the fucking script right now in the presser, not hawkish but dovish on a cut.
Try to give specific, forward guidance about when that might be.
226.86 on smalls right now.
That's really going to depend on the economy, and that's highly uncertain.
Rachel.
Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. On inflation, do the past few months of good reports look like what we saw last year, where you really had a lot of momentum with a few bumps?
Keep on going.
Would you characterize that kind of momentum as back on track at this point in the year?
Actually, what we're seeing now is a little better.
Next, hit fucking 228.
Last year, as we pointed out,
flip that fucker. Send that shit higher.
Last year was from goods prices, which were going down.
Smalls now trading 227.38
at an unsustainable rate. This is a broader disinflation. This has goods prices coming down, but we're also now seeing progress in the other two big categories, non-housing services and housing services. So, so the thing is, you got 1/4 of that. We had 7 months of low inflation. You got 1/4 of this. I would say the quality of this is higher, and it's good, but so far it's only 1/4. So I think we need to see more to know that we're, to have more confidence that we're on a good path down to 2%. But as I mentioned, our confidence is growing because we've been getting good data. And things like the ECI report.
Tagging PT1 right now on SPOOs.
Give you more confidence that the economy's not overheating. It doesn't look like...
Next target, 555.54.
It looks like an economy that's normalizing.
Okay. And if we were to think about the first couple of months of the year, is there any sense now that they were these blips that could have actually allowed for earlier rate cuts, as were some of the projections going into 2024?
So the thing about if what it is seasonality, and it could just be, it's very, very hard to do appropriate seasonal adjustments. If that's what it is, then that actually implies that other months we're reporting too low inflation. If you smoothed it out, it's a zero-sum game. And that's why we look at 12 months. We look at 12 months because that takes all that out, all those effects out. 12-month now is 2.5% headline, 2.6% core. This is so much better than where we were even a year ago. It's a lot better. Now, the job is not done. I want to stress that, and we're committed to getting inflation sustainably under 2%, but we need to take note of that progress, and we need to weigh the risks to the labor market and the risks to our inflation target now more equally than we did a year ago.
Michael McKee from Bloomberg Radio and Television. I'd like to ask you about the balance of risks as the American people see it. At this point, is the risk greater to leave interest rates where they are, given the damage that higher interest rates do to the economy in slowing demand and raising prices, or is it more important for the American people that you keep rates where they are to bring inflation down?
I think that we've been given an assignment by Congress. This is how we serve the American people, is by achieving maximum employment and price stability, right?
I want to just throw some fucking shit tickets on now.
Constitutional document that's longer-run goals and monetary policy strategy.
I just want to throw like some fucking 10-cent fucking calls on, fucking buy like 1,000 of them right now. I'm not gonna.
Inflation and employment. If one is farther away from,
I'm not gonna. I'm flat right now at the moment.
Concentrate on the one.
I want to though. I just want to slam like fucking bam, fucking hold them into the fucking bell.
Couple of years, the best service we could do to the American people was to focus on inflation. But as inflation has come down, and I think the upside risks to inflation have decreased.
I really bad want to just like pour myself out right here.
And labor market has softened, probably inflation is probably a little farther from its target than is the employment, but I think the downside risks to the
I'm going to be patient.
are real now. So we have to weigh all that, and if you think about where that takes us,
fucking poke, fuck you, poke. Poke the juice box is like my fucking devil.
The rate we've had in place for a full year.
Not on small, not on S&P or tech. I want to do fucking smalls again.
Facing the same question, the time is coming at which it will begin to be appropriate to dial back that level of restriction.
Smalls is about to fucking run away here and go fucking parabolic.
Well, you have event risk basically with the jobs report on Friday and another one before you meet again. Are you certain that you won't fall behind the curve and lead to unnecessary unemployment if you wait until September?
Certainty is not a word that we have in our business. We get a lot of data between now and September, and it isn't going to.
Yeah, what are 548s at right now? What are 548Cs running for right now? Don't even tell me. I don't even want to know.
Not just
how much are they worth right now? I'm in IWM options chain right now.
Risks. That's going to be the assessment that we do.
Are they at 10 fucking? No, dude, I bought them for 20.
At the employment report, but
how much are they worth right now?
And so much happening between now and.
I bought them at 22 cents and sold them at 278. What are they worth? I don't even want to know what they're worth right now. They got to be something fucking stupid.
I do want to dig deeper on what Michael and what Nick were asking. There's a shift in the statement to balance between.
I went plaid this morning.
And jobs. Looking at the job side,
I went plaid just again right now too.
We're hearing on earnings calls from companies like Intel abrupt layoffs.
You still have some runners on IWM?
Government jobs has been a leading creator.
I want to get back in IWM one more time. I didn't jump on the bus this time. This last just this now I didn't jump on.
Well, we'll look at everything. We've seen.
I got an upper target of 220.
Have a narrowing base.
Right now, 228.78.
Going back, but then we've had some months where
if it goes there, like right now, 228.78 for target on IWM right now.
But you look at the whole thing, and I think you do look at private demand extra carefully. To your point about government.
No regrets, baby.
Looking at all those things.
So could the Fed then be behind the curve? Because you said some of the reports last meeting, you said the reports could be noisy or overstated. Was there a discussion of what kind of discussion was there for a cut today? And could the Fed be behind the curve?
Yeah, so look,
I'm not entering yet, Poke. I'm going to enter in a minute. I just want a fucking small pullback.
Soon, and there was
like one or two red bars.
we had 7 months of good inflation data at the end of last year. We said we wanted to see more. We said we pointed out that
fucking everybody's crying yesterday about losing money this week. Today everybody's fucking rich.
Inflation data. Now we've got a quarter that is good, and we're balancing the risk of going too soon against the risk of going too late.
I know the train doesn't wait.
It's a very difficult judgment call, but this is how we're making it.
Just jump on board. I'll just wait for this one little tag right here.
In terms of today, your question about today, we did have a, we had,
GME. We're waiting.
A nice conversation about this issue today. The overall sense of the committee, as I mentioned, is that we're getting closer to the.
Be patient here.
It'll be appropriate to begin to dial back restriction, but we're not quite at that point yet. We want to see more good data. The decision was unanimous. All 19 participants supported it. But there was a real discussion back and forth of what the case would be for moving at this meeting. A strong majority supported not moving it.
You're welcome. I love you too, Tran Kenny. I love you too, Kenny Tran.
Certainly.
Courtney. Courtney Brown from Axios. Thank you for taking our questions. When the Fed was raising rates, there was a lot of conversation about long and variable lags.
IWM fucking ripping faces again right now. Trading 227.94 upside target.
Yes, it does.
Currently 228.78.
Showed up here in the last 6 months, by the way.
Fucking going burr right now.
See the restriction. Whereas, even a few months ago, people were questioning how restrictive policy.
227C from the shout out in Discord. We're trading 22 cents.
Sorry, rate sensitive, interest sensitive.
You're now trading $1.60.
Restricted. I wouldn't say
$1.60. 700% trade if you're in those.
The lag should be on the way down. It should take some time to get into
Jesus fucking Christ
conditions, and that affects economic activity, hiring, and that kind of thing, and ultimately inflation. It's not instantaneous, although it's faster than it used to be because markets move.
Posted a trade in Discord earlier. 227C from the bottom fucking green bar.
Monetary policy acts with long and variable lags, even when you're
now trading 228.10.
It might be too late for.
If you're not in the Discord, I'm telling you, if you're not in our fucking Discord, you are fucking missing.
We have to worry about that.
Our fucking Discord is monster.
To make it clear, it's
all the fucking playboys and playgirls are in there. We got the gangster fucking traders in our Discord.
We don't want to go too
fucking gangsters in our Discord.
How we've made that judgment. I feel good about where we are. We're certainly very well positioned to respond to weakness with the policy rate at 5.3%. We certainly have a lot of room to respond if we were to see weakness. That's not what we're seeing, though. What we're seeing, look at the first half growth numbers. Look at PDFP at 2.6% for the first half. It's not signaling a weak economy. It's also not seeking.
It is fucking caps, isn't it? Fucking, dude, it is fucking definitely facts.
The unemployment rate.
Fucking Discord is gangster.
And we're seeing.
I've been a part of shit tons of Discords. I love our Discord. Our traders are fucking badasses.
Unemployment is still at a low level. Layoffs are very low. Initial claims.
Trading 228.14 right now.
And they're historically not high at all. So the total scope of the data suggests a normalizing labor market. And again,
come on, baby, get on up there.
To see that continues to be the case.
Victoria.
Hi, Victoria Guido with Politico. On the labor market, I was wondering, how worried are you all about unemployment rising to the point where it triggers the SOM rule? And would that affect how quickly you cut rates?
So I would just say that the question really is one of, are we worried about a sharper downturn in the labor market? So, and the answer is we're watching really carefully for that. We're aware of that rule, which is really I would call it a statistical thing.
We're getting close to a top here in IWM. Be careful.
A statistical regularity is what I'd call it. It's not like an economic rule where it's telling you something must happen. So, again,
be very careful here in IWM if you're long.
All the things we're seeing, and what it looks like is a normalizing labor market. Again, job creation at a pretty decent level, wages moving up at a strong level, but coming down gradually. Job vacancies have come down, but they're still high by historical standards. So, again,
I mean, there's a case for 230.
What we think we're seeing is
nice round ass number.
Labor market, and we're watching carefully.
Maybe 231 to get over the hump, or a firm rejection on 230. Nice zero over there. Just fucking dot your I's and cross the T's.
Reason to think that the labor market might behave differently this time than it has historically?
I think,
should I just say fuck? What is fuck 230?
It rhymes. I think that statement is very true about the economy. You never assume it's going to be just the same. An example would be, is there a trend increase in the level of vacancies? There are many, many examples, so it's never exactly the same. Also, let's remember that this pandemic era has been one in which so many, apparent rules have been flouted, like the inverted yield curve, for starters. So many.
Yeah, Dave, I might be with you. That's a big thing here. We should probably discuss that, Dave. Good point. Dave Solenki is saying there could be upward follow through tomorrow, a gap up tomorrow,
very strong
to all-time highs. That is possible, brother.
Is not the
I'm not anti that.
As many of the other prior inflation or downturns that we've seen, or business cycles that we've seen. So we're having to learn. We're having to to be very careful about the judgments that we make, I would say. So we don't assume that these regularities will just repeat themselves automatically.
Amara.
Thank you, Chair Powell. Amara Mokwe with Bloomberg. There seems to be quite a
love you, Bliss.
What the anecdotal data are
I'm back in again.
The very recent.
I'm on 230s.
And the hard data. Do you take those?
I didn't tell anybody in the Discord, Bliss.
The economy and labor market are cooling much more rapidly than what's shown in the.
Let's just fuck it. Just hit 230.
So I do take that seriously, and the Beige Book is great. What's even greater is hearing the Reserve Bank presidents come in and talk about their conversations with businesses, business leaders and workers and people in the non-profit sector in there.
You can flip those for 60 cents.
The picture is not one of a slowing or a really bad economy. It's one of there are spots of weakness, and there are regions where growth is stronger than other regions. But overall, it's again look at the aggregate.
Now trading 228.54.
Particularly PDFP, private domestic final purchases, is.
Well, we're getting there. We're really close. Really fucking close. Really close.
A private demand. So we listen to all of that. It does. I think
230s aren't getting any traction on me.
And not just look at the aggregate data.
We need to break above for me to make any money on this trade.
Data can be volatile.
We're gonna roll, I think, here.
So it's just hard to measure.
That's pretty close right there. That top tick at 228.63, we should get a pullback.
So
if we break above, it's going to be unexpected.
That the anecdotal data is uniformly down.
I'm still long the 230s.
Thank you. Jolene Kent with CBS News. Chair Powell, thanks for taking our questions today. You have consistently said that the Fed does not consider politics in making decisions. With a possible September rate cut on the table, it would be less than 2 months before the election, and former President Trump reportedly said that cutting rates so close to the election is something the central bank knows they shouldn't be doing. What's your response, and do you believe it's possible to really remain apolitical with a September rate cut?
I absolutely do, and I think it's.
Yeah, so I'm talking to a trader friend on the phone right now. They're saying buy the close, like close your longs here and then buy the close for a trip higher tomorrow.
Path of our policy, I really don't know. I do know how.
IWM reversing right now in a 5-minute candle.
So if you take a step back, the current situation again is inflation has come down much closer to our goal, and that's happened while unemployment has remained low. We're very tightly focused on using our tools to try to foster that state of affairs continuing. That's at each of our meetings and all of our decisions, our focus is strictly on that and really on.
Also note that the hourly trigger is about to cross the daily trigger. We could be taking a quick trip down below. Not guaranteed, but just be careful that an hourly trigger is just about at it's 3:05 in the next hour at 4 p.m. It's going to cross here.
Bless us with their commentary. But we don't change anything in our approach to address other factors like the political calendar. Congress has, we believe, ordered us to conduct our business in a non-political way.
Dude, I bought the fucking bottom of this motherfucker yesterday at 4 o'clock yesterday, and then I bought fucking NVDA yesterday at goddamn $1.03. NVDA up 13% today.
Bottom line is, if we do
13% today. Winky's fucking closing out a bunch of shit for big bucks right now in the Discord.
Right. The economy will be stronger. We'll have price stability. People will find jobs. Wages will rise in real terms. Everyone will benefit. So that's what we believe, and that's how we will always act. This is my
13% fucking percent. Fuck.
I tell you, this is how we think about it. This is what we do. So anything that we do before, during, or after the election will be based on the data, the outlook, and
I still have exposure here. I'm long, by the way. I'm long I'm long right now, and I'm going to be trying to get long at the bell, too.
Take into account the two very different economic plans of these two presidential candidates.
I don't care anymore.
Trump, and if so, how?
No. We do not do that. We absolutely.
Even if they fucking roll us down, I don't give a fuck.
We don't know what they're going to do. We don't act as though we know, and we just can't do that. You know, we basically, we have our forecast. We can run simulations of different potential policies, but we would never try to make policy decisions based on the outcome of an election that hasn't happened yet. That would just be a line we would never cross. You know, we're a non-political agency. We don't want to be involved in politics in any way, so we wouldn't do that.
I'm not. I have a small exposure right now to the close, and then when we get into the close, that's when I'm going to double down and get some calls for tomorrow. Like 4 o'clock, 4:15, somewhere in there.
If you do have more confidence by the September meeting, do you get the sense that there will be a unanimous vote on an interest rate move in September? Or basically, are there meaningful differences in committee members' assessments of how much more confidence is needed?
So there are always meaningful differences.
And I'm going to switch to probably from IWM to S&P 500 on the close.
We do have a very robust discussion of these things. You're right that in most cases, people, if they feel heard and they feel that their position has been given serious consideration, for most people, most of the time, that's going to be enough. There are dissents. That's fine. You know, no one has a veto. No single person has a veto. So,
and you can sign up just for our Discord on our website, tradethetrigger.com.
We've had.
You don't need to sign up for the market briefs, any of the other stuff. There, we have just an entry just to Discord. I think it's $20-something or whatever. We've got Pro Tools in there from Trady Ticks, Unusual Whales. We got active traders trading stocks, futures, overnights, you name it, metals, commodities, rates. We have bond traders in there.
And if it happens, it happens.
We have currency traders in there.
Hello, Jean Young with MNI Market News. Is a 50 basis point cut as a first cut at all likely or even on the table?
The fuck?
You know, I don't want to say.
It's out of her fucking mind.
What we're going to do, but that's not something we're thinking about right now.
That's what she used as a question?
Of course, I haven't made any decisions at all as of today.
Thank you, Chair Bell. Jennifer Schonberger with Yahoo Finance. Not to get into the minutes, but you said there was a real discussion today for moving at this meeting. I'm curious if you could provide some more color.
He's like, next.
Today at the meeting about a possible rate.
IWM rolling over at a 5-minute basis. S&P 500 rolling over as well.
So, the way the meeting is set up, the first day there's a discussion of financial stability because it's every other meeting we have that. And then we have an opportunity to comment on that. Then we have an economic go-around. And then this morning we have the monetary policy go-around. And I think in people's economic go-around and in their monetary policy go-around, people express their views about this, and there's a range of views. People, as you will know from the speeches that they give.
He left out that they also rent hookers in Jackson Hole between these minutes and FOMC meetings.
We'll lay this out in a much better way than I can do off the cuff. But there's a range of perspectives, and but I do think that we're a consensus-driven organization. People come together. This was a unanimous decision, and at the end, everyone supported the outcome, not just the voters, but everyone. So I would also say some people examined the possibility, the case for moving at this meeting, but overwhelmingly the sense of the committee was not at this meeting, but as soon as the next meeting, depending on how the data come in.
But there is a growing sense of confidence that you could move at the next meeting, assuming
Yes.
inflation comes.
Well, assuming that the totality of the data supports such an outcome, no question, that is the case. That, as I mentioned, we think that the time it's approaching.
Joe Santos, baby.
If we do get the data that we hope we get, then a reduction in our policy rate could be on the table at the September meeting.
Hi, Chair Powell, Nancy Marshall-Genzer with Marketplace. Former New York President Bill Dudley wrote an op-ed in Bloomberg earlier this month, which you probably saw, in which he said, quote, "It might already be too late to fend off a recession by cutting rates. Dawdling now unnecessarily increases the risk." Is he wrong?
So,
Bears getting all horned up in there.
And we're well aware of the judgment. We're as I've said, we have to weigh the risk of going too soon against the risk of going too late. If we go too soon, we can, we had a lot of advice, to go ahead and cut after the 7 good months of last year. We didn't. We said we needed to see more. Then we saw some higher inflation. We've seen 1 quarter of good inflation, and we've seen the labor market move quite a bit.
He's got his arms outstretched right now. Just pull your cock out, Jerome.
Cool off anymore for us to get the inflation results that are related to the labor market. Not all inflation is, of course. So I think it's a difficult judgment to make, and what you see is the judgment of the committee is that that time is drawing near. That time could be in September, if the data support that.
And have the chances of a hard landing increased?
Whoa.
So I don't know whether they've increased. I think they're low. I think this is, you don't see.
Ooh, chances of a hard landing are low.
The economy is either overheating or sharply weakening. That's just not in the data right now. What's in the data right now is.
That's bullish as fuck what he just said.
Solid pace, a labor market that has cooled off, but nonetheless, unemployment is low. The data overall show a strong labor market. So that's really what you see. It's neither an overheating economy nor is it a sharply weakening economy. It's kind of what you would want to see, but of course, the job is never done. We're watching to see, which way the economy heads, and I think if we are to respond to weakness, we're certainly, well equipped to do that. But that's not what we're seeing. What we're seeing is strong economic activity and a good labor market and inflation coming down.
Bears getting all bared up inside the Discord right now. They want to roll this fucker right down to the hourly trigger.
In the minutes of the June meeting that came out a few weeks ago, there was a discussion about communications, and some Fed officials said maybe the Fed wasn't as clear enough about its reaction function. And when I talk to the commentators who bless you with their comments, they say that they really don't have a sense of what is going to judge, maybe not the first cut, but the pace of the cuts going forward. They don't have a good sense of that. Is there anything you can say, like, how will we judge that?
I think the reality is that forecasters, and this isn't just the Fed by any means, forecasters have been continually surprised by, for example, the strength of the economy last year. So I think we have to be pretty humble about giving forward guidance about this, that, and the other thing. We need to be pretty careful about that. And, you know, when you're saying you're going to be data-driven, of course, it's always what the data, how they affect the outlook and the balance of risks, but nobody has great vision deep into the future. In terms of a reaction function, that's a long time, you know, discussion that people have had forever. I think people have understood for a long time, actually, that we were very focused on bringing down inflation. Nobody was really confused about that. The data have, you know, again, you've seen significant improvement.
Well, we're actually in the soft landing right now.
On the data, really.
There's no way to avoid, though, the recession that follows.
Coming in, and markets are very, very responsive.
In every instance, we get a recession after the soft landing.
Jeff, for the last question.
Now, how long that period is between the soft landing and the next recession, you can't account for, too. I looked at it once. I looked at every soft and hard I've looked at every soft landing we've had.
There hasn't been a whole lot.
And the period in between, or what happens after the soft landing, we do get a recession guaranteed 100% of the time. But there's a window between the defined soft landing and that next recession.
Within the committee and what's happening with that?
It's not something that comes up at all in the FOMC. So more broadly, digital finance is an area that has really significant implications for payments generally, instant payments, and it's something that's going to really change the way it's going to make more efficient and hopefully safer and all those things the way payments are made around the world. And so we have people who are researching that and trying to keep up to speed because we play an important role in the payments sector, both as a convener and as an operator too. In terms of a CBDC, there's really nothing new going on. There's not much going on at all. We don't have the authority to issue a retail CBDC that's available to the public. We're not seeking that authority. So what we're doing is keeping up with developments there. Pretty much every major central bank in the world is at least doing that. Some of them are actually seriously looking at implementing a CBDC. We're really not. We're really just evaluating, the story and what's happening out there. I think it's work that we need to be doing which could be very beneficial down the road. But we don't have on a CBDC. We don't have any plan to. We would need to go to Congress, and we have no plan to do that. No one here has decided that we think it's a good idea yet. Thank you.
You guys want me? All right. I'm getting some questions here. So Jerome just wrapped up his presser. Be careful here into the close. Of course, sometimes when we end these pressers, we start to roll down. The interest goes away. You get still bullish, but less people, right? They wrap it up and they're out. I have some exposure long right now into the close. I'm not closing that. I've got calls for IWM. And I'm going to switch over to some SPOOS calls. Maybe I might even switch to tech or IWM for tomorrow. I'll take a peek at it later today and see here. It looks like we hit that 228.63, which is the expectation. If you follow Elliott Wave, that's the expectation for the top for IWM. I like the nice round number. Whenever we come into like two zeros and fives, you'll see either a roll down, a slam down off of it, or we break above and consolidate. You know the deal on zeros and fives. I've already explained it to you. Just be careful in here if you are or if you're bullish here into the close. As he leaves, there's less people in the market at that point. Just be conscious of it. What else? SPOOS, right? Or S&P, not SPOOS, excuse me. In the Discord, people are asking for like soft landings, hard landings, and the periods in between them. I have it charted out. I charted it out. Every soft landing we've had. I've done a show on this in the past. I'm going to do another one. I'll do a segment tomorrow. I'll do a segment showing you where the official soft landings have been and the official hard landings and the period in between them too. Like when do we get a soft landing? How long do they last? The period in between is very important. What's really fascinating about it is if we have a soft landing, There's like the soft landing, then there's a period in between it that's not soft or recessionary, and it's usually a bull market. But then whenever that next, like when we run into the next hiking cycle and we come into, hey, are we going to get a soft or a hard landing? It's always followed by a recession. Historically, always followed by a recessionary period. Every single time. S&P 500 rolling down right now. Whoop. We've got a cross of the hourly trigger coming up into the daily trigger. Hopefully we can get SPY down into this, right down into this 4 p.m. tag down there and grab some more calls for tomorrow to the upside. And I'm going to be looking for an extension into tomorrow, and that we break higher and maybe even take out all-time highs. Possible. If you are in our Discord, I did post in our Discord for everybody. You should read this post that I just put in there. This is from Goldman Sachs. A note on this FOMC decision. You want to read that closely. Please read that and consume that closely. That's the cleanest read you're going to get on this FOMC statement right now. For what's available, that is probably the best bet you're going to get out there for a take on this statement from today. What do you guys think about the statement today or the press conference? I was a little shocked there earlier. You could tell that he was primed for that question, right? Are we getting a fucking rate cut? And he went to a script, which I was shocked at. He didn't just wing it. But he went from the script that he was prepped for and then said, fuck it, I'm just going to talk. And I was like, holy shit. And I wasn't expecting any of that to take place. So the market, of course, reacting positively to that. Nick Timmeros, I'm going to look him up real quick and read what he had to say. Give me a quick second, because he came out and he was like, what the fuck or something. I got to read what he said. Because he went right to fucking Twitter. Let me see if I can find him really quick here. See what he came out and said. He posted this at 2:48 p.m. So he wrote. So you got to think about whatever he's doing at that moment in that chair. He's like, "Fuck this! I'm going to fire off a tweet." And he wrote, "The FOMC statement and Powell's prepared opening statement contained zero forward guidance." Then on the first question, Powell turned to a tab in his materials and began to read a prepared answer about September. Quote, "A reduction in policy rate could be on the table as soon as the next meeting in September. We're getting closer to the point at which it will be appropriate to reduce our policy rate, but we're not quite at that point." A couple of other changes on the scripted opening statement. The labor market is strong, but not overheated. In June, it was relatively tight, but not overheated. The labor market has cooled in place of tightness has eased. So you might want to check out Timmeros. And he's firing off all kinds of shit on Twitter over the past hour, so you want to check him out for sure. IWM rolling down off that top tick at 228.63. SPOO's rolling off on its PT1 to the downside. I'm going to tag. I need to take a look at fucking NVIDIA too here. So here's 4 p.m. for you. I want to thank you for joining us today. In this stream. I hope that you can come back and join us again if you're new to the show. We stream Monday through Friday, 9:30 until 4. I try to be here during all of that time, but of course that can't physically fucking happen. But typically we are streaming. We have an active community in Twitch chat, YouTube chat, and in our Discord. You can always check us out at tradethetrigger.com. Chats are open in our streams, so if you want to come in here and fuck around or find out where we are, if you're going to open or close a position. What else do I have to say to you guys out there? I want to say thank you to all of our guests from this morning. Thank you to the mods and admins in all of our channels and all of our streams and inside the Discord for helping out traders throughout the day. What else I got to say to you guys? I think that's it for now. We've got some earnings releases after the bell, of course. So we'll stick around for those if they give us those releases at 4:30. We'll also have the news squawker talking in the background while that's going on. Traders also are pricing in 70 BPS of Fed cuts this year, up from 64 BPS earlier. So the Fed's future fund rate, again, making another change as the presser started. Jackson's Hole, baby. Thanks. Hey, David, take it easy, brother. Just get out of here, man. It's going to be late as fuck where you are. Just get out of here, dude. Let's come on the show tomorrow. We'll chat tomorrow on tomorrow's show. We're going to have David AMS on the show tomorrow. So if any of you ever want big questions for him, want him to explain how we trade, you can ask him tomorrow on the show. I'm going to take a quick break here. It's 3:26. I'm going to take a quick break from the show. I'll be back with you guys for the earnings release at 4 p.m. I'll be back at like 3:50, 3:55. I'm also looking to buy some calls for tomorrow on S&P 500. I was thinking about tech possibly instead, too, so we'll take a peek at tech. See if we can grab some calls for tomorrow. It's only fucking Wednesday. It feels like a Friday. Past like 5 sessions have been fucking brutal. Fucking brutal. Sorry for saying the F word, dropping F-bombs. I was trying not to drop F-bombs today, but we did a few of them.
So starting on the main wires now, Iran's supreme leader orders a retaliatory attack on Israel.
Yeah, there's something coming across the AP right now saying that Iran is going to attack Israel. Dude, Iran does not have an expeditionary force. They will fucking wipe. They will blank Iran off the fucking map. You want a good opportunity to wipe out Iran? There it is. Like fucking... No better time for an oil rally, baby. Yeah, I need the swear jar, don't I? I should just keep cash in the office and put like $100 bills in it every time I swear. That would stop me from swearing, wouldn't it?
As Iran's supreme leader has issued an order for Iran to strike Israel directly in retaliation for the killing in Tehran of Hamas's leader. So in an emergency meeting in Iran Security Council this morning, shortly after Iran announced Hanai had been killed.
Yeah, just donate the money, right? That way I would stop swearing. That would actually work.
The Revolutionary Guard, who have asked not to be named, did say that Iran's leader ordered an attack on Israel for the killing.
All right, I'm going to get up. I'm going to take a quick break. I'll be right back with you guys. I'll be back at like 3:50, 3:55, something like that. Hope you all had a great day today. Dude, what was, did anybody know what the top on 448 was? What 448s for today we're going for at the top of the peak up here at PT1? Someone was saying they were fucking stupid. They were like $5 or $10 or something. I think I've slowed down in the swearing, haven't I? I used to swear like a sailor. Not as bad as I used to swear on stream. It used to be really bad. It was all that old army in me, dude. I used to never be a swearer either. That was all taught from the military. The military taught me how to swear. The military didn't teach me how to drink, though. My father-in-law taught me how to drink. But he was military, too. I was never a drinker. Went into the army, wasn't a drinker. I drink beer and stuff, but as soon as I came home the first time, He taught me how to drink. They were 650. They were 650 at one point. Fuck. They were 22 cents on the bottom bar yesterday. They floated between 22 and 32 into the close yesterday. Jeez. I don't even want to think what those would have been worth if I'd held them. I don't even know what is 22 cents by 100 contracts going to $6.50. I don't even know what that math is. That would be stupid. They were bouncing around that 278 mark. They were like slammed down at 256, 265, and they ripped back up, and they closed. They went up there twice, that 278 mark. 2 times. I put the first order and they didn't close. Then they closed them when they hit the second time, and I got the fill. I didn't get the fill in the first close. I use limit and market. If I chase, I use market. If I can't get a fill, I will flip to a market order for fills. I was on Tasty in particular. I found myself chasing a lot, and I was going through like bouts of not getting fills, so I started switching to a market order on Tasty. Supposedly, which one is it? There's another platform that are giving good fills where you don't have to chase on. Joe Donut trades. Ask Joe Donut about what he uses. What platform he's using. He was saying he's having good success with not forced chasing on limit orders. Schwab, yeah. Is it Schwab that does that? Gets you good fills and doesn't pull the scam fucking order flow scams on you. Tasty to me is getting worse. They've gotten progressively worse over the last year. I'm not a fan of Tasty right now. And I ducked out of an argument on it on Twitter. I was going to show my account on Twitter of it. I recorded my account of it happening, and I got in a fight with the guys from Tasty. And I was like, it's better that I don't. I don't want to show my shit on. It was like an invitation to get fucking. It was an invitation to get into an argument that I don't want to have publicly. For just exposure. But I'm not a fan of Tasty right now at all. I'm still with them too, and I'm very unhappy with Tasty's order flow. I think in general, not like anyone's not a prime bank right now. I think it's worse than it's ever been. All right, I'll be back with you guys in just a minute. I gotta get up and take a walk. I know, Roland. I'm taking a break, dude. I gotta get the fuck out of the chair. I'll be back with you guys in just a minute here. And I've got some money on IWN into M into this close right now. Small amount, just not big, but they're all at fucking zero right now. At a bunch of zero dates.
And just making you aware, in wake of that recent Jibs call headline that we did bring to you from the New York Times, noting that Iran's supreme leader issued an order for Iran to strike Israel directly, have just seen a bit of risk-off action here, with gold catching a bid, as has WTI and Brent, both to fresh session highs, as well as looking at Haven FX, the Swissy and yen both did catch a bid. Just making you aware here, just seen a bit of risk off in wake of that Jibs call headline via New York Times, citing sources. Gold printing a fresh session high of roughly 2445 on my screen, and WTI and Brent continue to extend on their already bid price action. I'm just seeing some comments here from Goldman Sachs on energy. It does note they assess downside risk, their long-run oil demand, and two, their $80 a barrel long-run Brent price assumption from the imminent LNG supply wave.
Amazon about to rip some faces off right now. Look at that. Amazon's about to do a big old breakout down below. You see that Amazon down there? Woof. NVDA, baby. Where's NVDA here? NVDA. Are you going to break out NVDA or what? Are you going to do the thing or what, NVDA? Fuck, try to tell me the fucking AI trade is over my ass. It's over, bro. It's over. The AI trade, fucking like all these fucking banks are like, trade is dead. Trade's not dead. Fucking, you're buying that shit. Dead, bro. I'm like, yeah, right. You just wanted a cheaper fucking entry is what you wanted. That's all you fucking wanted. Look at it. It's fucking ripping faces right now. Amazon ripping faces. SPX trying to break out right now above. I want to show you guys this. We drew this earlier. Here's SPX. Let's take a trip down below. So look at that SPX. We drew this out for you earlier where we'd come in and spy, tag it, come back down, and then woof. Now we're trying to get above and trade 5,600 is the next trade here. So I want you to see that right there, right? Put it on a 1 hour basis. Put it on a, I don't know, fucking 1 minute basis. So now we're trying to party time to the upside on SPOOs. We tagged the first gap right here, right? And now they're again trying to, we've got the hourly trigger coming up forcefully. You got the high, the new high, and then we should get one more push. I drew it like this, but it should be more like this, and then down and then up. And you'll get the high, and then you'll get the next high. IWM not recovering, right? Let's take a look at all of these together. I didn't put Qs up today. So they get the tweezer reversal on IWM to the downside, not recovering like Qs is or like S&P 500 is. We had the high target up here. You should already know about this if you get the briefs, or if you're a pro trader. I already had this charted out for you, the 228 and the 230 as the Elliott wave targets to the upside. We basically slammed right into the top one here in IWM. DIA has the same kind of business going on up here. This yellow box is the zone for selling DIA. They're coming back down again. So I'll get you guys some updated, if you're a pro trader, I'll have updated DIA and IWM projections, 4-hour projections for you on both of those indexes tonight. I'll do the Elliott wave on 4-hour for you so you can see where we plotted this out weeks ago. They got it. So I'll plot this out for you again for the next I don't know how to call it, well, how to say that, but the next big trade on those two indexes, I should say. VIX 9-day getting murdered to the downside, of course. Still hasn't come down to this zone down here. We'll see if it bleeds some more down to the downside of the VIX 9-day. HYGG recovering, trying to break out. What do we call this here? We talked about this earlier. Joe Donut and I talked about this, didn't we? What did we say earlier? We said something that looks like a bear flag. Traditional charting, right? But we said this earlier. We said you do the traditional charting, then we make a T-shirt with the hidden hand of the marketplace. And there's the hourly trigger, the hidden hand of the marketplace, pushing price up. Hopefully we'll have a big old squeeze here overnight. We'll squeeze HYG, squeeze the market.
Sign up today and
TNX getting murdered down here to the downside. Hopefully we can get TNX down to 3.7. I don't know if that's going to happen now, but with today's release, Tesla has this big zone right here. We're going to talk about Tesla really quick. We got 10 minutes left. I want to talk to you about we did some Tesla talk earlier today. I was hoping for a breakdown here We traded above the daily trigger. That's constructive. If price does not go below the monthly trigger, it's bullish. I'm sure there are traders out there that see this right here and their first thought, you can even do it like this if you want. It doesn't really matter.
On close imbalance now. The S&P 500 seeing 1.1 billion to the buy side. So the Nasdaq 100 seeing 715 million to the buy side.
But note this action here. You want to see this breakout and touch back.
And Mag 7 stocks are seeing at 55 to the buy side.
For me to get bulled up here. This is not bullish to me. And I don't want to get caught getting all bulled up on Tesla right now. I'm not interested in buying Tesla because they do that to me down there. And then that's the real dip buy lower. So Tesla, I have no interest. If any of these Tesla bulls are all bulled up, they can go fuck themselves as far as I'm concerned. Because I already know the deal. They run it right back down here, and we're actually up there. Now, if we do get the squeeze up and we catch the new high, I would then be interested. If we get this and then a quick pullback, I'd be interested in buying that right there. But I have no interest right now in Tesla. Personally, I don't. I'm all like Tesla to me. I'll tell you why too. I'm going to show you why right here. Something here that's bothering me is we're trading higher and we're losing velocity. You see that? We're still losing velocity. So I personally don't like trading that. I always like buying the lows on daily velocity. So I'm real fearful here of a fake bull run. And what they end up doing is they drop it down here and you're trapped, and then we run underneath and all that kind of shit. So I have no time for Tesla bulls right now. I really don't. It could go there, but I'm just waiting for the trap. Trap them all inside, hem them all in. We go down, quick break, and your real trade is somewhere down here. So that's what I'm waiting for. Now, I could be wrong here. We break out, we go higher. Tesla bulls are right. I can go fuck myself, but I will jump in with them at that point over here. So for right now, no trade for me on Tesla. I got no love for it. I've already been fucked on Tesla too many times doing that, so I'm not doing it. That's my rule. Like, I need negative daily velocity to even think about Tesla. So if you are wondering if you're a Tesla bull and you're like, why doesn't he talk about Tesla right now? That's why. I got no interest. Netflix hanging out, doing its thing. What else we got here? Amazon busting it up, taking it up to the daily trigger. Disney, probably a good time to take some money off here for a pullback. We had a buy zone down below. We're getting kind of long in the tooth here. Danger in here. If you're looking to get long on Disney, again, I would say to you the usual thing, right? Let the pros do this shit, and you're jumping in somewhere in here again for the rest of that ride. So you're jumping in somewhere up in here for the next trip on Disney. What else? TLT, monster moves, right? TLT with a dip buy down below. Finally got the breakout. Gorgeous fucking trade to the upside right there. They're slamming into PT1 right now, but price target of $95. We also have, with pullbacks, you'd get the 95, the 97, then the hallelujah trade up here to the monthly trigger. I'll tell you, if anything in the market right now, if there's anything in the market that I probably would tell you that I love the most, it's likely TLT. I should own it, and I don't. And I should have bought that rather than NVDA, in my opinion. I should have bought some leaps on that fucking thing. Far out leaps on right here. I should have bought leaps. So if there's any pullback in here, if we get at any point like a pullback down here, I would love to own TLT. Love to. This is like a 60, to me, this would be like my version of a 60-40 portfolio, was just owned fucking 30 years through TLT. What else? Google's holding up kind of okay. XLF being rotated out. They have a top up here. They did get the high tick, though, which is good to see on XLF. And then we've got NVDA. If you want to get out here, I understand. It's a beautiful fucking trade in here. gorgeous trade on NVDA. CrowdStrike, we talked about that earlier. And now we're going to really quickly, as we come into this close here, we're going to talk about what is printing or what is coming out, what's coming out for reports after the bell. All right. After the bell, we're getting some reports here. Wednesday, we got Meta, ARM, Carvana. What else do we get after the bell today? We get Lamb, Western Digital, PayPal, or excuse me, Paycom. What else do we get here?
And just making you aware, in 10 minutes' time,
Almar and Aganoc, I forget how to pronounce it, but it's Agnico Eagle or something like that.
On the scoreboard, just goes through some of the main ones we are looking out for and give a brief rundown for them. At the top of the hour, alongside the closing bell, we are expecting earnings from Qualcomm and ARM Holdings. Qualcomm is expecting EPS of $2.25 and a revenue of $9.22 billion. Meanwhile, ARM Holdings expects a EPS of 34 cents and a revenue of $9 billion. 5 past the hour, expecting earnings from Meta Platforms. Obviously,
I'm bullish Meta into the close, by the way, if you want to know.
EPS of 4.70.
Before we close, per cash market close, I'm bullish.
Bullish
Meta.
Expecting Lam Research and eBay.
Anyone else you want to cover really quick? Maybe give you something quick before we close the day out. Ask me in the chat, and I'll tell you who I'm bullish on. Oh, you've been scaling into TLT? Nice. TLT is probably my favorite security right now in the stock market. I know. They're gonna cut my fucking. They're gonna cut my fucking internet again, right? Try to report me. Every time I talk Tesla negative, they come in and they shut the stream down. I shit you not. Literally, they report me.
Except the latest market imbalance, and that is roughly $2 billion to sell. That's $2 billion to sell.
I got some bourbon going over here. Here we go, right here.
So keep in mind, we're just under 3 minutes away now to the cash equity close for the US, after which we get earnings season continuing. Another Mag 7 stock printing today. That's Meta printing their Q2 2024 earnings. It's at 5 minutes past the top of the hour. So their estimated EPS is $4.75 with an estimated revenue of $38.34 billion.
So you've got, hold on 1 second here, guys. Hold on. So who do we have for earnings today? Let's take a peek. Hold on 1 second here. I got to open that earnings chart back up again. ENVX. So Meta, I'm bullish on their close and on their ER. ENVX has a, I'm bullish. Bullish. I'm bullish here. ENVX, bullish on their close. Bullish on their close. ENVX. What else is reporting? ARM. Oh, you guys are going to talk about ARM here and their weekly. ARM Holdings should print higher but sell. Not build up on ARM. Something like this. You might get like an up move, but still down. I don't think ARM comes back for the end of the year. It's not that I don't like ARM, but I think we consolidate down. I would be very careful of ARM, even if they have a good ER like we squeeze up, right? I think you might squeeze up and trade that 160, but I still think it's a sell. It's just another opportunity to exit this trade. I would be back in if I were an ARM holder, even if I'm wrong here. I want you to know something. Typically, inside of the late stage bull cycles, right? Late stage bull runs, it's hard to call individual tickers like ARM. It's extremely difficult. The point it's when we're early stage bull runs, it's difficult to call tickers that are spec growth, but it gets easier as the bull run progresses. Like October, it's hard. December, like this October of last year, it's difficult. When you get to December, it started to get a little bit easier to see what to run. And then as we exit, not exit, but come to the near close. Oh shit! Hold on, I got to get some calls here. Hold on for me. Well, they got these fuckers juiced too, don't they? All right, sweet, I'm long. I'll tell you guys what I'm long inside the chat. We made so much money, I don't give a fuck at this point. So what I want to tell you is this, but going back to that conversation, as we come into late stage bull cycles, you will see a lot of these same spec growths that have run their course. And I don't mean the the heavy hitters like NVDA, like the core heavy hitters. I mean like the ones that are associated. It's hard to foresee their future running the same as like an NVDA or a QQQ. So the only not recommendation, but the only thing I would say to you is that maybe ARM does go up into the end of the year, and you're like, hey, Cap, you were wrong, but another ARM type company doesn't. And that kind of risk you don't need in your life. You just don't need it. You just don't need to be, you don't need that risk. And what the worst part is that they continue on doing this. You'll get like CNBC. We got ARM blasting off right now to their daily trigger. What you end up doing is you get CNBC will be unloading this shit on you too. As even I mean, they get a good earnings, but do they continue higher? Do they get all-time highs? Do they like there are trapped buyers in here that want out. That they want out. They want out of this fucking trade. And they're gonna sell into strength whenever they can. And the worst part is that this gets really shitty as you head into the really late stages of a bull run, and people get really fucked up on these trades, and they go on to the internet and they fucking cry for years, and then they're stuck for years, and then when it comes back, they just want out. You don't want to become that bag holder, late stage bull run. Please, it washes people out of the market permanently. When it happens to them. Every time we have a fucking bull run, CNBC is one of the worst fucking perpetrators of that shit. I can't tell you how many times they come out in like December and fucking February, and they're like telling these fucking bulls that their ticker's gonna stay with the rest of the run up, and instead they just get fucking sold into for like a year and a half. Just like selling into them while the rest of the market's just going, woo, I'm in the Qs, whoa, I'm in Apple or fucking Amazon, and we're mooning and we're mooning and we're mooning and we're mooning. So please, if you're young out there, believe me on that, please. Please believe me on that. It doesn't matter if it's not ARM. It's just that they consolidate the end bull stage to the upside. Why be wrong? There's like moments in the market where all spec growth is going up, and there's moments in the market when it all is not going up, even in a bull market.
Bell. And as a reminder, alongside that, we're going to look out for earnings from Qualcomm and ARM Holdings. Thereafter, we're going to look out for earnings from Meta, who will, of course, be the focus.
Yeah, everybody wants Meta to burn, right?
Thereafter, we'll go on to the other equity earnings.
Yeah, everybody wants to see Meta go into the shitter, don't they? I think it's going up. I'm bullish on it. Let's see what happens here. We'll leave Meta up next. I'm bullish Meta here. They're selling off at the moment they were selling off ARM. I'm telling you guys, please believe me in this. Please. If your spec growth, and spec growth is not NVIDIA. Oh, fuck yeah, baby, Meta!
I'm just seeing earnings here from Qualcomm. They do report revenue of 9.39 billion,
Meta now.
above
EPS
the expected 9.22 billion. Adjusted EPS comes in at $2.33, also above the expected.
Their revenue a beat at $39 billion. On estimates of $38.34 billion. And
Meta!
33.
Yeah, baby! Holy shit, Spoos!
$7 billion. The family of Apple.
Go Spoos!
$38.72 billion and estimates of $37.6 billion. Operating income a beat at $14.85 billion on estimates of.
I'm selling SPY right now. Selling SPY right now. Holy fuck shits! We just made bank, baby! I'm selling my SPY calls right now. Oh shit! Take the money and run. Fuck it. Taking the money and running. Meta cranking 510. That was a 5-minute trade. Yeah, baby. Oh yeah, Meta. Fucking Meta. Fucking Meta, baby. Oh yeah. Took that big old green fucking bar right there. Oh God, yes. Should I buy SPY calls again, maybe? I might, hold on a second. I might buy in again.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99.
Let's see if this cools off a minute here.
Service.
See if we can get this to cool off for a minute here. It's a fucking slot machine, you're right. Cha-ching money. Cha-ching money. Cha-ching money. Cha-ching money. NVIDIA trying to break out too? Oh, fuck yeah, NVDA, baby. NVDA trading 120 right now, $119. Fuck me, dude. We're making bank. Come on back down. Come on back down. Give me another dip buy down here. Another dip buy. Come on, SPY. Yeah, they're at 51 cents right now. They're not bringing them back down to 30, are they? What time is it right now? We got 7 more minutes. We got 7 more minutes. That was insane. Poke the juice box, baby! I fucking love you, Spicy McHaggis. Discord was took that trade too. They're not giving me a buy-in right now. I'm not buying 57 cents or 51. I want to buy like 30. No trade for me right now. Cheers to all of you out there that stuck around this week. Cheers to every last one of you fucks out there. Any of you out there that had losers this week like me and stuck around to goddamn win? Woo! Woohoo! Cheers to all of you out there. Cheers to everyone. Yeah, cheers to all of you out there, especially you guys in the Discord. Love you fucking guys. It's only Wednesday. No, it feels like fucking Friday, doesn't it? Feels like fucking Friday. Tell me, if you're on YouTube and Twitch, do you guys feel like it's Friday or no? It feels like fucking Friday, doesn't it? I appreciate that, Spicy Mahaggis. Tell me it doesn't feel like Friday out there to you. Let's see what they're saying in YouTube and Twitch. Yeah, I feel like I'm 89 years old. I do too. I could literally, if I wasn't a streamer, or if I wasn't a streamer, dudes, I would be done today. I'd be like, I'm out of here. Fuck you, I'm out. Bye. Long vacation. Taking the weekend. Honestly, I'd be done. This would be it. I've had enough. You won, market. Frankie for saying it is Friday. I would totally be done. I'd be done. Definitely. Yeah, right, David? Friday vibes. Get me the fuck out of here. Too much for me. I've had enough. It started last week too, right? Damien, that shit started last week, man. Like it wasn't even this week. All that shit started, bro, like last week, brother. Fuck. That was great. That was fucking outstanding. See if we can get another trade here. It's 4:11. We got 4 more minutes. See if we can pump one more. Yeah, those calls are at 53 cents right now. They need to come the fuck back down into the 20s or 30s. So I traded earlier 557 Cs for tomorrow. And I'm looking at them again right now, but they're way overpriced. The bid on them it's fucking 53 cents. They're juicing them right now. They need to be at like 36 cents or lower. I'd rather have like 26 cents. They're trading 50 right now, so there's a premium kick built into this fucking... God damn it. 4:12, we got 3 more minutes. Meta taking the money and running on that trade. Trading 489. They came into some supply, Jimmy Berry was saying over here. They had some supply right around here. Let's see if it holds its daily trigger. It'll be a nice implication for tomorrow. What's the other one? ENVX. How did they do? What was the other one that was ENVX? Did they trade well or no? Oh, yeah. NVX, baby. Up after hours, trading 1570 right now. ENVX to the moon, baby. Who was that? Who was asking about ENVX earlier? Who was asking about ENVX in the Discord? Who was asking about ENVX before the fucking bell? Congratulations if you belong to that ER. If you're an ENVX bull, congrats. Whoever the fuck's asked about ENVX for the bell, congratulations. Oh, you need 18 bucks? You'll get there. It ain't done. It ain't done, I promise you. It ain't done. All right. I shouldn't say I promise you, but Binky hates when I say that on stream. That shit ain't done, bro. Binky's gonna ban this video. Binky's like, every time you say that shit on the streams, I gotta fucking block the video. Guaranteed, bro. Guaranteed. It ain't done going up, I promise you. Hey, who joined us today? Hey, Kingfish. What's going on, brother? Oh shit! I didn't get a buy-in. I didn't catch the buy. I missed the buy. So I've got no position. It came down to 43 cents. I was talking to somebody in the Discord. I didn't get a chance to buy the close. My bad. I didn't get a chance to buy that bell just then. I missed the bell. If you're long, congratulations. I missed the bell. That sucks. All right, fuck it. That's enough winning for today. We're done with the winning. I'm due for a loss anyways now, right? Oh, who's this guy? At Fritz? Oh, he's new too? Oh, there's people jumping in. So there's people joining us right now? God damn. Trade someone had a call too. He had a fucking call. Oh yeah. You need $18. All right, I'll see all of you guys tomorrow at 9:30. Whether it's a good market or a bad market, whether we win or lose around here, we show up every fucking day, right? If you're a bear, if you're a seller and you got run over today, any shit talking I do, please don't take it to heart. I do love you if you're a bear. I don't hate bears. In real life, I don't. So if you got run over at all today, I do feel for you. I hope that you can regain whatever losses that you have. Just one more thing for you to be all the shit talking aside, and smack talk and all that shit. If you are a seller and you're upside down right now, keep showing up every day, and we'll try to get your money back for you, okay? So I don't want you to lose either. I like bears just like I like bulls, even though I fucking shit talk. I do love all of you guys too. So if you're a bear out there and you're watching the show right now and you're pissed off, come back again tomorrow, please. Show up every day, okay? To the market. Whether, I want you guys to know something like, I think I posted about it on FinTwit last night. Like, I've been going like fucking red and then green and then red. Not even green. Red, flat, red, flat, red, flat. If you're encountering that at this moment at all, some of you probably not, but if there's a few out there that are, stick with what you do, please. Stick with what you do. Don't change your plan. Just if you have take an L, if your system works, stick with it, please. You got me? Sometimes you can overtrade, but other times you don't take the next trade and you see that it would have won, but then you take the next trade and that becomes a loser, right? And then you go down the fucking burn your account down road. Does that make sense to you guys at all? Let me see if I can draw that out really quick for you. Real simple. How do I do this? That should be a winner, right? Take the trade. Yahoo, making money.
So following the close of the
that should be a winner, right?
It's just going to give you guys a
Yahoo
quick wrap of the session today. So Federal Reserve Chair Powell
boom, blast down.
Extend a stock rally that began with a surge in key tech companies, propelling the S&P 500 to its highest.
Oh fuck, I lost. Next trade.
Strong comeback. The S&P 500
fuck, I lost.
1.5%.
Right.
NVDA surged 13%.
What happens to a trader? They go, I'm going to change my system.
World's most valuable company added.
I'm not going to stop trading.
$$1 billion in value.
Then they watch this happen, right?
Set several times in the previous months.
Bam.
Treasury yields fell across the curve and the dollar weakened against developed market peers.
They fucked up their system. They come back in, miss these three trades. They get back in. Boom, one goes down, right?
The FOMC decided to keep.
Now you're like a 3-time fucking loser.
5.25 to 5.5.
Instead of taking the 5 wins. Does that make sense?
Policymakers also made several changes to the language in a statement issued following their 2-day meeting. Notably, the committee shifted to stating that it is attentive to the risks of both sides.
Take it easy, Jimmy Berry.
As opposed to the previous.
I'll see all of you guys tomorrow, 9:30.
Risks.
Have a great night.